We get going? All right. I declare open this hearing of the Senate Economic Legislation Committee into the 2025-26 additional budget estimates. I begin by acknowledging the traditional custodians on the land on which we meet today and pay my respects to their elders past and present. I extend that respect to Aboriginal and Torres Strait Islander peoples here today. The committee is due to report to the Senate on Tuesday, 31st of March 2026. Questions on notice. The committee has set 20th of February 2026 as the date by which senators are to submit written questions on notice, and 10 April 2026 as the date for the return of answers to questions taken on notice for today's proceedings. The committee's proceedings today will begin with the Reserve Bank of Australia. The committee will be conducting today's hearings via video teleconference and in person. Under Standing Order 26, the committee must take all evidence in public session. This includes answers to questions on notice. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It is also a contempt to give false or misleading evidence. The Senate has endorsed the following test of relevance of questions at estimates hearings. Any questions going to the operations or financial positions of the departments and agencies which are seeking funds in estimates are relevant questions for the purpose of estimates hearings. I remind officers that the Senate has resolved that there are no areas in connection with the expenditure of public funds where any person has a discretion to withhold details or explanations from the Parliament or its committees unless the Parliament has expressly provided otherwise. The Senate has resolved also that an officer of a department of the Commonwealth shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution does not preclude questions asking for explanations of policy or factual questions about when and how policies were adopted. Witnesses are reminded of the Senate order specifying the process by which a claim of public interest immunity should be raised. I incorporate the public immunity statement into the Hansard. I remind senators of their obligations under the Behaviour Code for Australian parliamentarians to treat witnesses with dignity, courtesy, fairness and respect. An officer called to answer a question for the first time should state their full name and the capacity in which they appear. I remind committee members and witnesses who are appearing via video conference and who are not speaking to mute their microphones. The committee welcomes the Reserve Bank of Australia and its representatives, Governor Ms Michelle Bullock and Assistant Governor Dr Christopher Kent. Would you like to make an opening statement, Ms Bullock?
No.
No. Okay, so we will go straight to questions then. I will kick off quickly. We met not very long ago, December. Wondered if perhaps we could kick off with, I guess, some of the sort of key points around what has really changed since the last time we spoke in December.
So a few things have changed. You'll recall when we last spoke in September, we'd highlighted that we'd had a run of news that was really all suggesting that inflation risks on the upside were increasing, and we were seeing demand come in a bit stronger than expected. We were seeing the labour market holding up a bit stronger than expected. Inflation numbers were coming in a bit higher than expected. The world economy was not was actually recovered a lot more than people thought it would. There was a lot of pessimism earlier in the year about that. So all of these things were adding to inflationary pressures, if you like. And as you will see, news from December to now has just reinforced all of that. And the board took the view at its meeting last week that inflation running at something with a 3 in front of it was not acceptable. It's not in the range, and it's not forecast to get back into the range for another couple of years. And so the appropriate response to these changing circumstances was to raise the interest rate.
And can you talk a bit about private demand and how that has changed in your observation since we last spoke? We did talk that. I remember asking a little bit about that last time. And what you've seen then and how what's happened since then.
Yes, so private demand did come in stronger than expected. It's both consumption and investment. Now, some of that investment is in lumpy things like data centres, for example, which is one people have highlighted. It's lumpy. It's also quite import intense. So it doesn't necessarily add to pressure on domestic production. But nevertheless, it was indicative, along with the consumption indicators, that people were getting out and consuming. It's a little bit difficult because seasonal patterns have changed a bit, particularly with the advent of Black Friday sales and those sorts of things. So there is a sense in which we've got to be a little bit careful because some of it's bringing consumption forward to take advantage of those sorts of sales. So we're alert to that. Mm-hmm. But notwithstanding that, we did see more strength in consumption than we were expecting. And that's reflecting really the recovery in real incomes over the last year. I think the real disposable household incomes have been rising, and that's being reflected in consumption. So consumption, investment have been surprised us on the upside, and we think that's partly what's driving inflation. The other point I would make is that the board has reassessed and the staff have reassessed where we think we are in terms of balancing the economy. We thought we were close to balance between supply and demand. We've reassessed that, and you will see in our recent statement on monetary policy, we now assess that actually we are in a situation of excess demand and the labour market remains tight, and these two things are keeping pressure on inflation.
Mm-hmm. So just in terms of the kind of investment comments you made then, things can be a bit lumpy. What would you say about the energy transition in terms of the recent pick-up in private investment outside of data centres?
Well, that's also partly, I think, being reflected in the investment figures. Again, that is also lumpy and it's also import intensive. Mm-hmm. But that's certainly part of the explanation.
Yeah. And maybe just very quickly, just a couple of comments from you about the ever-present geopolitical instability and political uncertainty. I guess you said that, and I've heard this commentary already, that the global outlook was better than what was anticipated. What are you seeing now in terms of the impact on the Australian economy? And perhaps maybe if you could also make a comment, independent of tariffs, around some of the risks to the Chinese economy, and also any thoughts around the recent outcome of the Japanese election.
Oh, okay.
Sorry. And then that will be my last question.
What I'm going to do is I'm going to talk a little bit about it, and then I'm going to pass to Chris Kent to talk a little bit about financial markets, because I think that's an important part of the story. Yes, geopolitical risks are heightened. When you go back to sort of May, I guess, last year, there was a lot of pessimism about the world economy. Everyone was marking down their forecasts for the world economy. And that was based on the fact that there were massive tariffs being threatened. There was concerns that not only would the US impose tariffs, but also other countries would retaliate with their own tariffs. Everyone revised down their forecasts for growth, and there was concerns that the global trading system basically would freeze up. None of that ended up happening, and in fact, if you look now at everyone's forecast, they're not only revised back up, but they're above where they were prior to being revised down. And I think a couple of things have happened. First of all, that the tariffs haven't turned out to be as bad as everyone thought they would be. They are certainly higher. The US tariffs are certainly higher than they were prior to the April announcements. But the effective tariff rate is actually a little bit lower than that because there's lots of exemptions. So that's partly it. The second thing is that the global trading system has actually responded pretty quickly and effectively. Chinese exports to the US are down, but they've increased in other areas, and in particular the AI boom has really driven great exports for the Asian countries, East Asian countries. I'm thinking of Korea and Taiwan in particular, and that's driven really strong growth there, so that's been really helpful for us. So that's that. However, there is this constant uncertainty and geopolitical sitting there, and I think where you might think that might start to bite is the financial markets. So I'm going to let Chris say a few things about that.
Sure. So I think that's right, and we've seen from time to time when geopolitical tensions of one sort or another have sort of spiked, that you have seen some response of financial markets. I think overall, though, that's not been that enduring, partly because threats, for example, of the US taking over Greenland have been stepped back. Threats of additional tariffs from the US on Europe because of that dispute over Greenland have been pulled back. So markets have been disrupted for a time but then pulled back, partly because the geopolitical tensions have eased. I think the thing that's surprising in some ways, though, but a reflection of what the Governor was saying in terms of the global economy has been better, is financial markets valuations have been remained quite elevated. So equity prices, for example. And generally, people aren't asking when they're investing for high returns in terms of what another way of saying that is that they're happy with pretty low returns for the risk that they might be taking. Having said that, there are some effects longer term. We're seeing term premia, so when governments borrow at very long term, whether it's in Japan or in the US particularly, they're paying a little bit of a premium that they weren't paying in the past, and that's because of concerns about the sustainability of very large deficits and debt. And that comes round to the Japanese election. There has been concern that that's going to push up, that's going to be a bit stimulatory, which will be inflationary, and pushing up the cost of them borrowing. But all in all, financial markets sort of taking it in their stride, and financial conditions are quite favourable, including for Australian companies and Australian banks raising funding offshore.
Yeah. Great. Thank you so much. I will pass to Senator Hume.
Thank you. Just on that issue on global volatility, obviously, if one of your measures for global volatility is the VIX index, it does seem to have come back down since the beginning of the year. That's right. So, which would suggest then that domestic factors are more at play in decisions that the board are making now than international factors?
I think that's probably fair to say at the moment. The focus for the board has been on domestic inflation. And in previous, through the second half of last year, increasingly from September on, not only us but the markets were starting to focus on the domestic factors which were suggesting inflationary pressures were rising, and that happened progressively. It didn't happen all of a sudden. It had been happening progressively since September as more and more data became available. Not just us, we were changing our view, but the market was also changing its view. So I think that's important to...
I think that's right, but global developments have had an effect on our domestic financial conditions. As I just suggested, equity prices relatively elevated, the cost of borrowing, including issuing bonds offshore by banks in Australia, for example, and large Australian companies, is pretty low. Funding's readily available. So that means financial conditions from the global side of things are easier than they otherwise might be.
Okay, that's good. Thank you. I have no intention of prosecuting any of the discussions that obviously you appeared before the House Economics Committee last week, and we don't want to make you repeat yourselves. But I did notice in your press conference following the most recent rise that you've responded, Governor, to a question on 4 occasions by saying that you don't comment on fiscal policy and that fiscal policy is not your business and that we work with what we've got. I perfectly understand that, but I want to just unpack that a little bit. Is that right then to interpret this as the RBA having a general policy of not commenting on fiscal policy?
I don't believe that our job is to tell the government or the parliament what to do with fiscal policy. That is a matter... Fiscal policy, as I've said on a number of occasions, is about providing goods and services and infrastructure for the Australian economy. That is the purview of the Parliament and the government. It is not the Reserve Bank's role to comment on what governments and parliaments should be doing, where they should be spending their money.
I understand exactly the position you're coming from. I suppose... however, it is also fair to say that fiscal policy can be a driver of inflation, can have a significant impact on inflation, even if you don't comment about it.
It can if, as I said at the House of Representatives last week, it is part of aggregate demand. And if you're in a situation like we are at the moment where we have excess demand, private and public are both part of demand.
Yes.
So, yes, mathematically it is a fact that that is the case.
So I just want to be very clear on this. As a general rule, the RBA does not comment on fiscal policy, but it is wrong to assume that just because the RBA hasn't mentioned fiscal policy or doesn't comment on fiscal policy, that it didn't have an effect on your decision, because it does contribute to aggregate demand, as you say, which is something that the RBA bases its decisions on.
If you're talking about our most recent decision was based on the fact that aggregate demand is, we think, in excess of the ability of the economy to supply those goods and services. Both public and private contribute to that, but what I would say is that if you look at the difference between our forecasts in November and at where we had inflation coming back into the band, and you look at our forecast now where inflation isn't, the key difference there is not fiscal policy. It's pretty much the same as it was in November. The key difference is private demand.
Yes. Okay. I hear you, and I've got some questions about that. I suppose what I'm trying to understand is that the Treasurer said that fiscal policy was not a factor in the decision that you took. Now, clearly, that is not the case. Just because you don't talk about fiscal policy doesn't mean you endorse fiscal policy. That would be an awkward position to be in, wouldn't it?
We don't advocate, we don't do anything.
Thank you.
For fiscal policy.
So it's reasonable to conclude that on the basis of the fact that it wasn't mentioned in the accompanying release that government spending has no bearing on your decision making. Of course it does, because of its contribution to aggregate demand.
So, yes, and I've said that before, and I have nothing more to add on that.
Thank you. I want to just refer you to page 27 of the February statement on monetary policy. I have a copy of that in front of me. I can
page
share
27?
one with the committee if you would like, but I'm sure you have one yourself.
Page 27?
Page 27.
Yep.
Chair, if you'd like a copy there. There is a line... there's a section of text on the bottom left-hand side of that page, and I will read it to you. It says, budget estimates of the fiscal balance provide a more comprehensive view of developments in fiscal policy than public demand alone. So my interpretation of that is the role of public demand significantly understates the role of government spending in driving aggregate demand and inflation. Is that right?
I don't know if I'd add significant in there. What I'd say is that, yes, we know that what public demand is defined as doesn't incorporate other things that governments spend money on, and particularly I'm thinking about transfers, and that's sort of job seeker, for example, or pensions, those sorts of things. Those sort of things go directly to people, and then they can go out and spend them. So there's a sense in which spending and transfers can add to private demand because they put money in people's pockets.
Right, okay, so that's what I wanted to understand. So that private demand can actually contain a whole bunch of government spending. If government is spending on, and I'm going to pull something out of the air, but if it's childcare subsidies or it's electricity subsidies or whatever it might be, that can contribute to private demand.
So my understanding is that those sorts of subsidies are in public demand, they're not in the transfers bucket. But yes, to the extent that people get an electricity subsidy, they don't have to spend that money on electricity. That potentially frees up money for them to spend on other things.
So public demand excludes transfers, but when they're spent, they show up in private demand.
If they're spent. So
right.
It depends on what people do with the money that they either get in direct transfers or the additional space they get in their income, if you like, because they're getting other things subsidised. It depends what people do with that. And different segments of the community have different marginal propensities to consume. People on lower incomes, you might expect, would spend most of it because they're often constrained. People on higher incomes may not.
So does it then also, is it then also true that there is a multiplier effect from public demand? When public demand increases, there's a multiplier effect that boosts private demand as well?
Yes, there are multiplier effects in demand, yes.
Okay, all right. So the bottom line is public demand significantly understates the inflationary impact of government spending.
I don't know if I'd put it quite like that, because it depends where you are in the cycle in these things. If, for example, you are in a private sector downturn, then public demand cyclically you would expect often. So if you've got, say, unemployment rising in a recession or something, that would usually result in more public spending on unemployment benefits, and that's what helps to stabilise.
Okay.
It helps to stabilise the economy.
Okay, I understand that. So is it then correct to conclude that if public demand is making a smaller contribution to GDP growth over time, that doesn't in and of itself imply anything definitive about the effect of government spending and the effect that it's having on inflation? Is that right?
It depends. It depends on where you are in the cycle, right? And at the moment, where we are in the cycle is excess demand. If you're in a period of excess supply, which some countries are at the moment, in fact, then more demand from the public doesn't necessarily add to inflationary pressures. That's all I'm saying.
Well, what about now when the economy is above its potential?
At the moment, when the economy is above its potential, when demand is above its potential, both public and private demand are contributing to demand being above supply. I have said this a number of times. I really don't think I have anything more to add.
No? Okay. So all other things being equal, if the budget bottom line deteriorates by... well, let me take a step back. If we talk about just government spending, which you've identified as a more comprehensive measure, the past two financial years, 23-24, 25-26, the budget bottom line has deteriorated by 1.9 percentage points of GDP, and 1.8 percentage points of which is due to higher spending. Does that mean that if all other things being equal, the budget bottom line deteriorates by 1.9 percentage points of GDP, does that raise aggregate demand?
No.
And then push up inflation?
Look, I really don't think I have anything more to add on this. I have answered this question all last week. I answered at the press conference. I answered it at House of Reps on a multitude of occasions. When we look at what to do with monetary policy, we look at aggregate demand incorporating public and private. And we take public as given, including public spending, and we set interest rates accordingly. As I said at the moment, the total demand, we think, is above the ability of the economy to supply those, and that's why we're exhibiting inflation.
Okay. I want to refer you to the statement that you put out following the December meeting of the Monetary Policy Board. That was really the first time the RBA kind of sounded the alarm about inflation re-emerging.
No, that wasn't. No, we were sounding the alarm earlier than that.
When did you sort of sound the alarm that inflation was re-emerging?
We were sounding the alarm back in September. So that's certainly in our November statement on monetary policy. We were following that up with concerns about inflationary risks on the upside. So no, it's not fair to say that December was the first time we were alert to this.
Okay. The reason why I ask is because the release in December doesn't mention government spending. It doesn't mention public demand.
No.
No. Okay. But it mentions private demand, or the private sector, twice. So it says economic activity continues to recover. Growth in private demand has strengthened, driven by both consumption and investment. Now, this meeting was held just a few days after the release of the September national accounts. So I presume that the information that was in the national accounts was part of the evidence that the board considered?
Yes.
All right, fantastic. Can I just refer you to some figures for public and private demand that were released as part of the September national accounts? And I'm particularly interested in the growth rates of each. I have a screenshot of, it's a bit bizarre, but it is in fact it's the ABS spreadsheet from national accounts, which I can share with you there. You've sort of got to dig quite deep to find this, but I'm sure that the RBA has considered it. So what was, in the September quarter, was it private demand or public demand that was growing faster?
The contribution to GDP growth in the September quarter was predominantly private.
It was private. Okay.
And you can see that if you look at our statement on monetary policy. If you go February, if you go to graph 2.6, it shows you GDP growth with contributions, and you can see that the contribution of public demand in that quarter was not the predominant contribution to GDP growth. It was private demand.
So the contribution, and I know that the Treasurer has referred to this, but I wasn't necessarily talking about the contribution, I was talking about the growth rate.
Sorry, what was that?
The growth rate as opposed to the contribution.
Well, yes, everything's growing, but the economy is growing, and what we're saying is that what was the main contribution to that growth. So public demand was growing, well, yes, and private demand was growing.
But you'd hope that the contribution of private demand was greater. I mean, it's a bigger share of the economy, hopefully, in a healthy economy.
No, it is a bigger share of the economy.
Yes.
Private is
so of course
a bigger share of the economy.
Make a bigger contribution.
Both of them are growing, and what surprised us in that September quarter release was the strength of the private part. That's what surprised us.
Okay. So if public and private demand are growing at the same rate, then they're putting a similar sort of proportionate degree of pressure on aggregate demand. Can we take that as a given?
Well, if they're both growing at the same rate and they're both growing above the supply capacity of the economy, then they're both contributing to excess demand.
You're at 15 minutes.
Okay.
I really feel that I am answering the same question over and over again.
Well, I understand that you must feel that, Governor, but it's because we need to be able to understand what it is that's driving a decision that's obviously Australians are very, well, you know that Australians are very disappointed to find that there's a 13th interest rate rise under this government, that people were hanging on your words like some sort of internet influencer last week, which is... So this is really important to understand what it is that's driving the decisions that you're having to take.
And I've told you what is driving the decision is that we have a situation where there is excess demand. We don't attribute to private and public. The total demand is above the ability of the economy to provide those goods and services. That means there's inflationary pressure, and it's taking too long to get inflation back down. I understand people are disappointed with the interest rate rise, but it would not be appropriate in the circumstances we've got to not take that action, because inflation is bad for everyone. It is bad particularly for people on lower incomes, and it's bad for mortgagees as well as for people who own their own homes. It is just, high inflation is bad, and we've seen that over the past few years. That's what's driving the decision of the board, to make sure that we can not let inflation get away and we can bring it back down to target.
I couldn't agree with you more, Ms Bullock, and can I tell you that I think from everybody around this table we agree that inflation is bad. The question is what it is that a government can do to help you to make sure that you don't have to raise interest rates again.
And that is for the government to decide. That is for the government to decide, is not for me to tell the government.
Exactly, and that's exactly what we're trying to help them to do.
Okay.
Can I just add the point we made in the statement that you referred to, the statement on monetary policy, about the fiscal balance. There's also the other side of the ledger, the revenue side, and most importantly, there's the states. The states make a significant contribution to both spending but also taxation.
I'm going to have to rotate the call, so I'll go to Senator McKim, 15 minutes, and then we'll rotate around 10-minute blocks.
All right, thanks. Thanks very much for coming in, and good morning to you both. Ms Bullock, in your public remarks post the board meeting last week, I was particularly interested that you singled out credit growth as one of the factors that concerned you and the board. we're receiving a sort of rolling series of lending figures at the moment, and yesterday we received lending figures around the annual growth in the in the value of credit for property investors, which jumped from 19% in the September quarter to 32% in the last 3 months of the year. Growth in the value of lending for property investors.
Must be
new
lending
what?
growth.
New lending growth. Yep.
Oh, is that what you're talking about?
Yes, it is.
New lending growth.
Yep. And I want to ask you whether you can quantify the contribution that particular pretty large spike in lending makes to the overall credit growth that you identified as a concern to the board, and whether a 32% annual growth in new lending for property investors is sustainable.
Chris, do you want to talk a little bit
sorry,
about
I don't have
growth?
so you're talking about the growth in the flow of new lending,
which is a different thing to what.
Which then comes into effect.
I'm asking firstly whether that contributes to the credit growth that you identified.
Absolutely. Yeah,
yes.
it's a significant.
And secondly, then, do you have is that sustainable? That's a large spike. Is that sustainable? And what are the factors that are driving that? And more broadly, what are the factors that are driving the credit growth that you identified as one of your concerns?
So I'll make a couple of remarks and then I'll let Chris talk specifically about some of the credit growth. So we know that when interest rates decline and housing prices are rising, that investors respond much more quickly than owner-occupiers. Owner-occupiers, I think, still account for the bulk or more than investor credit does. I think that's fair to say, isn't it, Chris? But what we've observed is that over recent times, investor credit growth has been well above average in the last year or so, and owner-occupier credit has been picking up, but it's sort of been around about average or maybe a little bit below. So a lot of the strength in credit has been driven by investor credit in this.
And what are the factors that are driving that, Ms. Bullock?
Well, I guess two things. One is slightly lower interest rates, and it started to pick up before interest rates came down, so it probably was anticipation of lower interest rates. And the second thing is that, as I said earlier, that investors tend to move with the housing price cycle. So when housing prices are going up, investors tend to be more in the market, and when they're coming down, they're generally pulling back a bit. So they tend to, and I guess there's one point worth making here, that from a financial stability perspective, we watch this because there is a possibility for investor behaviour to exacerbate cycles, and that potentially might have financial stability implications if, for example, the cycle turns, the investors pull out, that exacerbates the downturn, and that might have implications for other borrowers.
Thanks. Do government policy settings like the capital gains tax discount or the 5% deposit scheme, do they have an impact on investor behaviour and therefore the spike that we've seen in lending to property investors recently?
Well, none of the 5% deposit scheme applies to first home buyers. Some of them may be investors. I don't know, but a lot of them probably aren't. A lot of them are probably just trying to get in.
But do you think that investors might anticipate an increase in demand from first home buyers and therefore decide to jump into the market?
They may. That's possible.
That may be about them shifting. If they're ready to go with their finance, they were ready to buy, they might think, if I can move a bit faster at the margin, I'll come in earlier. But at the same time, when they show up at auctions, there are going to be more first home buyers that would be willing to compete with them. Yeah. So it's sort of double-edged.
And then on the taxation side of things, I mean, the point here is that that's, as far as I can tell, has been basically steady. The first home buyer scheme's new. the taxation things you refer to, they haven't changed. So they're not driving the current, adding to anything in the current cycle. They're just things that have been constant underneath.
All right, thanks. So with that spike that we're discussing, at the moment, like for example, Westpac have said that 39% of all lending is for property investors at the moment. That's the highest share, by the way, since 2017. Does that pose any financial system risk issues to you or raise any inflationary concerns?
It doesn't. We obviously are alert to the potential financial stability implications, and part of the reason for APRA putting on its recent guardrails in debt-to-income ratios was to be a bit forward-looking in this sense. So to say, basically, these are the guardrails, and be careful if you start to approach those guardrails because we're worried that there's possible vulnerabilities building up in the system. Our most recent financial stability report looked at all of this. It always looks at these sorts of things. We don't see financial stability as being a problem at the moment.
All right. Okay, thanks. And just last question on this. 92% of credit to property investors is put into the existing housing stock as opposed to new builds. Do you think this contributes anything to the productivity challenge that we have in Australia at the moment?
I'm not really sure in what way. I mean...
well, it's not generating productive investment into new houses, for example. It's simply driving property speculation into the existing housing stock.
Well, you've also got to remember that the rental stock in Australia is owned by the households, the very investors you're talking about. Now, in other countries, this isn't actually necessarily the case. A lot of the rental stock is owned by corporations or by super funds, or in Australia, the rental stock is owned basically by other households. So there's two sides to this coin, is the only point I'm making. Now, the way that investors choose to buy established housing or new housing, I don't know why that might be the case. It might be that there's certain advantages taxation-wise for them doing that. But again, all these things, I mean, the whole housing market issue is basically comes down to a supply and demand story, as we've talked about before. We aren't building enough houses, and demand for houses obviously is outstripping that. And that's what's driving not only the housing prices issue, but also the rental situation and vacancy rates.
And the other thing just to remember, of course, is that an investor might be buying it from another investor who'd already paid off their loan, and they did that as part of a retirement strategy, and they're going to use those funds to fund their retirement. So,
thanks. Look, you've been very clear, Ms. Bullock, that you understand that millions of Australians are doing it really tough at the moment, and that's clearly what I'm hearing. I hear from a lot of people, I'm sure you do too, about how hard it is at the moment, and a lot of people feel like they're working harder and harder but still falling further and further behind in the sort of daily or weekly or monthly financial grind that they're facing, and that they feel their living standards are actually declining, or that they're having to work harder just to maintain the same standard of living, and there's a large sense of frustration in large parts of the community about that. So it really caught my eye that we're now seeing corporate profit forecasts revised significantly upwards. I mean, UBS recently this week released a forecast of ASX 200 corporate profits that went up from 3% forecast in corporate profits to a 12% forecast in corporate profits. Like, what's causing this kind of two-phase economy where corporate profits are really, really strong, and they look like they're going to grow significantly over the next 12 months, and yet so many millions of Australians are really struggling at the moment. Is there, what's the, just a genuine question, how are we in such a two-speed economy where some people are doing so well and the big corporates are doing so well, and people at the bottom are just feel like they're working harder and harder and just can't get ahead?
Well, I think part of the problem is that inflation, what people are observing is that the price level has risen substantially over the last few years. And that has meant that when everyone goes to the supermarket now, they just look at the prices and they remember they were here and now they're 20% higher. And that hurts people. It's also true to say that, as always, there is a range of different experiences across the economy. You have some people on relatively low incomes, you have some people on higher incomes. The reason that corporates can do well at the moment, I think, comes back again to the point that in total there is excess demand, that demand for goods and services in the economy. Now, not everyone is contributing to that, but there is excess demand, and in those circumstances, businesses make money. They can put up their prices, they can recover their costs. We know that unit labour costs are still rising by quite a lot, and to the extent that there is demand for their goods and services, then businesses can put up their prices to account for that and for the rising cost of their inputs. So, yes, there is always a range of experience across the economy. From my perspective in monetary policy, and I've said this before, we recognise that interest rates have differential effects on different parts of the economy. That's just the way monetary policy works, unfortunately. Unfortunately, when interest rates are going up, it hurts people that have debt, and when interest rates are going down, and then people are getting hurt are the people that actually have savings. So it has differential effects. We know that, but that's monetary policy.
I wouldn't overstate this. There's also a global dimension, because this is a common feature, but one aspect that impinges on us is commodity prices. And a lot of the listed corporates, which UBS would, I assume, be referring to, are profiting off higher commodity prices, which is a global phenomenon, and in the main, to the benefit of the Australian economy. Now, that doesn't mean that households who are struggling to make ends meet won't be adversely affected at the margin by higher prices of, say, the food in the shops that relates to that. But that often the cost of beef to the farmer is a small share of what the customer's paying at the store.
You've got 2 minutes, Senator McKim.
Thanks to you both. That's really helpful. I've got two more questions. Hopefully we can get them through, and then I'm actually done for the RBA. So that might just help you be slightly more generous, Chair, potentially. Get me out of the room. Ms. Bullock, this is a question phrased in the global context, not quite in the context that Dr. Kent was just talking about, but. I wanted to ask you about the impacts of inflation on political circumstances around the world. There does appear to be a relationship between the difficulties of a lot of people with debt, which you've just acknowledged, of living through an inflationary cycle and a cycle of interest rate rises, and a shift to the hard right in global politics, whether that's reform in the UK, whether it's Trump in the US, whether it's the rise of the Nazi Party in the Weimar Republic at the moment, Le Pen in France, or One Nation here in Australia. Have you thought about that at all? And do you have any views you'd like to share about the societal impacts of inflation rather than the economic impacts of inflation?
No, I have nothing to say on the political.
No worries. Last question from me. I actually thought that might be your answer, Ms. Bullock, and I have no truck with that answer. By the way, the RBA unanimously voted last week. The board unanimously voted last week to increase interest rates. Obviously, you've got the Secretary of Treasury on the board. I wanted to ask whether there are either formal or, and this is a transparency question, are there any formal or informal governance arrangements where the Treasury Secretary is expected in some way to vote in the same way as the rest of the board, or does everyone on the board, including the Secretary, exercise a genuinely independent vote?
Everyone on the board exercises a genuine right to have their own vote.
And if that's the case, is it open to the Treasurer to give direction to the Treasury Secretary to vote in a particular way or not? And I ask because I know that there's a view that the RBA is apolitical, but I have a different view. I'm not suggesting you have partisan politics. I don't make that allegation at all. But the decisions you make are political decisions, in my view, because they impact on the day-to-day lived experience of all Australians, as you've said before, and they do have an impact on the political debate in this country. So just to be clear, I'm not accusing you of making partisan decisions. I've too much respect for you for you and the board for that. But I wanted to ask whether there is a possibility that the Treasurer could direct the Treasury Secretary, and whether, in your view, that is something that is a risk or at least a potential risk.
I don't believe it is. The review of the Reserve Bank of Australia looked at the issue of the Treasury Secretary on the board, confirmed that they felt it remained appropriate, but also made it extremely clear, and the government accepted this, that they are there as an individual. They are not there as a representative of the Treasurer.
Okay, thank you.
Thank you. Senator Sharma.
Thanks, Chair. Good morning, Ms Bullock and Dr Kent. I had some questions about the table on page 4 of your recent statement on monetary policy, the February statement on monetary policy.
Page 4?
Yeah, I believe it's the overview table.
Yep.
So as I understand it, based on your latest forecasts, even with an additional 1 to 2 rate increases, because they're priced in, you don't quite get back to the midpoint of the target band for inflation within the 2.5-year horizon. That's correct?
That's what that says, yes, because 2.5 is the midpoint of the target.
Yep. And I'm reading this right, so that you've got the cash rate going to also 4.2 at the end of the forecast period. It's currently 3.85, so that's a 35 basis point increase. So
that's a technical assumption, yes.
Yes, okay. But even so, if you assume that the cash rate goes up, we still don't get back to the midpoint of the inflation.
That's what the central forecast says.
Okay, all right, thank you. And then on the GDP forecasts, so I noticed that there's been a significant downgrade of those, at least if you get beyond the middle of this year, down to 1.6%.
There's been an upgrade in the near term and then a downgrade in the out year, which reflects the higher interest rate profile and the higher exchange rate.
Okay. Is that, I did read this somewhere, so I just wanted to check, but is 1.6, is that the slowest growth at the end of a forecasting horizon that the RBA's produced?
It's actually, I don't believe it is. I think our November 22 forecast had a lower growth rate than that.
Okay. But it's pretty low outside of recession.
It's pretty low outside of a recession.
And so you touched on this earlier, but what were the drivers in your forecasting framework that have driven that downgrade? You mentioned exchange rate movements.
The two things that have changed between the November forecasts and here, the main things that are driving this different profile are the stronger near term, because as I said, we were surprised on the upside on a few things. But the higher cash rate path and the higher exchange rate, because the higher exchange rate also tightens things up, puts downward pressure on inflation and the economy. Those two things are helping to drive the growth rate back down, again below the rate of growth of supply, because again, as I said earlier, we've got a situation we've got excess demand, and that's what helps to close the gap and bring inflation back down into the band.
Okay. But just to my layperson's understanding, I mean, we've got the economy growing, say, in December 2027 at 1.6%, but inflation, trim to mean inflation, still outside the target band. So that suggests to me that the speed limit of the economy now is below 2%. The economy can't grow.
Well, that's sort of our productivity assumptions for the short term, for the next, just for the period we forecast. Yes, productivity is only growing by about 0.7, I think, in our forecast, which means that, yes, the supply side of the economy is probably only growing by about 2. And that's part of the challenge. Unless we can improve productivity, we're going to find it hard to grow much more than 2% a year without having inflationary issues.
Okay. Right, I understand. So unless we can get productivity above 0.7%, which is your long-range forecast?
It's not our long-run forecast,
okay.
It's our short-run. We only forecast it for the... It's not really a forecast, it's an assumption based on what we've been observing in terms of actual productivity outcomes plus, quite frankly, the inflation and the unit labour cost outcomes.
Okay. So unless we can get productivity moving higher, though, the growth rate is likely to stay around 2.
Productivity is all about producing more with the same amount of the same amount of labour and capital, and that's what raises living standards.
Yes.
So if you can't get productivity increasing more quickly, then you can't grow the economy and you can't raise living standards as quickly.
Okay. Thank you. There's been a difference historically in the productivity performance between the public sector and the private sector, right?
Yes, but there are, I think, not only the public and the private sector, but different sectors of the economy, there's actually massive differences in productivity.
Yes.
In levels and in growth rates.
Okay. Understood.
And in the ability to measure it accurately.
And that was the other point.
Okay. Well, I guess I was just getting to the point. Is there some truth in the statement or in the view that because the lower productivity parts of the economy have been growing more quickly, lower productivity sectors, than the more productive parts, and that's predominantly public sector versus private sector, our overall productivity performance has declined?
So our analysis actually doesn't suggest that that is the main part of what's going on. There is some impact of that. There is a measurement issue, as Chris was referring to, in that for many parts of particularly the non-market service areas, so I'm thinking about things like healthcare and aged care and those sorts of things where we have seen growth in those areas. Outputs are measured by inputs, so by definition there is no productivity growth over time. Mm-hmm. It can't account for quality, it can't, so by definition you just don't get any productivity growth. But it's fair to, so our analysis suggests that there's a little bit of that, but that's not the main game. And you only have to look overseas to see similar declines in productivity over time. The US is an exception. Most other countries, over the decades, productivity growth has slowed. And, you know, we're no different. We have, it's true that we have not had any productivity growth over the last probably 10 years. Productivity level is probably about where it was pre-COVID. Mm-hmm. And it's had lots of big wiggles in the middle. I discourage people from looking at quarterly changes in productivity. You've got to think about it in a slightly more long-run sense, but it is concerning that it hasn't grown since pre-COVID. And as I said earlier, it's really important that we get productivity growth in all areas of the economy if we can. But as I said, our analysis suggests that this market, non-market thing you're referring to, that's not the main game.
Okay, thank you. Just the United States, because you raised that. So the fact that they've had or continue to have a better productivity performance means their economy is able to grow more quickly without triggering inflation, which is what we've seen now over the last 3 to 4 years.
Yes, although they've had an inflation problem too, and they still have an inflation problem.
Yes.
Yes, they have had strong productivity growth, and they're the standout, I think, aren't they, Chris?
amongst advanced economies?
Yes.
Yes.
Okay.
You've got 2 minutes, Senator.
Okay, sorry, last question. So just going back to the inflation, the model, the page 4 table there. So as I said, we've got, the assumption is that the cash rate goes up by 35, 45 basis points, but inflation, trimmed mean inflation, still remains above the midpoint of the target. So is it fair to say that we will need additional rate rises to bring trimmed mean inflation back to the midpoint of the target, everything else being equal?
So that's the central forecast. What it actually means, that's not clear. It might, but it might not. I would refer you to graph 3.6 of the statement, which is on page 53, which gives you a fan chart, which shows you historical errors of forecasts. So the board, in its approach, is not saying that this is the rate path it's going to take.
Yes.
It's cautious, and as we saw back, middle of last year, we thought inflation was coming back into the band, and it hasn't. So forecasts are fallible. Don't read that the interest rate path we've got in there is the interest rate path we have to have. It might be, but it might not be. And hence why the board say that they are going to be continually looking at the data, tells us where we are and what that means for our forecast going forward, and we will be continually reassessing that. If we need to go up further because inflation is entrenched, the board will do so, because that is its primary mandate.
Yeah, okay. Now, look, I understand these are forecasts, but I mean, as I read table 4, the outlook is for growth below 2%, inflation above the midpoint of the target band, higher interest rate rises and declining real wages out to the middle of 2028.
It's not a nice picture, but I do want to inject one positive thing here, and that is the labour market. I think everyone's been focusing on the negatives, but we're in this position because the economy is actually doing okay. It can't grow really strongly because productivity is not growing, but the labour market is holding up. It's still a little bit tight, and this is good news. And in fact, it's much better news than some other countries overseas have seen with their labour markets.
People have jobs.
Thank you. Thank you, Chair.
Thank you, Senator Bragg.
Look, thanks very much, Governor, for being here today. So, in terms of housing policy, I imagine it's still your view that supply is the key thing.
It's the interaction of supply and demand which is the key thing to do with housing.
Getting the numbers up.
Well, we have a shortage of housing. So, and this isn't something that's just occurred overnight.
Yeah.
It's been decades in the making.
It is instructive, though, to look at the numbers on dwelling completions. If you go back a decade ago, middle of last decade, we were getting 220,000 in some years. I think an average of about 200,000 a year. Now we're back to 170,000 houses a year. So this year, I think, looks like about that number. So it does appear that we are heading in the wrong direction in terms of the supply. So I guess if supply is the most important thing and we're heading in the wrong direction, what do you think should happen?
Well, again, I'm not the housing policy person, that is for governments, but my only reflection on that is that the governments seem to be making the right noises in terms of looking at ways of freeing up the ability to make it easier for developments. And high density, I think, is an important part of this. Certainly when I talk to, when the bank talks to companies, building companies in liaison, they say that the process of getting a high density development approved is very, very challenging, particularly in New South Wales. I know the New South Wales government are looking at that. So governments need to look at those issues.
I think the turn of phrase you use there is very revealing, because you just said that the government seem to be making the right noises. I would agree with that.
Well, I'm sorry, I'd go further than that. I'd say I think in the New South Wales government's case, they are actually making moves.
Yeah, unfortunately, though, they're 44% behind on their housing target.
it's not for me. This is not my policy.
That's the big
The
change.
target's a good idea.
Yeah, exactly. You
Can
didn't
I
have
also add one other thing?
Thanks for that. That's
and that
great.
is
Thanks
coming
for that.
out of
Very mature.
COVID.
Sorry, I was just reflecting on the other senators. Very immature comments.
Let's keep the Q&A.
Sorry, Governor.
I was going to say, coming out of COVID, it has the construction industry, housing construction, has been quite constrained, and it's been constrained in a couple of ways. One is we often hear trades. You just can't get trades.
Yeah.
And also what we hear from our liaison, and this is easing somewhat, but certainly in the year or so coming out of COVID, the time taken to finish actually strung out because you couldn't get these trades. So there was a big backlog. They couldn't finish them. They couldn't get the trades to finish them. So there's issues about development, but there's also issues about how do you actually get them built.
Yeah, so I think you're right. All governments of all colours are making the right noises. In the case of the federal government, the government's own statement is that they're spending $45 billion on housing. That's one of their main talking points. But clearly we are not getting the numbers up. So, I mean, is the solution here to spend more money? I mean, what else could the federal government do to get the numbers up?
Senator, I am not a housing policy person. I cannot decide what I think the government should do on these matters.
Okay.
It is not a problem.
Fair enough. So let's just stick to your figures then. If I look at the Statement of Monetary Policy projections on dwelling investment, so if I look at your November 25 dwelling investment projections, you had it going from 4.8% growth in December 25 through to 2.5% growth in December 27.
This is the November statement or the February statement?
November.
The November statement.
November. Then when we go to the February statement, we go from 5.5% growth in December 25 down to negative 0.4 in June 28. So, and then if I plot those two Statement of Monetary Policy dwelling investment forecasts, the change between November last year and February this year looks to be quite pronounced to me. So you're now projecting over the medium term, I assume you imagine that is the medium term, negative growth.
I think our forecasts for a dwelling investment reflect a view that it is difficult to get construction going in that area. I'm not familiar with the specifics of the forecasts. I'd have to take on notice exactly how we've come to those numbers. But Chris, I don't know.
I think it's a feature of the updated forecast with a interest rate path that's higher under the assumptions.
That's part
Dwelling investment is a key transmission mechanism for monetary policy, so it is natural for dwelling investment growth to come down.
I guess the concern I have is that if governments are focusing on housing and the Labor government here in Canberra is spending $45 billion on housing, but we're getting negative growth projected, that's not good, is it?
It's not solving a supply problem, but again, these are our forecasts based on what we think is going to happen, based on a central projection of an interest rate rise.
Well, very, very concerning. Well, thank you. We'll look forward to your detailed answers on notice on that. I just wanted to ask you, if you don't mind, Chair, if I continue to one other topic of housing.
You've got 3 more minutes.
Well, I'm always striving to be efficient and productive.
Yeah, that's great.
I know that's also how the bank feels about things. So, in terms of the 5% deposit scheme, I mean, I get that you're not the lending regulator, that's APRA's role, but you do look at prudential risk, aren't you, in the system?
We look at macro-prudential risks and financial stability risks broadly, not in terms of individual institutions.
This is probably a very dumb question, but I know you have to field lots of dumb questions in your role when you come to Canberra, so you're probably used to this. But But do you have a loan to value ratio in your RBA policy book that is instructive about what a risky loan might be?
We don't have a sort of a policy book. I mean, the usual rule of thumb is that anything over 80 is a bit risky. And there is some evidence that those loans at loan to valuation ratios over 80 are more risky than loans at lower loan to valuation ratios. But it all depends on the context, and at the moment, and this is risk to the banks, I should say. I'm talking about the potential impacts on the banks. At the moment, negative equity, because of the rise in house prices, negative equity is there's hardly anyone in negative equity. So risk to the banks, even at high loan to valuation ratios, quite low, because if someone couldn't meet their repayments and, heaven forbid, awful situation had to sell, they would not be selling at a loss. So, and they certainly wouldn't be selling at a rate that wouldn't give them the money needed to repay the bank. So, in terms of the risk to the financial institutions, even that if you were over 80, it wouldn't necessarily be a massive risk to the institution at the moment. But 80 is the number, probably.
But what about for the person? I mean, 95% loan is a risky loan, isn't it?
What's the default rate on those? What's the default rate?
I think you'll have your questions next. Do you want to ask me questions?
You're constructing a fantasy here.
Sorry, it's not a fantasy. 95% loans is a policy of your government.
You've had evidence here about the low default rate.
This is unbelievable.
Just allow Senator Gregg to finish his line question.
Thanks, Senator Hume. I appreciate that. Deputy Chair.
Please keep going.
Well, I mean, my question is a 95% loan a risky loan?
It may or may not be. It all depends.
Fair enough.
There's 80% above. If a loan to valuation ratio over 80%, typically, not if you're a first home buyer now, but typically you would have to get lender's mortgage insurance to address that. That's because the banks regard them as a riskier loan. So the higher the loan to valuation ratio, then yes, it's potentially riskier, but it depends in whose hands that loan is. And it also depends on what I said is happening with the housing market, and in the case the risk to the banks might be different in different circumstances.
But it is a bigger loan by definition, isn't it?
It's a bigger loan by definition.
Yeah,
if you are just taking as given the size of the loan, then yes, it's riskier potentially if you've borrowed 95% of it rather than 80% of it.
So basically, interest rate rise would have a greater disproportionate impact on someone with a 95% loan.
Well, if you've borrowed more money, then yes, you will be paying higher interest rate on a larger loan, yes.
Yeah, just finally, because I know others have questions, I mean, again, I understand your role may preclude you from answering this, but I mean, when you look at the house prices at the entry level for younger people, do you think that they're too high?
Well, too high. That's a really sort of judgment. I wouldn't like to say they're too high, but it is harder for people. Housing prices to income now are higher than they've been in the past. So by definition, it is harder for people to get in on the bottom end of the rung of the ladder than it has been in the past, given an income.
Thanks, Governor. Thanks, Chair.
Thank you. Senator Canavan.
Thank you, Chair. I just wanted to go to the Statement of Monetary Policy and particularly the table at the back of it, the Real Wage Price Index. My reading of your forecast here is that even while there is some growth in real wages by the end of the forecast period, real wages will remain below where they are today through to mid-2028. Is that correct?
You've got to be a little bit careful just using the wage price index for that, because the wage price index doesn't actually measure what people are being paid, because it doesn't include things like job changes, promotions, bonuses, those sorts of things. So
Okay,
if you
well, let's
actually
just take
look at real wages,
that's the best
they are
measure we've
rising.
got. But over that forecast period, they'll still be below, won't they?
But I'm not sure
What
it's
they
the
are
best
today.
measure we have.
No.
What's the best measure you have?
And the national accounts measure is a much broader measure that
You
picks
don't
up
offer
those.
forecasts of
these
that then?
things. And those numbers, I think they're still rising.
That's what the nominal average earnings per hour are
But that's
referring
nominal,
to.
not real then, is it?
Yeah, but the wage price index is nominal as well, so you have to
Hang on, how can the
discount
real
that.
wage price index be nominal if it's called a real wage index?
No,
No.
the one here is the nominal wage price index growth.
On that table, under
Right.
income, wage price index, that's the nominal wage price index.
All right, I'm getting confused. Is it after inflation, I suppose?
No.
It's not.
That's
That's not a measure of real wages then. Because
If you are
colloquially,
looking-
I suppose colloquially when we say real wages.
no,
yeah.
he's looking at this
Oh,
one.
sorry. you're looking at-
The one you
sorry,
should be looking at is real average earnings per hour,
Right,
which is rising.
which does start rising.
Which is
But the
rising.
real wage index actually,
Yes, but that
It's-
doesn't, as I said, measure what people actually earn.
well, has there been a period where, that is now back to, that index is now back to 2011 levels?
Well, I think
Can I just finish my question? You're very defensive at this point. I mean, has there ever been a period in Australian economic history where we haven't had an increase in the real wage index for 17 years? In fact, it will still be quite a lot
Have to
below.
take that on notice. We haven't graphs on the
Yeah.
real wage. I'd have to try
I'm
to find it.
I'm just trying to wonder, so real wages are back to 2011 levels today. They've gone back 15 years. And Governor, you said before the economy is okay. I'm just trying to square your statement that the economy is okay with how the feedback I get as a representative of people, that they're really struggling. So when you say the economy is okay, are you not taking into account how much people are struggling right now with the way living standards have dropped by something we've never seen before?
On the contrary, we do understand that not everyone is doing well.
Well, I would put you, it's not
understand
everyone,
that.
it's almost everyone is not doing well.
Well,
when you've
the
got
economy
that
is-
kind of drop,
If you go to, it's graph 2.7, which is household disposable income growth. And what that shows you is that over the past couple of years, real household disposable incomes have been rising.
right? Are
That's
they?
what that tells you.
Where are they back to levels they were before COVID?
If you look at the AENA measure of real income per hour worked, they're well above.
Well, this is, I mean, part of the problem, you keep jumping around to different stats. I just asked, is real disposable incomes back to where it was before COVID?
Our preferred measure, yes, they're above.
Real disposable income.
This one, looking at this
I
one.
believe it would be, but we'd have to take that on notice. Can I just make a broad point? Well, can I just make an important point here?
It seems to me whenever there's something that might be negative, you take on notice, and then you try and jump to a different measure when you want to say positive.
Well,
I suppose people listening to this might get pretty frustrated because certainly people don't feel like they're better off right
but
now.
can I answer
Yep.
your question
Yep.
about these different measures?
Yeah.
The wage price index currently, in real terms, is not much higher than it was in 2010. That's not
Yes,
good
that's-
on that measure.
That's right, and
So
that's
I would
that's,
agree with you there.
That's okay, good. So
And then
it's
the real
not a great economy.
measure of average earnings from the national accounts, which is not disposable
Yeah.
income because it doesn't take out taxes and so on, has increased over that period. The increase, though, is relatively modest, which is a reflection of what we talked about on productivity.
Yeah, look, and thank you for that, because it would be, I think people are only going to get angrier in this country if they're gaslit into thinking that the economy is okay when their lived experience is absolutely terrible
Senator,
right now.
I take
Yep,
exception to that comment.
Well,
I am not
as I have taken exception to saying
gaslighting
things are
anyone.
okay.
Let us speak.
I have said that there are certain aspects of the economy which are doing well, and one of them is the labour market, which is positive for people. Now, I understand that some people are doing it tough. I do understand. I get letters and I read them. But that is not to say that you can't recognise that there are some parts of the economy that are doing well. And the labour market, I think, has been a really positive thing for this country.
Well, I'm only my response, Governor, was to the comment that the economy is okay. You didn't say that some people
The economy
are
is
doing
not-
well. You said the economy is okay, and I cannot see on these numbers if the what is the economy about? The economy is about, in my view, the reason we care about it is for people's basic ability to provide for themselves, and that has gone backwards at a rate that we have never seen in Australian economic history.
And I am saying that you're thinking okay means it's great, okay means it's okay. We aren't growing. I've already made this point. We are not growing strongly. We can't grow strongly because we don't have strong productivity growth. That is not a good thing. But people at least have jobs at the moment. There is the unemployment rate is at typically not historic low levels, but at pretty low levels, and that is a positive thing.
But if the labour market was so good, why aren't wages growing?
Well, wages, it depends.
Again, I mean, people care.
On your measure.
Yep.
Right? You are looking at wage price index. We are looking at a measure of what people are actually being paid. Now, it's not shooting the lights out either, but it is above where it was pre-COVID.
So I don't know if people think the labour market is that great either, because, again, I would have thought the Labor Party and the Labor government would want a good labour market to be one where people's living standards are increasing, when their wages are going up. And they haven't been under this government. They've fallen, they're behind.
Got to have a job.
They've gone
first,
backwards.
Get wages.
They've gone backwards.
Got to have a job.
And that's just a fact.
You'll get your job, Senator O'Neill.
So, is the government's budget in structural deficit at the moment?
I'm not the best person to answer that question.
But does the RBA evaluate the structural position of the?
We take others. We take treasuries and others measures of these sorts of things.
Do you factor in the structural settings of the budget to monetary policy decisions?
We put public demand into our forecasts for what demand is going to be aggregate demand, and we factor that into our forecast for inflation.
Well, okay, I'll just use, Treasury does provide an estimate of it in chart 3.13 from MyEFO on page 88, I thought, yep, 88. The structural deficit here, it's off a graph, so I can only estimate it, but it would appear to be in the order of around -1.5% actually increasing this financial year. Does that accord with the inputs that the RBA would use to its decision?
We would use those inputs.
There's a large structural budget deficit.
We would use those inputs.
So a structural deficit would indicate that fiscal policy is expansionary at the moment?
It depends on the direction it's going.
But it's increasing on this graph.
If you've got, I think
right,
we've
so
got
that
a
means
graph
it's expansionary.
I think we've got a graph in the Statement of Monetary Policy that shows if you go on the forecasts, what happens is that it's expansionary and then it starts.
So it is expansionary at the moment.
It's rising.
Okay.
So therefore the changes.
So an expansionary fiscal policy would put upward pressure on interest rates, all other things being equal. Is
expansionary.
That right?
We've been in this before. If public demand is increasing, then it's increasing demand in total. And
I know why you don't want to go. The problem is because you get very defensive, and then I thought you're independent. So these are very simple things. So yes, we've established there's a structural deficit. We've established that's increasing. We've established that's expansionary. Expansionary fiscal policy puts upward pressure on interest rates, does it not?
Depends on what happens with private demand.
But I said ceteris paribus, right? Ceteris paribus. So if private demand stays the same, an expansionary fiscal policy will put upward pressure on interest rates.
That's
She's an economist.
It's mathematically correct.
Yes, thank you. It's economically correct.
If you are in a situation of excess demand and you add more demand, doesn't matter where it comes from. Puts upward pressure on inflation.
Thank you. We've got there. So just limited time left. Has the Reserve Bank increased its estimate of the Nyru?
Our models, estimates of Nyru have been rising a bit, but we don't take a model approach only. We also use a bit of judgment, and we've got some information in the new, the most recent Statement of Monetary Policy, which talks about our approach to thinking about the tightness of the labour market.
So what's your current estimate of the Naira?
Our current estimate, 3.6, I think.
Yeah, no
Okay.
order.
And have you lowered potential
Rotate the
growth?
call.
Can I just ask one quickly? Have you
Sorry,
last one.
4.6, sorry, apologies.
Okay, sorry. Have you lowered potential growth forecasts?
Our potential growth, we think, is a little bit lower than it was. We thought it was probably middle of last year.
Okay, all right. I have lots of more questions, but I'm not
The
given much
moderators.
time, so...
Thank you, Senator Hume.
Thank
5
you.
minutes. And
Thank
then
you, Chair. I just want to follow up on some of the changes that have occurred since the review, the RBA review, and how that has been implemented. Obviously now with 2 boards, can you talk to the committee about how that is working and the responsibilities and the obligations of each of those boards and how that's
So
playing
there's
out?
3 boards.
3 boards, sorry, I should say. Yes.
Monetary Policy Board, the Payment System Board and the new Governance
Yes.
Board, which has been in place for about a year. The way that's working, I think it's working quite well. It means that the operations of the bank are now basically overseen by the Governance Board, and that there's a big focus on risk, and a large chunk of that people may not realise, but we have a very, very big technology component of our business. So there's a lot of focus on that of the Governance Board. The Governance Board is also focusing on things like the building project that we're doing. So all of those sort of operational aspects they're focusing on. The Monetary Policy Board now doesn't have to focus on some of those additional things, so it is focusing very much on monetary policy strategy. It's also focusing much more on financial stability, which it hasn't done so much in the past. So that's, and the Payment System Board sort of a bit standalone, but the thing is that the boards do need to work together a bit in the sense that it's the responsibility of the Governance Board to basically make sure that the policy areas of the bank are resourced enough to, well-resourced and well-supported to do their jobs. So that's a focus of theirs. One thing that is a little bit different is that the balance sheet, they are sort of responsible for the balance sheet in one way and the risks on the balance sheet, but on the other hand, the balance sheet of a central bank is often used for policy purposes. And so there is an MOU, an agreement on how that sort of, if we did need to use the balance sheet for policy purposes, how would we sort of communicate that, liaise with the Governance Board on that, keep them aware of it. But the bottom line is that decisions on using the balance sheet for monetary policy are in the hands of the Monetary Policy Board, not the Governance Board. But I'd say it's working very well and we're getting a lot of good support from the board members on the Governance Board.
That's very encouraging. I mean, obviously, so much of the focus, I think, revolves around the decisions that the Monetary Policy Board makes. There was last year a new statement on the conduct of monetary policy and the statement of expectations that was launched by the Treasurer in July, I think it was, and it set down the following, that following the RBA review, that it required all board members to carry out regular public engagements, such as speeches. Now, I've seen a couple of the speeches, obviously, that you've given and that some of the other board members have given, but I'm wondering if you could give us an update on the progress towards that, whether it's monitored, is it encouraged, is it enforced? Do you get to the end of a sort of a quarter or half year and say, oh, goodness me, so-and-so, you haven't done your requisite amount of speeches yet? What do you do?
So we have put out a sort of a framework for how the board members will engage in public discussion. They mightn't make a speech, but it might be a different sort of public engagement. So there is something on the website, I believe, which sets out how that will work, and our communications team are working with the board members to see how they're going to fulfil their obligations there. I think it's one a year, that some might do a speech, others might do a panel. There's a range of ways in which they can fulfil this requirement to do public engagement.
What's the difference between an expectation and a KPI for a board member on something like that?
Well, I mean,
is it a KPI?
they've got to do one public engagement, and we'll make sure they do the one public engagement.
Okay, thank you. Thank you, Chair.
Senator O'Neill,
Thank you very much.
you've got 5 minutes.
Thank you. Just the rationale for the public engagement. What is the underlying principle that has led to this establishment of this new process?
Of the public engagement of the board members. Look, I think it's come from the one of the reviewers on the panel was from overseas central banks, and overseas central banks do have public speeches made by members of their decision-making boards. So I understand where it came from, but its application here is different because in those overseas countries, typically the people on those boards they're professional economists, they are sometimes full-time members of the bank's staff. So they're different sorts of board members than the sorts of board members we've got. We've got part-time members, some of which have some economics training, some of which might just have general business. So I think you can't just... So it came from this idea that other countries do it.
Yeah, you can't transplant
but you
from
can't
Europe
transplant
to Australia, really.
that model here, and that's what we've tried to do. We've tried to give the spirit of the recommendation, recognise the spirit of the recommendation, but recognise that we have a different system and we've got to make it work within our system.
And the more accessible your board members are, the more they move around in the community, the better their insights are that they bring to the board. You've described the work of the Monetary Board in response to Senator Hume's questions, and we've had some discussions about productivity. Do you believe the new structures is making the Monetary Board more productive and effective?
I think the new structure is. I think it's giving them more time to consider, and I think if you ask them this question, I hope they'd agree. They now have more time to consider the decision. They have more time for discussion and debate. And let me tell you, there is debate. So I think it's making it more productive in that sense, in that they are actually much more engaged with the decision. You'll know that the statement we put out after the meeting, that is now a statement of the board. It used to be a statement by the Governor. It is now a statement of the board, and it gives them much more time to make sure that they're happy with the statement, that it reflects their views. That's, I think it is making them more productive in that sense.
I'm very glad to hear that. It's a significant structural reform, and I think it's good to hear that it's improving the productivity for you guys. There's been some discussion today about real wages. If I can go back to the June quarter of 2022, you may or may not have documents in front of you with regard to that. But my understanding from the documents available is that real wages were actually going backwards by 3.5% at that point of time, which was when the Albanese Labor government was first elected. Can you compare that to the employment and wage growth that is a characteristic since we've come to government, which, and I understand that is the longest run of continuous annual wage growth in a decade?
I mean, I can only look at the graph that Chris has got open in front of us. Which is, you know...
I think real wage growth's a good thing. Matt, perhaps you have a different view.
The Governor answer the question.
The issue is that there's been a lot of volatility in real wage growth. Real wage growth was very strong through COVID when there was a lot of support. You remember a lot of government support?
Yes.
But what happened after that, when inflation rose up, that was when real wages start. So the big decline in real wages that we saw was related to the massive increase in inflation. Yep. That was what drove that. But it's been very, very volatile. So if you sort of take out that period in the middle, they've been steadily increasing over the past
couple of years.
Yeah.
I think the other concept is disposable income. I didn't have it before, but real per capita disposable income. It has risen, but it's risen very modestly in recent years and over the past decade.
And
that reflects very low productivity growth.
And unemployment as well.
Sorry.
The intersection between that and unemployment, the unemployment rates.
The tighter the labour market and the lower the unemployment rate, in theory, then the potentially greater upward pressure on nominal wages. So that helps keep pressure, if you like, on nominal wages. And that's sort of part of the reason we still think the labour market's a little bit tight, because growth in nominal wages is coming off, but it's still running at 3-point-something%, which is
jobs for Australians.
Well,
Thank you.
Thank you.
Migration.
All right, I'm conscious that it's 10:30 and we need to let you go, but
I just wanted to do just one follow-up question. I was just, after asking you the question about the Monetary Policy Board members and their obligation to carry out regular public engagements, do you have a list of the public engagements that each of the board members have
I don't believe
done?
we have that list at the moment. I know that we have something on the website which sets out the way we're going to do it, and then it's up to the members to liaise with us and liaise particularly with our communications team on how they're going to fulfil that.
Thank you. If on notice, I would really appreciate it if you could get back to us with a list of the board members and the public engagements they've done on behalf of the Monetary Policy Board, because obviously a lot of these people have quite public profiles generally. They might be public speaking, have a public engagement on something else, but they really need to do it with their Monetary Policy Board.
So you want a
hat
list
on.
of ones they've done, not a list of ones they're planning to do?
Ideally, yes, thank you, so far. Yes, in the last 6 months, more than 6 months, 9 months
Well, I'm not
since
sure
that statement.
I think the answer might be none in the last 6 months, but I will take that on notice.
Okay, so that statement from the Treasurer was in July last year, so leaving it a bit tight. You're going to have a lot of statements on monetary policy engagements in the last couple of months of the financial year.
Again, it depends on. It's not necessarily a speech. It's an engagement of some, and there's a series of things they can do.
Okay. Well, if a list would be terrific. Thank you. Thank you, Governor. Thank you.
Okay, thank you very much. We will let you go now and suspend for a short break and resume at 10:45. Thank you, everyone. Thank you. Start. It's 10:44. People watching at home might get upset. No? Okay. No one's watching at home, are they? All right, it's 10:45 now. All right. The committee welcomes Senator the Honourable Tim Ayres, Minister for Industry and Innovation and Minister for Science, representing the Treasurer. Minister, would you like to make a short opening statement?
No, thank you.
No. Before I introduce our other witnesses, I would also note that on the program we are scheduled to break at 12:30, but we are going to break at 11:55 to enable us to go to the House for the government release of the 2025 Closing the Gap annual report and 2026 implementation plan. Just for anyone following at home. So the committee also welcomes representatives from the Department of Treasury, Housing Group and Housing Australia. Would representatives from Housing Australia like to make an opening statement?
No, we don't, Chair.
No? Fabulous. So we will go straight to questions. Senator Bragg's up first.
No, thanks, Chair. I'll have some questions for the department first, and then I'll ask some questions to Housing Australia, given that you're separate entities. Okay, so how's it going with the housing targets?
Senator, there are a range of housing targets. There's the 1.2 million National Housing Accord
How's it
target.
going?
The Housing Accord target, I think it's widely known, Senator, that achieving the full 1.2 million will be challenging. I think the National Housing Supply and Affordability Council has described that target as ambitious but suitable. There are good signs of progress in the housing market at the moment. Approvals are doing very well. Construction activity is doing very well. The cost of construction has come back a bit. The time to construct housing has come back a bit since the start of the Accord process and the efforts of all jurisdictions, the Commonwealth and also state and local and private industry, I might say, to improve housing supply. So there is good progress across a wide range of those fronts on the 1.2 million. There's also very good progress, Senator, against the government's 55,000 social and affordable
I didn't ask about
target.
that. So let's just try and stay on task and try and have like crisp, efficient answers. So the 1.2 million, how many will be actually constructed of the 1.2 million?
Senator, the most recent forecast is the National Housing Supply and Affordability Council's forecast of nearly 12 months ago now, which said 938,000 dwellings during the Accord period.
So about 250,000 short.
On those numbers, which are 12 months old, nearly 12 months old, and as I've pointed out, Senator, there are recent improvements in housing market conditions that I think pointing in an optimistic direction.
Well, I mean, we said the RBA governor here. Were you able to hear any of her evidence?
I didn't hear her evidence.
So the RBA is forecasting negative dwelling growth over the Accord period, so it will actually go negative by 2028.
Senator, I didn't hear the governor's evidence, so I'm not going to offer a comment about that.
Fine. But I think we can safely say that the targets won't be met. Which is the worst state so far?
That's your assertion, Senator.
That's the evidence we just heard. We're a quarter of a million houses short.
Well, that's
250,000 houses short. That's the evidence we just heard.
That's your assertion.
It's not an assertion.
That is not the evidence
it's a fact.
that we just heard.
It's a fact.
That is not the evidence we just heard, and you can bellow. I'm
not sure where you were.
Carry on.
Right,
and I understand the sort of sense of anguish on your side of politics.
I think you need hearing aids. You need hearing aids.
The point of a target and the contributions that institutions make along the way about making assessments about how the target is proceeding. It's the point of a target. It is designed to concentrate the mind and deliver the kind of national effort that is required to make a difference. Housing approvals have increased every year over the last 3 years.
Yeah.
Construction costs have
It's gone
stabilised.
backwards.
Construction costs have stabilised.
But you built fewer houses.
The idea, the Liberal model for this is
Once his political speech
do
is over,
nothing.
I'll ask him some questions.
do nothing and let private industry,
This is good. I'm happy to have this debate with you.
other people's achievements, what happened when you were in government was precisely nothing.
I mean, we can
Precisely
Let's,
nothing.
um,
And if
Chair,
you-
I'm happy to have the situation where the minister can try and debase Senate estimates with his political speeches, but if he's going to do that, then I'm going to ask him questions, okay?
Okay, hang on. Let's try and
going to,
excuse me, Senator
I'm happy to
Ayres.
hear your
if you're going to
political speeches.
misrepresent evidence that's just been put to you,
He just said we're going to
I'll
miss it by
continue to interrupt.
250,000.
Let's just
that
what he said.
was not what the
He just
official
said
all right. Let's stop arguing so we can get the information that each person is trying to get out. So let's try and focus on Senator
gonna
Bragg.
ask
If
the
you want to
minister some
ask your
questions.
next,
All
yeah,
right, well, I'll
go
talk-
ahead and
I'm
ask
happy-
questions. If we one at a time,
I'd
you
prefer
ask
to
and
ask
then not talk
the
over the top
officials-
of each other, please. I think everybody will get a lot more out of
I
it.
understand. You're doing a good job, Chair. I don't want to antagonise you. All right.
instead.
Come on, let's.
I'm not
keep it
patronising
nice,
anyone.
everyone.
patronising anyone.
Senator Bragg, off you go.
So, okay, well, I think we've dealt with that issue. So we're 250,000 houses behind on the national housing target. So which states are doing the worst out of all of them?
Senator, the states that are doing well are Victoria, WA and the ACT.
Yeah, who's going bad?
The Northern Territory has some particular challenges that relate to their market conditions.
Right, what about New South Wales?
New South Wales and Queensland are not doing so well compared to the targets. I'm sure we can find a more accurate description than that based on the 2025 forecast. For your benefit, Senator, all of these numbers will be updated in the 2026 State of the Housing System report with reforecasts that reflect current market circumstances and that will, in the ordinary course of events, that will be published in kind of April, May this year.
So have you looked at the latest Statement of Monetary Policy?
I haven't looked at the precise Statement of Monetary Policy, Senator. Of course, I've read summaries of it and media reporting about it.
Okay. Would you like me to ask you some questions about it in relation to your housing role, or would you like to send another official to the table?
Senator, why don't you ask the questions and let's work out where it's best to direct those questions.
Okay. Well, I'll get the numbers. I think that'll be more useful. So. So in the RBA's November 2025 Statement of Monetary Policy, the bank was projecting dwelling investment growth of 4.8% in December 25, 3.7% in June 26, 3.1% in December 26, 2.7% in June 27, and then 2.5% in December 27. So that was their projections in November last year. Now, if you look at the Statement of Monetary Policy from this February, they go from 5.5, 3.7, 1.8, 1.1, 0.3, and then negative 0.4 by June 28. So that I imagine would concern you as the Chief Commissar of Housing at the Treasury, that we're getting negative dwelling investment now projected by the central bank. So what do you say to that?
Senator, what I would say to that is the forecasts that are in the MyEFO documentation and that are broadly reflected in the numbers that you've read out in the short term are for solid dwelling investment growth in the short term, in particular in 2026-27. That's a positive. There are market conditions that are improving. There are a wide range of government actions that are beginning to kick in, both at the Commonwealth level and at state and territory government level, all of which we're now starting to see flow through into positive signs in the housing market. I'm not going to second guess the Governor on monetary policy or economic forecast,
Okay.
Senator. You wouldn't expect me to.
You sound relaxed. That's good.
I'm relaxed.
I'm glad you're happy.
I'm obsessed, actually, with getting a better outcome, but
Well,
so
I was
wouldn't
surprised.
describe myself as relaxed. But,
Okay.
but there is a lot of focus going on about trying to improve housing market conditions, both for the benefit of first home buyers and also for the benefit of renters.
Okay, so let's go to the 5% deposit scheme modelling. So, who am I? Hello, Mr. Dowie.
Hello, Senator.
How are you?
Good, thank you.
It's good. Now, were you the decision maker on an FOI in relation to modelling?
I was the decision maker in relation to FOI.
You were the decision maker. Well, do you know that we talked about you last night?
I did.
Well, it was all very positive. Nothing to worry about.
I heard you mention me several times by name.
Well, we know that you're a very good official, and we're just trying to. I mean, one of the benefits of having Senate estimates is it's a fantastic transparency organ because it allows us actually to, unfortunately, highlight that there are times when the FOI system doesn't work as well as it could. Maybe there are mistakes made. We all make mistakes, myself included. And so it appears that in the FOI 4065, which was in relation to the modelling which we discussed at length last time, so we now have a bit more information because last time we had this conversation, I was asking you whether the modelling was on a piece of paper, how it was transmitted, all that sort of stuff, all those stupid questions that you probably found quite irritating. But now we know that it was on a piece of paper. It was sent in an email to the Director of Policy at the Office of the Honourable Claire O'Neill, and there were a few numbers in there, but obviously a lot of redactions. So the official last night gave evidence that the legal branch advised you as the decision maker as to how you apply the FOI rules. Is that right?
So in coming to my decision under the FOI Act,
Yep.
I did consult with the legal branch to make sure that I understood the relevant provisions of the Act sufficiently to make a decision.
Yeah, and so you're the decision maker, so you're accountable for making the Section 22 exemption.
Yes, Senator.
So you decided that the FOI seeking access to the modelling on the 5% deposit scheme, market impacts and everything else, that you decided that point 4, factoring in the supply response, those details were irrelevant.
So to give you some context, Senator, I believe you're referring to document 1 of the information pack that was that was released to you. So in relation to that document, I did apply the test of what was relevant to your request, and just for the record, the request that you did make was for any and all correspondence, briefings and other documents, including emails and messaging on mobile devices related to Treasury modelling regarding the market and housing price impacts caused by the government's expansion of the Home Guarantee Scheme. And that particular document that you're referring to there, document 1, did contain information that was transmitted from Treasury to the Housing Minister's Office about some of the assumptions that sat behind Treasury's modelling, and that's the information that was disclosed to you.
Yeah, I know that. But the FOI was about market and price impacts caused by the government's expansion of the scheme. You've blacked out factoring in the supply response, saying it's irrelevant. So I find it hard to imagine, given the context that we're working in, when supply has collapsed under this government, and that's one of the reasons that we have the significant price impacts because of the 5% scheme, that you thought it was okay to say that that section was irrelevant.
So just to be clear, Senator, what your FOI request was about Treasury modelling. So the information that was released to you was about information that was relevant to Treasury's modelling.
Senator, for the record, I believe this matter is also subject to an appeal to the OAIC through the FOI process.
And as you know, that will take years and years and years. And your strategy is to run the clock down so you don't have to give any documents to the Senate.
Well, no,
I get that.
Senator, I'm sorry.
I get that.
With respect, that's deeply offensive.
I get that.
That's calling into question the professionalism of public servants at the table. That's not appropriate.
You've blacked out stuff that is clearly not irrelevant.
So,
this is not the first time this has happened.
Senator, you just made some assertions about the conduct and professionalism of public servants that, with respect, were not appropriate. The decision maker made a decision. That decision, I believe, is now being appealed, or whatever the right language is, through the OAIC. That is the normal process and an appropriate process to make sure that the decision maker made the correct decision. And undoubtedly, if Mr. Dowie erred, that will become apparent to all.
There's no rule that says that we can't ask you about the way that you administer your department here at Senate Estimates. That's the whole point of it.
Yes, but it is a normal and reasonable proposition for the Director General to advance that this is the subject of a review. It's a formal legal process, and it's not appropriate to prejudice.
Why is it not appropriate?
That process.
But why is it not appropriate?
Well, because you don't want to prejudice that process, do you?
Or
do you?
I'm asking why.
Or do you? Is that what this is really about?
There's not actually...
Trying to distort the proper review process.
Just because there's a review, it doesn't mean that you can't ask questions about these materials.
Is that your intention?
I'm asking questions about these materials because they've been blacked out unnecessarily.
I think if
they shouldn't have been blacked out. They've made the wrong...
Stop verbling the committee, Minister. I mean, it's okay for Senator Bragg to ask questions about the decision.
So I think
and
in terms of this issue...
You're doing exactly what you're complaining about him doing to you.
Senator Colbeck, in terms of this issue, I think Senator Bragg has asked a range of questions. The department has responded in terms of the matters being under review. Do you want to ask a follow-up about that, or and can we move on? Because in terms of, what other information you're going to be able to elicit, this was discussed last night as well, and similar responses were provided in terms of a review elsewhere.
I mean, this is a pretty basic transparency thing that we're asking about, right? This is, whatever your views are on this scheme, it's a significant market intervention. Some people think it's good, some people think it's bad. We're just trying to get an understanding of the modelling and the assumptions that were provided to the executive to justify this policy intervention. Not asking you to give away cabinet secrets or other things in our system which are not appropriate. Effectively, your assertion is, and I'm sure you've tried to do the right thing, I don't want to impugn any Treasury official, Mr. Rimmer. Your department has used an exemption here to say that the supply response is irrelevant to the modelling underpinning the 5% deposit scheme. Now, there's only two sides to the market. There's the supply side and then there's the demand side. So by saying the one whole side of the market is irrelevant to the question at hand, I think means that you've blocked out something as irrelevant that could never be irrelevant. So that's why I'm asking the question.
Sure. And Senator, you've made an assertion. That assertion will be tested through the OAIC process. The decision maker has made a decision in accordance with his legal obligations, and the decision is as you have in front of you in your hands, based on a proper application of the FOI Act, I'm sure. And if it's found to be an improper application of the FOI Act, then that will all become part of the record in due course.
So just so I understand, so the evidence you're giving is that you judged it to be irrelevant because the scope of the FOI, in your judgment, was not relevant to the supply response.
Senator, just to be clear, in relation to that section 4 of that document 1, there was information that was released about Treasury's view on the supply response of this scheme.
It was blacked out.
No, there was also some dot points under that were released. In terms of the entirety of that section, some of the material there that has been redacted because it didn't relate to the views on Treasury's modelling, which is what your request related to.
Well, what did you assume the supply response is then?
So, in terms of the supply response that we assume for the purposes of this modelling, our modelling is based on the work by Saunders and Tulip, which effectively has the assumptions that supply over time increases when prices increase, and so there's more incentive for the market to increase supply in movement with market prices.
So,
come back to you.
Okay, thanks. So, did you have dwelling completions number in mind for the year or for the years ahead?
I'm not sure we have those specific numbers with us at the table, Senator.
Well, I think isn't the official looking for a piece of paper?
But I'm not sure he's finding one.
We have that.
You don't. Okay. So, but there would have been some numbers. You just don't have them with you.
So in terms of the modelling that we would have done, we've used our modelling and we've made some assumptions there in terms of the amount of people who would take up the scheme, and we've made some assumptions there based on that about what that would do to prices.
Okay. But just to be clear, you did assume that there would be a certain number of dwellings completed over the period of the modelling.
Well, what we assumed is that there would be a shock to the model. We've applied that shock in terms of the additional demand that this scheme would generate, and as a result of that, the model has given us some assumptions around what the prices are likely to be over time, and the model itself just has some assumptions based in it around what the supply does in relation to that.
Okay, and the supply data would have come from the Treasury or the RBA?
Oh, well, the supply data itself is how the modelling itself works, which is that we're assuming that any price increases there'd be a supply response in response to that.
Senator, if I can help, the model produces a marginal change to the supply outcomes and the price outcomes. It doesn't predict a future price or a future number of completions, which I think is where your question was heading.
It doesn't have any numbers?
That's not what I said, Senator.
What did you say?
I said the model predicts the marginal impact of different policy settings, not the absolute impact of all policy settings and all other variables in the housing market.
But it's not an abstract. I mean, you're putting something into the market.
Sure, but Senator, as you know, there are many other variables that are going on in the housing market from day to day, including the RBA's monetary policy stance, real growth in incomes, and other factors.
Let's stick with our favourite FOI 4065. Yep.
I'm going to have to rotate the call. You've had more than 20 minutes, but I will come back to you, okay?
I understand.
Thank you. Senator Pocock.
Thank you, Chair. Thanks for being here. Minister, I want to just go to the large picture of your housing policy, your government's policies. We've heard this week that investor lending has increased in housing, has increased really significantly by 24% in the last 12 months. In the last quarter, $43 billion spent by investors buying houses. We've seen house prices go through the roof in my city. It's now over $1 million to buy a house. Mortgages are up by $70,000 in recent times. In the last year, people are borrowing more and more money. We see rents running at 2.5 times over the last 5 years of your government, the rate of wage increases. We've got 30%. The average renter is paying 30% of their income. It puts them in any definition of housing stress for their rents. Incredible. If you know any young person, any person out trying to find a rental property and facing the kind of rents they have, we see people in real dire circumstances. And yet today there are people who really are benefiting from your housing policies, but it's not the average punter out there trying to buy a house their first home or a renter, it's the big banks. CBA this morning announcing $5.4 billion in profit in the last half year. ANZ, $1.9 billion in the last quarter. Your policies are actually making the housing crisis a crisis of the dimensions we've never seen, certainly in my lifetime before. How can you defend your housing policies given every single one of these indicators where the only people who are doing well are big banks?
Well, that's an even more relentlessly negative construction of the position than your usual approach.
I've stated facts, Minister.
I allowed you to ask the question. I intend to answer it. There is, as you say, pressure in the housing market, particularly for first home buyers, and we have made, as a government, significant progress against the backdrop of a decade of inaction at the very best. Is the very best you could say of what the previous decade had characterised. 570,000 homes have been built since we came to government. 220 of those during the National Housing Accord period. Building approvals, that is new homes coming into the market, have improved for 3 years in a row, with home starts up by 11% on the same time last year. Construction costs, fundamental to getting the housing supply chain moving, have fallen from a half-century high under the coalition of increases of 17.3% down to below inflation at 1.8%. Very significant for getting housing construction moving. 220,000 first home buyers have bought a home with Labor's 5% home deposit scheme. I understand the sort of armchair criticism of that scheme made by boomers who don't need it, who own homes, some of whom own investment homes, but 220,000 people who would otherwise not have been able to access a home have accessed a home under that scheme. 25,000 social and affordable homes under construction or in the planning process, 5,000 completed. 5,000 completed. Under the previous decade of the sort of Abbott to Morrison arc of inactivity, 373 homes completed over a decade, nearly a decade. Over the short period that we have been working through this, 5,000 completed, lots more to go, another 20,000 to come under that scheme. 1 million Australians received a 50% increase in Commonwealth rent assistance. People still under pressure, but a significant change. Might look like a small change to people who have homes, comfortable incomes, but a 50% increase in Commonwealth rent assistance is a very significant contribution indeed. And because of the Prime Minister's work at National Cabinet, there are stronger renter protections at the state level that the states are busily working away at. Now, we have a plan that is about setting an ambitious national target to build 1.2 million homes. There are some people in the political system, you wouldn't want them with you in a foxhole when things really matter, because they'd try and persuade you not to go over the top. They would tell you it's too hard and will whinge and moan and carp and carry on instead of actually getting behind a national effort that is going to be hard. That is not all about what the Commonwealth does, but is about us accepting that it involves national effort from the private sector, from the investment community, from the states and territories, from the building industry itself, for all of us to do better. That is what the government's plan is. It is a well-resourced, very significant allocation from the budget, unparalleled in our history. It's not perfect, but it is a big effort. It is a big effort. It is unparalleled in our history, and it's a very strong record of achievement. There are still challenges in the housing market. Otherwise, you'd pull up stumps and not worry about it. Still problems, and we're determined to keep on with it.
So, Minister, how can you justify your government's biggest spend, over $12 billion on capital gains tax discounts, bigger than the spend you're making on rent assistance, which you mentioned, social housing and homelessness services? There's been a big conversation in recent weeks about that single appalling statistic. And I'm not going to argue with you about previous governments and their failures. Both major parties over the last 40 years have failed housing in Australia. There's very few people who are watching this who wouldn't agree with that statement. But why is your government spending more on massive tax breaks which put that investor alongside that first home buyer every Saturday morning all over our country?
Well, Senator, I suppose it's a thing about measurement and effort and statistics. You say very few people watching this wouldn't agree with your statement. I mean, I think the truth is, if we're going to be fair dinkum about statistics, very few people are watching this at all, is the truth.
People are watching the housing crisis and feeling its pain.
But drawing an equivalence between their decade of utter inaction, no effort, like precisely zero effort, zero meetings of housing ministers, 373 social and affordable homes is zero, like zero, compared to the need that is out there. This is a very substantial effort. It's not immune to criticism. We're not the kind of, it's not the previous government here that had shouted people if they criticised them. There's all sorts of things that need to improve, but this is a very substantial effort.
And Minister,
it has been very capably led, and it does involve cooperation across the system. And what is, I think, an unhelpful argument is trying to identify one element of the system and say that is going to resolve all these problems. I know that's the armchair sort of dinner party argument, but this involves increasing supply, supporting people to get a leg up into the housing system, demand measures, supply measures, overwhelmingly supply measures, cooperation with the states and territories, institutional work with the labour market, with the investment community, with the housing industry, with the states and territories to get this thing unstuck. And we're making substantial progress.
So the point of my question, Minister,
I know I can come back to you, but I'm going to try and keep to 10-minute
So
blocks.
I asked you, how can you justify your priorities with this massive tax break, which overshadows these other really significant issues, homelessness programs, social housing, and rent assistance? And you point, if I may finish, you point backwards to that mob. That excuse has a time limit on it, and it's probably 5 years, and you're past it. So I have further questions in relation to social housing stock that I'll come back to.
Well, I spent 80% of my answer talking about our record and our plans, which are substantial and has been substantial. I spent 15% of it, that's true, talking about their miserable record, and 5% reflecting on the critique, the sort of armchair critique that is advanced by some people in this place. We are getting on with the job, the biggest ever effort in this area, and that involves setting a target and fighting to get there. That is better than what happened previously, which is doing nothing and then resting on the laurels of other people's achievements.
Okay. I'm going to go to Senator Walker.
Thank you. I've just got a few questions. As a South Australian, I'm very excited about the announcement in South Australia as part of our 100,000 homes policy. I'm wondering if you can step through what that policy is going to mean for South Australians trying to get into the housing market.
Thank you, Senator. I might start, but Mr Dowie may wish to add further information. So the Prime Minister and Premier and Ministers announced this deal a little over a week ago. The total arrangement is for an investment of $801 million into new housing supply for first-home buyers in South Australia. There are nearly 7,000 homes for first-home buyers produced through this arrangement, 6,877 to be precise. But it's important to recognise there's actually a wider number of homes than that supported for the market in general. So there's nearly 17,000 homes supported in general. Some of that is being facilitated through investment in water infrastructure in the north of Adelaide and Concordia. There's loan funding from the Commonwealth to that end. Some of it is developments in Playford. Again, there's loan funding for that, and the Playford development is expected to hit the market very quickly and be constructed within just under 24 months from now. There's other programs that will be supported by grant funding, so the overall arrangement will really make a significant boost. And first home buyers will get the first opportunity for these homes. It's not a permanent opportunity for a first home buyer, but if a house is developed through this program, then it will be offered to first home buyers exclusively for a period, I believe it's 3 months in this arrangement. So first home buyers get a chance of getting access to a pretty affordable home without competition from other people in the market to really give an additional leg up to that cohort.
And I think something else that South Australians are keen to understand is how you're going about deciding which locations to invest in specifically. I'm wondering if you can step us through how you came to making that decision for Playford and the surrounding areas.
Sure. Ms Wilson, do you want to talk to the negotiation and discussion with the states?
Absolutely. Thanks for the question, Senator. Rebecca Wilson, Acting Assistant Secretary of the Housing Industry Capacity Branch. The particular projects were proposed by South Australia and went through an assessment process by the Commonwealth where we determined both value for money and that it would meet our total program objectives. So all of the projects that have been proposed thus far are in growth corridor areas where South Australia and the Commonwealth are satisfied that the homes are attractive to first home buyers and can be sold at a price that is achievable to first home buyers to meet our total program objectives. And then, I guess, as the Director General mentioned, the other benefit of these particular programs is the number of market homes that will also be delivered, which again was something that we strongly support additional housing being provided.
Thank you. Thanks, Chair.
Senator Bragg.
Thanks very much. So back to the 5% deposit scheme. FOI 4065. So one of the documents released is possible Senate estimates questions on Treasury's modelling of the 5% deposit scheme. Document 14. So what is this? Is this a dress rehearsal preparation you do for Senate estimates?
So, Senator, that document that you referred to was just a back pocket briefing note that was put together that was designed to help officials respond to any questions that might have been put about the modelling that was done in relation to the scheme.
Surely they have their own capacity to answer the questions.
Well, I think, Senator, I think it's important to put the context in which this particular document was prepared in that particular Senate estimates. You'll recall that was a Senate estimates in which you wrote to the department, I think, about 24 or 48 hours prior to the hearing, saying that you wanted to make sure that you wanted to discuss this. So in that particular case, we wanted to make sure we were prepared. So I did ask some folks to put together some material to make sure I didn't mislead you.
Okay, so it's not. Is this a usual thing that happens inside the Treasury, that you have pre-rehearsed questions and answers?
Well, I think it's not unusual within the Treasury that officials are briefed to be able to respond to the likely questions that they may receive.
Okay. It sounds a bit like the debate preparation they do in the US presidential elections.
I can't comment on that.
Well, did you play Trump?
I'm not going to answer that question.
Okay, so fine. Okay, so who actually prepared this? Maybe don't tell me names. Like, which department did it?
It would have been staff within the Department of the Treasury.
Okay, and who was it given? Who's this for?
Well, I believe that this was back pocket briefing that would have been done for myself when I was answering your questions, I believe, on the 6th of November, from memory.
Okay. Do these things get given to the Minister at the table?
This particular one, no. This would have been prepared purely...
So it's for you?
Yeah, to make sure I didn't mislead you for any question that you might have asked.
Yeah, okay. So what's happening with your role as an observer, Mr Rimmer? Are you still heading to the board meetings of Housing Australia?
I am, Senator. I was at one on Tuesday this week.
Okay. And so what was your role in that meeting?
My role was to be an observer, Senator.
Okay. And did you talk in the meeting?
I did a few times.
Okay. And were you asked questions?
Yes, Senator.
Okay. About?
About a range of matters. I mean, in general, the board undertake their obligations consistent with the Housing Australia Act, the investment mandate, the policy settings for different programs. From time to time, the board requests an opinion from me, advice from me about the policy settings that government has decided on particular measures, or about wider whole of Australian public service governance matters, including policy in general in relation to specialist investment vehicles, those kinds of matters, Senator.
And are you asked about your sort of political advice, or are you asked to give, a view that might be telegraphed to you by the Minister?
Senator, it's not my role to provide political advice to anyone.
So do you give... I mean, you talk to the Minister a lot. That was your evidence last time. So are you there to represent the Minister, or...?
Senator, I'm not there to represent anyone. I'm there to observe the board and to provide any assistance to the board that I can. Part of that role does involve assessing the direction that the government is taking on a particular issue, the direction that the Minister wishes to take on an issue, and if I can provide useful context and support to the board in understanding that, then I might from time to time do that, but it's certainly not the main purpose of the role.
How do you think the board's going?
I think the board is effective. I think it's no secret, Senator, that the board has had its moments, in the past. Some of those moments have become public in various forums. I think the board is on an upward trajectory. I think the acting chair is doing a fine job in corralling board member engagement and focus on delivering government policy objectives in accordance with the legislation and the other policy frameworks.
Okay. And Mr Tagney was appointed as the acting chair in about November, is that right?
That's right, Senator.
Okay. And what about the arrangements for appointing a permanent chair? Is that something that's done by the board or by the Treasury?
That's something that's done by the Minister.
The Minister does that, okay?
Yeah, following appropriate consultation within government as is normally the case.
Okay, so is there a panel of people is there a selection panel?
There is no selection panel established as yet on this program.
Okay, well, are you going to appoint a chair?
Yes, Senator.
Okay, when?
That's a matter for government.
Okay, so you would advise that there would be, I imagine, a recruitment agency or some sort of a service provider to assist in appointing a chair or at least a panel of
Senator,
people?
as you know, in accordance with recently agreed government policy, there are 3 pathways for appointments of this kind. There's a direct appointment, there's a closed selection process, and there's an open advertised selection process, and the decision about which of those paths to pursue is one for the Minister, Senator.
And you don't have any sense of when that might be?
I have a sense that the Minister wishes that matter to be resolved quickly and appropriately. I believe Mr Tanguy's acting appointment expires in July of this year, so clearly there's a time limit established by that fact.
Okay, so when a decision is made on the appointment process, will that be publicly disclosed?
I mean, in the normal course of events, appointments tend to be disclosed at the point of their announcement,
okay,
or otherwise through some Senate estimates process or FOI process, otherwise in other circumstances.
But your evidence is that the Minister hasn't decided whether to have a targeted process, an open process, whatever.
To my knowledge, Senator, the Minister hasn't currently made a formal decision about that matter. I think that's right.
Okay, that's very helpful. The governance issues that were canvassed in the intersection report, has the acting chair now been briefed on those issues? Because last time we heard evidence that he had not been briefed.
Senator, the acting chair is aware in general terms of the context of that report, which is now nearly, I believe, over 2 years old, close to 2 years old.
So, sorry, is that a yes or no?
Senator, my answer is my answer. The acting chair has been briefed.
He has been briefed
about a range of matters about past Housing Australia governance and performance.
Because the last estimates, he hadn't been briefed on that report. So he now has been.
Senator, you're blurring, with respect, you're blurring two concepts. The acting chair has not been briefed in detail by the people who did that report about that report.
Understand.
The acting chair has been briefed by me and by my colleagues about the general circumstances around Housing Australia before he joined the board. He's also been a member of the board for nearly a year, I believe, and so he has some awareness of the general board situation through that process.
And what about this Deloitte report? Who commissioned that Deloitte report?
Senator, I think what you're referring to is a report that was done for Housing Australia. It was commissioned by Housing Australia staff as part of what we call line 2 risk function. So we run a 3-line risk model. Second line often undertakes work where we would engage people or sometimes perform internally an assurance type review. It was commissioned prior to my time, but my understanding is that we asked Deloitte, who supplied someone to be effectively within the organisation and did some work. It produced a report as part of a normal ongoing second line assurance process.
Okay, so these issues... Yeah, okay, so the last question on this line then is, so these issues about board governance, one commissioned by Housing Australia, one commissioned by the Treasury, they're now concluded?
Senator, with respect, I'm not sure that you could characterise the Deloitte report as a report about board governance, unless I'm incorrect about that. But both of those processes are now well in the past.
Okay.
Thank you. Senator Payman.
Thank you, Chair. Good morning. In February last year, the government announced a ban on the purchase of established dwellings by foreign investors in Australia between 1st of April 2025 and 31st of March 2027. How many established dwellings were owned by foreign investors on 1st of April 2025?
Senator, that's a matter that falls within the responsibilities of other people within Treasury. I don't think officials at the room today have answers to that line of questioning. I believe it's in which group was it? We'll try and provide. If you put the question on notice, we'll find you an answer. But I'm sorry, we can't provide you an answer to that question right now.
Okay, so but does it fall within Treasury?
It falls within Treasury.
Just not housing.
Just not housing group.
Okay.
I'm not briefed about that matter.
Okay, no worries. I'll find out.
My
where
apologies.
It goes. No, that's okay. I appreciate the clarification. Thank you. Thank you, Chair.
Oh, sorry. Senator Colbeck.
Thanks, Chair. I just want to ask some questions about the cities and suburbs and urban policy unit and the urban policy forum. That now sits in Treasury, sits with you.
Thank you, Senator.
Can you give us an update on how these teams are working with infrastructure to ensure there's no duplication, or have all of the provisions moved across?
Senator, in the machinery of government changes that took effect in July, responsibility for national urban policy and national cities policy came to Housing Group within Treasury. They're now part of Mr Dowie's responsibilities and Ms Hosking's responsibilities, and we have accountability for those policy areas at the current time.
Can you tell us how you're mitigating any duplication across the agencies?
Senator, do you want to answer? Yep.
Senator, we've established a Cities and Planning Working Group with the Department of Infrastructure, Transport, Regional Development, Communications, Sports and the Arts, just to ensure that we don't do any areas of those duplications that you've mentioned, and we're meeting on a quarterly basis to ensure that the work we're doing is aligned with broader whole of government priorities but doesn't duplicate work that's being done in that portfolio.
So are the terms of reference established for that group, or is it?
Yes, Amanda Hosking, Acting Assistant Secretary of the Housing Supply Planning Infrastructure and Analysis Branch. Yes, there are terms of reference, and they've been provided to this committee as part of a question on notice that was received at the last set of estimates.
So it's meeting quarterly. How many meetings have there been?
There's been one meeting in November, and there'll be another meeting in the next couple of weeks.
Senator, if I can just add to that briefly, there's also very frequent informal interaction between Infrastructure Australia and ourselves, between the Infrastructure Department and senior officials and ourselves. As recently as yesterday, I was talking to one of the Deputy Secretaries over there. So there's, in addition to that more formal mechanism that my colleagues have outlined, there's very frequent informal engagement. Okay.
So what's the makeup of that group? Who does the committee comprise, the working group?
Yep, the working committee comprises SES Band 1s and members of their teams from the Department of Industry, Transport, Regional Development, City, Sports and the Art, and Treasury.
So how many members does the unit have?
I'll have to take that on notice, but it may depend on the nature of the meeting and what's on the agenda, how many people attend, but I'll take that on notice.
Is that dependent on the meeting, or are there formally members? Is it a formal structure that's established for the working group?
The membership, in terms of the formal membership, it's at the SES Band 1 level, or their proxy members are able to attend as needed. But as in the terms of reference, there is some flexibility with additional members invited as is appropriate.
Okay. If you could give us on notice the number and the FTE roles of the committee, please. I want to go to the Urban Policy Forum, which was established off the back of an announcement in the 2023 budget. Can you give us the meeting times for 23, 24, 25, and has it met so far this year?
I'll need to take on notice the meeting times for those previous meetings as they sat in a different
Do you know how many
portfolio.
times it's met in each of those years?
I don't have that information with me.
Has it met this year?
There has not been a meeting this year.
Has there been a meeting since the election?
I'll need to take that one on notice.
No.
There hasn't. I mean, isn't this an important forum for working on national urban policy?
Senator, if I may, urban policy is incredibly important. The city's policy is incredibly important. It's an important part of my personal background that I bring to this role. It's an important part of this whole agenda. It is fair to say that given the urgency of the housing supply challenges that are currently being experienced and that have been recorded in this discussion with senators, our focus is very much on delivering government election commitments, delivering very tangible short-term improvements to housing supply, affordability and productivity. There are some matters, and I would describe urban policy and the role of the Urban Policy Forum as one of these, that despite their long-term importance are currently a lesser priority when compared to the immediacy of the rest of the government's agenda on housing supply and affordability.
Yeah. But the urban policy does then feed into planning policy, which is where I was going to go next. And it's one of the great inhibitors. I mean, I think I've been involved in this conversation going back to not long after when the government was elected and started making implementing some of its policy with respect to this. And it wasn't Minister Ayres that was there, but it might have been the Finance Minister was talking about planning issues. And it's one of the great challenges of this whole process.
Definitely, Senator.
And urban policy is one of the foundation elements of that, isn't it? I mean, getting that part right, getting agreement about what's going to go where, and then making the appropriate changes to your planning processes is actually one of the things that will assist this to happen.
Yes, Senator, and I wouldn't want to mislead you. Planning and planning reform and getting faster approvals, getting more homes approved for development is 100% part of our focus and our prioritisation. So to that extent, I think the direction of your questions is in alignment with the work that the team are doing.
Okay, so let's go to particularly to planning then. So the last communique that I've got available to me from a planning minister's meeting is a 2024 communique. When was the most recent meeting of planning ministers?
Senator, with new governance arrangements in the Commonwealth and machinery of government arrangements in the Commonwealth, and in addition in some states and territories, there's a bit of a change in ministerial accountabilities and relationships on these matters. The Minister for Housing is intending to convene a meeting of what we're calling a joint ministerial meeting in the next couple of months. That includes people with coverage of planning, of building, really to get that full spectrum of engagement across all relevant ministerial forums. In addition, in my role, we have established a National Housing Supply Coordination senior officials meeting, I play the Commonwealth's part in that, and in many cases in the states and territories, the senior officials at the table in that conversation are also the senior officials either with responsibility for planning or very close to the responsibilities with planning. So there is a lot of engagement with planning and planning officials. I suspect there's more needed and more to come. There's a lot of reform happening in planning, as you know, Senator, and it's certainly a very important part of our role.
So there's been no meeting of planning ministers, despite the importance of planning to the overall housing exercise, since February of 2024. And whose backside is in the seat, quite frankly, is, you know, ministers come and go. We've seen that also experience, or some of us have. But the structure of the conversation in keeping things moving is critical. So
I might just jump in to say, before the officials provide more detail, I mean, that's one of the reasons, for example, following the election. I mean, I was appointed as the Minister for Industry, and traditionally within the Department of Industry, that function around building standards has been within that area. That has moved across to the Minister for Housing's responsibilities, because the architecture of the bureaucracy matters, but ministerial responsibility does matter in this area. So there are those changes are reflected in the arrangements that we have made at the Commonwealth level. There are, and as Mr. Rimmer has outlined, that some of those similar changes have been engaged at the state level as well.
So, Senator Colbeck, just to answer your question directly, when you said has the planning ministers met since February 2024, the answer is yes. The planning ministers met in August of last year, on the 8th of August, to have a conversation focused on input towards the Economic Reform Roundtable.
So in 2 years, there's been one. Since February 2024, there's been one meeting of planning ministers.
Well, their most recent meeting was on the 8th of August 2025, but there's been a number of work that planning ministers have been progressing out of session by progressing the National Planning Reform Blueprint.
So where would we publicly see advice and information in relation to that? So in February 24, there was a communique. What information is there available to anyone in relation to what's been going on since?
So there is information on the Treasury website about progress with the National Planning Reform Blueprint, which is something that's been progressed under the auspices of planning ministers, and planning ministers have actually...
Sorry, it's very hard to hear with our special friends outside. Sorry, I just couldn't hear that.
No, I was saying that... so planning ministers have been leading work under the National Planning Reform Blueprint, and there's been regular updates that have been published on the Treasury website about how states are progressing those particular planning reforms and what it is they're doing to amend their planning systems to make it easier for more homes to be built faster. And there are regular updates that are published at least twice a year on the Treasury website that takes account of the reforms that states and territories are doing in their jurisdictions to progress their commitments that were made at National Cabinet, but that planning ministers sign off on.
Because we've got a hard stop of 11:55.
Yeah, I just want to ask if you could take on notice if we can get the meetings of that last meeting and the minutes of that last meeting in August, please.
Thank you, Senator Colbeck. Senator Whitten, if you can take us to 11:55.
Thank you, Chair. I've only got a couple of questions. Could you please tell me the value of the contingent liability to account for defaults in the 5% first home buyer scheme, noting that it's listed in the quantifiable contingency liability in the MYFO, please?
So over the forward estimates, the contingent liability is $35.7 million.
5.7. Okay. It seems we're entering a rate tightening cycle. Have estimates been prepared for defaults for the case of one or two further rate rises?
Sorry, I didn't say my name. Nerida Hunter, First Assistant Secretary, Homelessness and Housing Policy Division. We work with the Australian Government Actuary on those estimates, as well as working with Housing Australia on their experience implementing those programs. We will look at the changes of conditions, the operational experience in the scheme, in the context of preparing an update for budget. So the numbers
Sorry, my apologies.
I was just going to say the numbers I provided were as of my EFO.
So there aren't any further estimates for the potential rate rises?
Not that we have considered the impact of the rate rises on the repayments of participants in the 5% deposit scheme, and we will consider the impact on contingent liabilities and publish that outcome in the budget context.
It's important to note, I mean, this program over the whole life of the program, before the government, expanded it, the payouts under this scheme have been, and I think we had this discussion at the last estimates, 0.01%. I mean, which, sits very sort of confidently alongside the assertion that actually, in terms of repayments, actually low-income and middle-income families, when given a foot on the ladder on this stuff, are absolutely very dedicated to discharging their responsibilities. So it's an unquantified liability, but I think any proper understanding of it should sit alongside, the delivery of this thus far. It's a very, very, very almost infinitesimally small rate of having to pay it out.
Yeah, I understand that, but I guess my curiosity is, as interest rates rise, does that become a much bigger number? Because
well, they've been up and down over that period, I suppose, is what I'd say. Yes, of course, as mortgage repayments increase, that becomes more challenging for people, whether they're on this scheme or are not. That is the case. It's not to be taken lightly, but over the whole life of the scheme, 0.01%.
Senator, can I provide a little bit of context? The 90-day arrears rate for this population of lenders, it actually performs much better than the general population of lenders. I think the 90-day arrears rate is 0.3% of the 5% deposit scheme portfolio, compared to 2.2% for high LVR loans in general. I believe there was some discussion with APRA last night in this committee about this matter. There is good evidence about the fact that there hasn't been a massive change in consumer behaviour in the first 4 months of the scheme that would cause any concern. The repayment rates under this scheme over the life of the scheme, as the Minister has said, are very solid. There are good reasons to believe that, and I might add, banks, as part of the normal assessment process, have to, under APRA's requirements, model for, I think it's a 3% interest rate variation before they determine loan suitability. So there are, I wouldn't want to leave you under any misapprehension, there are a wide range of protections in place against the risk that you're describing. And there's every evidence that, in fact, that risk is very low to negligible.
Yeah, look, I'm all for young people getting into housing. I hope I'm wrong. I'm worried about the direction of interest rates, and I just don't want to see them on the scrap heap or taxpayers footing the bill, is where I'm concerned. So thank you for your answers. Thank you, Chair.
Thank you. We have 2 minutes, Senator O'Neill, I think, if you can very quick.
Mr Rimmer, you gave some, I thought, very important evidence earlier on about the 12-month lag in terms of information about what's happening in the sector. Two key things that I think Australians would be very interested in hearing about that you mentioned just as headlines were the decline in costs to build and the decline in the time to construct. Could you give just a little more detail on that?
Thank you, Senator. So the Accord obviously took effect from 1 July 2024. So there's 5 quarters of real data about the performance of the housing market since that time. In that period, houses are now nearly 1% cheaper in real terms to build than they were at the start of that period, 0.9%. So I think, as the Minister said earlier, there was a period of very significant construction cost inflation. That's now moderated, and in fact, in real terms, houses are getting cheaper to build, which is obviously a very important outcome in terms of making it more feasible to build more houses and to address some of the supply issues. Houses are also getting faster to build. There's been a 10% improvement in that outcome over that same time period, and you know, while one might think 10% doesn't sound like much, that's a month off the average construction time, give or take, for a detached dwelling, which means the builder can move on to the next project faster, more houses getting built.
Wonderful. Thank you, Mr Rimmer.
Thank you. The committee will now suspend, and we will continue with this group. After the lunch break, we'll be back at 1 o'clock. Thank you. So we are continuing with our representatives from Department of Treasury, Housing Group and Housing Australia. So Senator Bragg.
Okay, thanks, Chair. So I think we're almost done with the department. Who can I ask questions about Help to Buy to? Is that the agency?
Senator, in relation to the program implementation, that would be Housing Australia.
Yeah, so 10,000 people will use the scheme. That's the target, is it?
So there are 10,000 places.
10,000 places. How much will it cost?
Senator, I'm not sure if we have a cost estimate. That would be a matter for Treasury in terms of the budgeting.
Dr. Hunter might wish to answer that question.
How much will it cost?
So, as of the 25-26 MyEFO, the total estimated equity investments under the scheme was $7.6 billion.
$7.6 billion?
So it's
Has that been revised up?
places in this year,
yeah,
and then 40,000 places in total have been committed. So the 7.6 billion relates to the 40,000 places.
Sorry.
So the 7.6 billion in equity investments corresponds to the total program allocation, which is 40,000 places.
Okay. So you've got two providers, is that right?
There are currently two panel members on the banks.
Okay. Bank Australia, they're not they're offering it through their brokers, is that right?
Senator, I might ask my colleague, Ms Ayoub, who's responsible for the program, to just answer that specifically. But I believe that is correct, Ms Ayoub.
Thank you. Ali Ayoub, Executive Leader for Help to Buy. Yes, Bank Australia does provide through the broker network.
Okay, and CBA is the other one?
That's correct.
Are they offering it through their broker channels?
Not at this time.
Do you think they will?
That is a decision for the commercial decision for the bank.
Have you engaged with them on these issues?
We regularly have conversations with them.
Senator, it may be helpful to add that we have been in a process which is yet to conclude, but we are bringing on additional lenders into the Help to Buy scheme. The intent was always to commence with 2 during a early implementation phase, and now we'll expand the number of banks that are participating in the scheme.
Yeah.
That process has also been looking at mechanisms by which there's distribution and how those lenders plan to make decisions about the distribution channels they offer.
Those lenders will have broker.
So I see one of the Housing Minister's senior staff has recently moved to the CBA. Are you aware of that?
I'm aware of media reporting, Senator.
Okay, yeah. Has that created any risks that you need to manage?
Well, Senator, no risks additional for Housing Australia.
Okay. I want to ask you now about some Housing Australia stuff. So, how much has the HAF actually spent so far?
Senator, I'll ask my colleague, Ms Harris, to come to the table. I'm not sure that we actually have the figures on hand in terms of the distributions made to date, but I'm happy to take that on notice if we don't have that figure available. Ms Harris, do we have in the brief the payments made this year?
Preeta Harris, Chief Investment Officer, Housing Australia. If you just give me a second, I think there might be something in the pack.
Senator, perhaps we could look for that information and just come back to it. I've got some colleagues in the room who may be able to find the answer.
So what is the total size of the HAF now?
Sorry, Senator, can you just be clear? I'm not quite sure.
What's the size of it in terms of the funds?
So I think that's on the Treasury side. So the balance of the HAF at 31 December 2025 was approximately 11.4 billion.
11.4 billion. Okay, that's a result of investment returns?
And the initial capital injection.
Yeah, and which was what, 10?
Yeah.
Okay, and how much has been expended? You're finding that number, are you?
So, Senator, can I add, I think it's important to provide some clarity on this. So the question that Dr Hunter's just answered is in relation to the Housing Australia Future Fund corpus, which is a matter that Treasury manages, and that sits with the Future Fund. if you're asking about distributions from Housing Australia, I can answer that question.
No, I'm asking about the Housing Australia Future Fund program.
Senator, we're not trying to be unhelpful. The Housing Australia Future Fund that is within with the Future Fund to manage has so far disbursed $500 million. That happened towards the tail end of 2024-25. 276 million of that went to Housing Australia for their implementation of the HAF program. 99.4 million went towards veterans housing delivered through Veterans Affairs. Oh, sorry, I apologise. 24 million went to veterans programs through Veterans Affairs. 99.4 million went to the Crisis and Transitional Program through Treasury, and 100 million went to NIAA to fund remote Indigenous housing. Each year, there's a minimum legislated disbursement from the Housing Australia Future Fund of $500 million per annum. And I expect the same disbursement would happen in the 25-26 year when we get closer to the end of this financial year.
So is Housing Australia on track to spend the $500 million stipulated for this year?
That's not how it works, Senator. Housing Australia is given part of the disbursements from the Housing Australia Future Fund. There's no requirement for it to be given all of those disbursements. And decisions about disbursements from the Housing Australia Future Fund corpus held at the in the Future Fund for 25-26 have not yet been made.
It's so confusing and so convoluted, I've got to tell you. So how much money is actually in the Housing Australia Future Fund? 11.4 billion?
Yes, Senator.
Okay. And of that 11.4 billion, how many houses have been completed?
So, Senator, if you're then talking about the program that falls into the administration of Housing Australia, and Dr Hunter may wish to add, because there are other programs outside our remit that are being funded by this, but we've committed funding to 18,650 homes. At the end of January, 895 homes are complete. 895, Senator.
895 completed. Okay. 895 out of the initial 10 billion, which has now grown to 11.4 billion.
Senator, there are other programs that have built housing, as Mr Langford indicated, that are outside Housing Australia's territory that add on top of that 895.
Okay. What about, so you're saying 889 completions. So what is the target for the Housing Australia Future Fund overall? Is it 50 or 40?
So the Housing Australia Future Fund and the National Housing Accord facilities that Housing Australia manages have a target of 40,000 homes being made available over 5 years, so by a period by 30 June 2029.
29. And so how many have been built so far?
So, Senator, as I just mentioned, 895 have been delivered.
895 out of 40,000. Do you think that you'll get there?
We are forecasting completions, and with the release of round 3 and a very strong market response to that, we forecast that there will be completions and hit the target.
Okay, and that includes some properties which have been acquired?
Well, Senator, we've covered this.
I think you call them turnkey.
So, Senator, for the avoidance of doubt, and happy to cover this again, the Housing Australia Future Fund facility and the National Housing Accord facility allowed for applicants to make homes available by 2 delivery mechanisms, one where the applicant is delivering it themselves and one where the applicant is partnering. One where, no, Senator, sorry, where the applicant's delivering it themselves, that is not acquiring. Where the applicant's working with industry, we reference that as turnkey.
Okay.
You're at 9 minutes. I'm going to do 10-minute blocks. So do you want to finish off this?
Okay, so what do you call turnkey?
Well, Senator, it's an arrangement where the applicant, so typically if for the purpose of this, I'll talk about a community housing provider, will go to a developer who has a project that can deliver suitable social and affordable housing, and they will form an arrangement with the developer and say, you take the development risk, and when the home is completed, we will take ownership of it, and there'll be a payment for that. And then it is what we call turnkey, because the development risks up to the stage where you can turn a key in the lock is allocated to another party.
So is this another way of saying what Minister Gallagher said a while ago about acquiring and converting, or is that different?
Or Senator,
everything here is so complex. I'm just trying to get some plain English understanding.
Yeah. So. Senator, I can't go to what was in the mind of the Minister. I'm not going to speculate on that, but we've covered a number of times that it is a very normal arrangement for the delivery of social and affordable housing for a community housing provider to go to industry and say, I'd like to have homes here, and then form an arrangement for that to be delivered by the development sector, because that is a set of risks.
Because they're already building them, right?
No, Senator. It could happen at different points in the life cycle.
They could be building?
So the construction on a project may have commenced, but in many large-scale projects, construction will commence on early stages, at different stages, before the balance of the project can be delivered. But for the absolute avoidance of doubt, we're talking about new residential properties that have not been lived in, and the community housing provider has gone and made an arrangement with industry for the development industry to do what it does very well, which is take development risk.
Yeah.
I'm going to rotate the call. Senator Roberts.
Thank you, Chair. Thank you for appearing again today. You undertook at the last hearings to answer on notice how many borrowers under your 2% and 5% deposit guarantee scheme have exited since the program started. That was question on notice 458. That should be a number you have to hand very easily. You haven't answered it in 9 weeks since the hearing. Why not?
So, Senator, I'll ask my colleague, Ms Jarman, who's just come to the table, if we have that information to hand. As to the delays, we apologise, but there may have been some delay if we didn't have that information to hand.
Thank you.
Senator, sorry, can you repeat exactly what information you're after?
You undertook at the last hearings to answer on notice how many borrowers under your 2% and 5% deposit guarantee scheme have exited since the program started. That was question on notice 458. I'd like the number, please.
That have exited? Yes, we do have that number. Of the 185,000 guarantees that have been issued since the launch of the scheme, 45,837,000 of those have discharged.
Okay, thank you. You told me at the last hearing there were only 11 defaults out of 250,000 guarantees issued. The actual arrears rate on banks' loan books is around 1%. That's 227 times higher than your claimed arrears rate of 0.0044%. Do you accept that your number is almost statistically impossible and only appears good because you don't actually track the people who exit the scheme? Once they're gone, they're gone.
Exiting's good.
You don't track them once they're gone.
This is people who have
don't try and change the topic. I'm asking the question.
These are people who have bought a home under the scheme and then sold their home, and then moved on to their next home. That is the foot on the ladder that the scheme is designed to provide.
Minister Ayres, at the last hearing you said...
That's what it's for.
At the last hearing you said that people who are facing hardship can't refinance. Do you know that that's false?
What do you mean?
People who are facing hardship can't refinance is what you said. That's false.
People who are facing hardship can't refinance.
Do you know that that's false? That's what you said.
Well, I don't know what context I said that in. You're moving,
Can you update me?
You're moving from one proposition, demonstrably not the case.
And you're changing my proposition, so I'll get on with it.
Which is that it's a bad outcome.
Why are you running from this?
No, I'm running to this. I'm running to this. This is a good outcome.
You changed my first
This is a good outcome. I'm sorry if you're confused about it. This is a good outcome for young Australians. It's a good outcome.
Can you update me?
Buying a home, selling a home, buying a new one, good outcome.
Can you update me on your latest percentages for in advance, on schedule, arrears and hardship?
I can do that, Senator.
Thank you.
So as at the end of December, 0.3% of the portfolio was in 90-day plus arrears, 0.8% under hardship arrangements, 26% of the portfolio were on scheduled repayments, and 73% were in advance of their repayment schedule.
Thank you. Do you also have the actual numbers each of these percentages represent?
I do.
Could we have them, please?
Sure. So on schedule was 33,134. In advance, 93,104. 90 days in arrears, 336. And in hardship, 1,000. There is another category there, Senator, just for the completeness, if you're adding up to the total number of guarantees. In arrears, 30 to 90 days, so early arrears, there's another 347 customers there.
And how many total guarantees are those percentages of? Is it less than the 250,000?
So the 250, which is now the number, that's the Australians supported under the scheme, but that's there's 185,000 guarantees we've ever issued, but only 127,000 of those are active in the book at the moment. The rest of those have already discharged out of the scheme.
Okay, thank you.
Senator, I gave evidence earlier in the day that the 0.3% 90-day arrears rate is better than
I heard that.
the other relevant arrears rates.
Thank you, I heard that.
I also should have said, Senator, just for the sake of completeness, people exit the scheme if they sell their home. They also exit the scheme when they hit the 80% loan-to-value ratio. That is, they come in at 5%, and they make repayments that pay the 15% gap over time, and then they're considered to have exited the scheme. That's also a good thing.
Thank you. How many 5% mortgages that you got first-home buyers into do you expect to default if interest rates are raised 3 times this year?
Your One Nation colleague asked the same questions about an hour and 3/4 ago.
He actually said if we are entering a cycle, I want to know what would happen with 3 interest rate rises.
Senator, I don't believe we have modelling for that proposition that you're putting forward.
Thank you. Last question, Chair. Do you, as the administrator of the 5% deposit guarantee, provide first-home buyers with any warnings about the risk of a 95% mortgage?
I can answer that.
Yep.
Yes, we do, Senator. So as part of the application process, we've got an information guide. That guide clearly outlines what the guarantee is and how the guarantee is there to protect the lender and not the borrower, and also outlines the obligations of the borrower in terms of repayment of the mortgage, and that the guarantee, there will be circumstances where the borrower is still liable.
Okay, thank you. Could I have a copy of that on notice, please?
Sure.
Thank you, Chair. That's it.
Thank you. Senator Pocock.
Thanks, Chair, and thanks, everyone. I want to go to the question of social housing, which is currently at record lows, and the wait list for public housing is at record highs. Around 190,000 households, are currently on the public housing wait list. Many are in very severe need. The government's plan is to support at most 55,000 households, 55,000 new social and affordable homes, and only for the next 25 years via a range of different programs. The scale of delivery does not match the scale of demand. In other words, Labor is housing only a fraction of the people waiting for housing today, let alone trying to account for the growth in those wait lists, which we know are going to get much longer. Does the government accept that the planned social and affordable housing delivery falls well short of the current measurement of need?
It's a question for me, Senator.
Yes, it's a question for the government.
The government has a $45 billion Homes for Australia program. Under that scheme, the HAF is allocated to build and deliver 55,000 social and affordable homes by the end of the decade.
We just heard 40,000, of which 895 have actually been delivered.
So 55,000 homes by the end of the decade, 895 very early in the program are completed. I'm just searching for the figures here.
We just heard
8,000 of those in planning, nearly 10,000 under construction. So nearly 900 homes complete, nearly 10,000 under construction, an additional 8,000 homes in planning, so a pipeline of homes over the duration of that program that will deliver more homes from the Commonwealth support than have been delivered for a very, very long time.
So we just heard, this is not my question. My question was about how your delivery is going to be outrun by the massive growth in but I just want to check.
Well, broadly,
I've heard 40,000. The HAF is
sorry, 40,000 is the HAF's contribution.
Okay.
15,000 from other programs.
Okay. So, how does the Treasury have an estimate for how much the public housing waitlist will grow over the next 5 years?
Senator, the Treasury doesn't estimate that number, but I don't think there's any disagreement with your basic proposition that the provision of social housing by states and territories and the support from the Commonwealth towards social housing is having a hard time keeping up with demand for social housing. There's no doubting that.
So you do no analysis which looks at that growing gap, which you acknowledge, in Treasury?
Well, Senator, that's not what I said. We do a whole range of analysis about the future of social and affordable housing, as you would expect. But we don't have the specific number that you just asked for.
Could you take on notice to have a look at whether you have the capability to produce that analysis?
Sure, we can do that, Senator.
Thank you. I want to turn now to the National Housing and Homelessness Plan. This has long been promised by your government, Minister Ayres. It is one of the critical recommendations out of Paulson, Milligan and Yates's book, which was launched by the Minister late last year, a fantastic primer about what's wrong with the system and what to do about it. Its primary recommendation towards the end is for a concerted strategic plan for housing. No more patchwork of programs which make the problem worse in many cases and don't deal with the quantum or nature of the challenge. So, Minister, I'll try again. I asked it last time. Given this is a matter for government, when will we see the National Housing and Homelessness Plan?
So, as I understand it, 1,700 participations in
yes, you told us that last time
on that plan. Well, I reserve my right to answer the question. If there's not an opportunity to answer the question, I'm not sure what the purpose other than the clicks is to ask it. Right, 17, like a very extensive process. Government is considering the plan, but our focus is on delivery. As indicated, 55,000 social and affordable homes, 40,000 of those being delivered through the HAF, nearly 900 built, people living in them. 10,000 under construction, 8,000 in planning. That is the Commonwealth's contribution here, as Mr Rimmer has said. There is also the work that has been undertaken by the states and territories, including a recent announcement in your home state. The drivers of, we are attacking the drivers of home unaffordability by aggressive and ambitious plan to build more homes in the private market, and also, absolutely conscious effort to lift wages and spread employment in the economy. Like these are that we have a bold and ambitious program for this work. It's been unmatched in living memory.
Minister, you have repeated exactly what you said last time I asked this question, and we're going to be here, Chair, I'll just give you notice, a long time if we get answers that just repeat what we have heard already 3 times this morning. Can you tell me, Minister, what your expected time is for the delivery of the National Housing and Homelessness Plan?
Well, the answer I gave you was true then, and it's as true now. Our focus
No date.
Our focus is on delivery. There is a careful consideration of a broad-ranging consultation process around the plan, but our focus is on delivery, and my answer is not entirely the same as it was last time because the numbers have got bigger.
But
the delivery has got bigger.
My question is for a date when we might expect the national, which your government has promised, and which we see as a real priority for fixing. I'm just asking when we might expect the outcome of that consultation. It's a very simple question.
And I've given you my answer.
You haven't given me any answer at all. No indication of when we might expect that plan.
The government's considering it.
I'll move on to the NRAS.
Because people don't live in a plan, you see. You don't.
Minister, your government prioritised the plan,
900 homes,
and I'm asking you when you're going to follow through on it. It's a perfectly reasonable request.
10,000, 8,000 pipeline of homes. That's what we're doing. They don't live in glossy reports. They live in homes.
The National Rental Affordability Scheme, NRAS, was designed to provide affordable rentals to people on low incomes, and it's set to end in June 2026. The government's own numbers show that 4,500 affordable homes will exit NRAS this year, the final lot of the more than 36,000 affordable homes that have been phased out of the scheme over the past decade. We know we're in a rental crisis, 2.5 times faster rent rises than wages. Over the last 5 years, things are not looking good the year ahead. Falling real wages and probably massively increasing rents of the scale we've seen. And the NRAS rentals will take years to be replaced by the 40,000 social and affordable homes set to be built under the HAF, which is, as we have seen, incredibly complicated, very slow. When I've been briefed by people who are actually part of this scheme, it's a spaghetti junction whiteboard about the complex nature of the financing for this scheme. So what is the government going to do now about the shortfall of affordable rents created by these gaps in housing policy?
Well, as you see, and I'll ask officials to answer on the detail. Complicated it might be on a whiteboard. I mean, honestly, whiteboards aren't really our specialty, but complicated it might be. It is focused on making sure that the machinery of government and our partnerships with the states and territories and our work with the private sector development community delivers these homes. There are no small achievements so far on that front. Lots more work to do, but a plan to deliver in terms of the work that Mr. Langford is leading. A plan to deliver that work, work across more broadly in government. We talked about the Commonwealth Rent Assistance before, and of course. I heard what you said about wages. We have had consecutive month after month, quarter after quarter of real wage growth because of changes that this government made in the industrial relations system. That means, in contradiction to where we were 4 years ago, when real wages had fallen year after year after year after year as a deliberate design feature of our opponent's system, that workers' wages are growing. And as inflation lifts and falls, that means that they have grown over time. That is a good thing. I want to see that in the bargaining system. I want to see more people in good jobs. I want to see more homes in the private market. I want to see more homes that we're building here. The NRAS was scrapped by the last government. Like that's what they did. It was a sort of less than zero contribution in terms of housing. We are focused on delivering those 55,000 homes that we've been talking about in this part of the market. But I might leave it to the officials to answer on the detail.
Just to pick you up on the workplace issues and the wages issues, there are now 7 million renters. A third of Australians are renters. They are renting way longer than the historic averages. 3 million households doing that, and they have faced 2.5 times faster increases in their rental than their wages over the 5 years of your government. I'm all in favour of real wage increases. But to see that what these 7 million people are copping in terms of rents is a real worry. And to see the decline that we experience, and I admit, I agree, there are a range of people who have to take responsibility here, but how are we going to make sure those struggling households get the affordable rental properties when their progress is so slow? So thank you, Mr Rimmer, if you're going to pick that up.
Senator, just to make 2 quick points. I mean, the Minister's referred to the decision to end this program was made over 10 years ago now, 2014-15 budget, and around 90% of NRES properties have already exited the scheme. At the same time, the government, this government has a plan through programs that you've heard about today to rapidly increase supply through other channels of social and affordable housing. 5,500, 5,600 of those already delivered, and a large number in the pipeline. That's where the current state of affairs is at with NRES.
I'm going to have to rotate the call, but we can keep coming back. Okay,
thank you.
And I just, so Senator Bragg.
Okay, so Housing Australia. Yeah, you're still there, that's good. So there was an order for production of documents which related to board meeting minutes from last year. Who handles that at Housing Australia? The OPDs are directed to the ministers, so that goes to you, the department, doesn't it?
Yes, Senator.
So do you deal with that, or you have someone who deals with that?
We deal with that, yes.
Yeah, who does that for you?
Ms Hunter was...
Dr Hunter?
Dr Hunter, I apologise.
Okay, so you dealt with that, Dr Hunter?
I was on leave, but the team did
That's
deal
not a
with
crime?
that in my absence, yes.
Okay, your team looked after it. Okay. So the process is that the minister is obliged under the Senate rules to provide documents. You dig them up and you send them to the minister's office, do you?
Yes, Senator, and we provide advice about possible claims for PII along the way.
You give advice. Who makes the decision about what's redacted and what's not?
It's the minister's decision what she wishes to put forward to respond to an OPD.
Okay. In this particular case, this OPD was given to the media some weeks before it was given to the Senate. But that's a judgment that I imagine is out of your hands.
It's certainly not something that we're part of,
Yeah.
Senator.
So you just give the documents in their final form to the minister's office and they do the rest?
The normal course of events is that we provide the advice and the documentation. We provide that in the form of a letter from the minister to Minister Ayres, representing her in the Senate, and then Minister Ayres forwards that in due course to the tabling office.
Or to the AFR, yep. One or the other.
And the tabling office make the necessary arrangements to have it in front of the Senate.
Okay. But I think you've answered my question. I just wanted to know what the process is, and it's nothing to do with you, that last piece. Okay. The funding profile, where's the funding person gone?
Sorry, so Senator, you asked me about disbursements from the fund. If you want to come back to that. So in the life to date of the Housing Australia Future Fund facility and the National Housing Accord facility, there has been 214,654,000 of disbursements for concessional loans and $691,000 of disbursements for availability payments, specifically noting that availability payments are only paid from the point that a home is completed and enters what we call operational commencement. That is, that somebody starts living in it and therefore the availability payment is doing exactly what it says on the tin. It is being paid in return for that availability of that home for social and affordable housing.
So in my info, page 65 said that the government was reprofiling the Housing Australia Future Fund disbursements and funding to align with the delivery model, which combined with additional support is expected to increase payments by $4.4 billion over the life of round 3. but expected to decrease payments by $742 million over the 4 years to 28-29. So what does that mean?
That'd be a question for Treasury, sorry, Senator.
Senator, I can answer that. As you would be aware, there's money provisioned from time to time in contingency reserve associated with government commitments, government announcements. That's often done on a fairly preliminary estimate about the profile of disbursements. As the policy is developed further and becomes more certain, and the precise detail about timing of disbursements becomes more apparent, it's often reprofiled across the forward estimates and the medium term in exactly the way that has been done here.
Housing Australia's borrowing cap has increased?
Yes.
Has it increased from 26 to 44 billion?
Yes, Senator. That reflects the as you're aware, a part of Housing Australia's business is in the form of providing loans. Those loans have obligations and guarantees associated with them that require documentation and acknowledgement through the process set up by the
so
Act.
you can now borrow an extra 18 billion as a result of these changes.
If I may add, Sir,
it's a cap though, right? You don't have to borrow it, it gives you a cap.
Yes, and Senator, if I may, just for absolute clarity, so it's what's referred to in the investment mandate as the liability cap, and it does encompass where Housing Australia is raising capital for the bond program and the guarantee for that, but it also encompasses the future value of contracts entered into. So the availability payments, which are the 25-year funding arrangements, the primary means of funding, the total nominal value of those has to fall within the cap because it's
You've got to borrow the money. I get it.
It's not to borrow the money, Senator. It's to guarantee to third parties that is a liability that the government will meet if Housing Australia is unable to meet it.
But I thought that was cash. I thought that was cash, not guarantees.
Sorry, Senator, maybe I'm
I thought it was the total borrowing cap. So you're talking about...
it's a liability cap.
Liability, are you?
It's the guarantee for Housing Australia, the limit on the guarantee.
It's a guaranteed limit, okay, so it's not necessarily cash.
It's not.
It's a contingency.
It's a guarantee that Housing Australia can enter into arrangements that are guaranteed by the government up to the value.
So where does it sit on the balance sheet?
It's not on the balance. It's not on the balance sheet of Housing Australia, Senator. It's a
liability. It's a liability, isn't it? Or is it a contingent liability?
Sorry, Senator. Are you talking about from Housing Australia or from the broader government sector?
The Commonwealth.
I defer to my colleagues in Treasury in that respect.
Senator, availability payments are reflected in Commonwealth budget papers.
Sorry, it's just not clear to me whether this cap, are we talking about a borrowing cap or are we talking about a liability?
It's a liability cap.
So it's not necessarily borrowings. It's a guarantee.
Not necessarily. Yes.
Is that right?
Senator, so there are two parts of Housing Australia's business that are relevant, and Mr. Langford will correct me if I'm wrong. One part is Housing Australia taking on borrowings in order to provide loans to the community housing sector as part of the affordable housing bond aggregator.
Okay, even I can understand that, yes.
The second part is Housing Australia enters into long-dated agreements with market participants.
Which is a guarantee.
And there is a Commonwealth guarantee over those long-dated commitments.
So, sorry,
you're saying this is an amalgam, are you?
So if I can add to Mr Rimmer's explanation, Senator, those long-dated contracts are for the payment of cash over the course of 25 years. Yeah. The value of that contract is guaranteed by the Commonwealth by virtue of the liability cap. Because Housing Australia is a corporate Commonwealth entity, third parties are not directly contracting with the Commonwealth, and in order for them to have confidence to raise money themselves, to go on and build, to do things they need to do to deliver housing, they rely on the guarantee as a means to say, well, if we can look through Housing Australia to the Commonwealth and we will know we'll be paid that cash over the course of the next 25 years. So the liability cap includes loans we borrowing, but also those long-dated financial commitments for real cash payments that will be made over the course of 25 years.
Okay, so we're talking about a $44 billion cap, right? Which doesn't require legislation?
Sorry, Senator, I'll defer that question to Treasury.
I mean, this is just, some of this stuff is so confusing. I mean, this is the trouble with these off-budget things. I mean, we're just trying to get to plain English explanations of what the taxpayer's on the hook for. It's unclear to me whether that $44 billion is... It sounds like... I actually just want to know what you're doing with it. So are you borrowing money and are you offering guarantees as part of that cap? Or are you borrowing the money, or are you only doing guarantees for that amount?
So, Senator, in terms of the what enables Housing Australia to do, we can borrow money under the Affordable Housing Bond Aggregator.
Yeah, which is not part of this, or is part of this?
It is part of this.
Right.
So the liability cap is an explicit guarantee to bondholders.
Yep.
That in the event that Housing Australia defaults on its obligations to pay those bondholders, the Commonwealth guarantee can be called upon. So that's...
You're going to have to explain it again.
You're almost at time.
Okay, well, I'm just trying to get to the bottom of this spaghetti
rotate again, yeah.
situation the government set up. So can you just explain it again, please, in very, very simple terms?
I'll give it a go, Senator.
So the question is, can you please explain the breakdown of the $44 billion cap that the government talked about in MyEFO? What is it comprised of?
So the first part is the Affordable Housing Bond Aggregator, which has been in existence since 2018.
Yep.
And that's a program where...
guarantee scheme?
No, Senator, that's sorry.
It's issuing of bonds.
It's where we issue bonds in order to provide funds that we lend to community housing providers.
How much is that worth at the moment?
I'll see if my colleague can just give me the current drawing on in terms of how much the value of the bonds that we've issued.
Yep. So we've got that one. Then what's the next one?
So the next part of it, Senator, is the value, the total nominal value of the contracts that we are entering into under, if I may use the shorthand, HAF for availability payments. And that is a nominal value of a 25-year promise to pay when conditions are met.
And these are contracts, right?
They're contracts we enter into that promise to make...
Contracts to pay in the future.
To make regular contractual payments.
That's two. That's the second thing. Anything else in that?
I believe they're the two main components, Senator, that fall under the liability cap. And I've got the information here. Currently, on issue, there are a total of 7 bonds for $2.839 billion.
$2.83 billion, yeah.
And then we are in the process of making additional lending commitments through the Affordable Housing Bond Aggregator to community housing providers who may be using that for HAFRA projects and other projects.
But $2.83 billion is not much of $44 billion. So that means that a lot of the money, a lot of the availability payments come out of this particular program, don't they? Out of this particular guarantee scheme. I mean, it's not a guarantee scheme, it's a promise to pay in the future.
It is a guarantee from the Commonwealth to Housing Australia as an entity that allows third parties to place reliance on it, so that third parties contracting with Housing Australia, if we fail to pay, they could call upon the guarantee.
Yeah, so it's an instrument, effectively an instrument where you promise to pay, they can hold that as a good piece of paper effectively, and it's backed by the Commonwealth Government.
As it was set up in 2018, as it was then the NIFIC, that the liability cap exists to give confidence to the bond market and others who are contracting with Housing Australia that the Commonwealth stands behind the credit, so to speak, of Housing Australia.
Okay, I'm getting there, yeah. Okay, you got to rotate, do you?
Yep, I do. Right. Thank you, Senator Pocock.
I think this exchange is really illustrating how incredibly difficult it is for people who spend a lot of time thinking about this to understand what is going on. the average person, and you tell me, Minister, they're not watching us, but they're certainly interested in the housing crisis and its solutions. And this is an impossibly complex program. And I just want to have another go myself on this. I want to clarify my understanding of this. Is it correct that disbursements for round 3 of the HAF are still included in the balance of 11.2 billion and that they haven't been moved to the HAF special account? Is that the case?
That is broadly the case, Senator.
That's true.
Yeah.
Is it correct that disbursements from the HAF have been and will be used only for grants and availability payments, i.e. not concessional loans?
That's correct.
What pool of money is being used for concessional loans then? Because as I understand it, there's now the doubling of available concessional loans. Have I got that right? To 20%? Okay, so where's that money coming from?
Up to a capped amount of 140.
That's the capped amount. Where's that coming from? How do we know what's going on there?
So to support the commitments from Housing Australia, government undertakes a range of funding decisions, which I would describe as kind of largely, they're complex, but they're largely kind of ordinary funding decisions. So the concessional loans is a separate decision of government. In MyEFO, government announced 2.6 billion in concessional loans for community housing. That brings, I think, the total commitment to concessional loans to 4.5 billion. So that is appropriated separately from the HAF Future Fund arrangements. In addition, government has commitments to release funds from the HAF Future Fund and to pay into the special account, and as Mr Remmer said, a small number of other acute housing programs. So the funds that are released from that Housing Australia Future Fund are provided to Housing Australia in addition to the concessional loans. And then what was announced at budget in the MyEFO, if you read the measure, government also made a commitment to provide new funding for availability payments that will commence in 2037-38.
Can you just tell me new funding, what is that? More money to meet the obligations of the existing 25? Okay. Why has that been necessary?
So at that stage, so the HAF will make, so there'll be disbursements from the HAF through to Housing Australia, and then around that period, 2037, our estimate is that with the contracts that Housing Australia has at that time, they will require additional supplementation to meet those commitments. And so government made a provision for that supplementation to commence from 2037.
So extra
3.1 billion.
Availability payments of 3.1 billion extra and additional access to concessional loans to keep the HAF afloat. Additional to what was said. Is that correct?
So I wouldn't describe it as to keep the HAF afloat. I would describe it as
the goals
enable
of the HAF?
Housing Australia to meet the commitments that they have.
Yeah.
And at that point, there'll be, our expectation is 40,000 homes that are receiving an availability payment.
But that 40,000 homes has required, within a year and a bit of its announcement, additional top-up to meet the availability payments and to sweeten the pot to get community housing providers and their financiers to the table to build these 40,000 homes. Is that a mischaracterisation or is that correct?
Senator, without trying to fall foul of the attack that this is complicated, there are a whole range of assumptions built into those forward estimates about the rates of return in HAF, about the timing of HAF availability payments, about when houses will be complete under HAF, and all of those will move over time. And the current best accounting treatment of those moves is what you've seen reflected in MyEFO. And over time, that may change. It's the nature of these long-dated commitments that some of the assumptions changing over time may cause the need for them to be reflected in the budget and accounting treatment.
So I just want a couple more questions on this. In response to a question on notice, SBE 519, the department confirmed that the Social Housing Accelerator program, $2 billion, funds a permanent increase in the supply of social housing. So it's just a straightforward payment. Builds houses. Not 25 years out payments and a whole lot of unknowns about what it'll actually cost, which are really concerns in an amazingly complex picture that people on this side of the table and possibly a few others in the room struggle to understand. Here we have a program which has built and amended uninhabitable houses and made a difference immediately, up to 5,000 houses, I understand. Why aren't we doing more of that and less of this complex stuff, which is so budgetary complex but also so slow to deliver?
Senator, some of those go to matters of policy that I'm not going to give an opinion on, but the Social Housing Accelerator program partially meets the obligations that HAF completely meets in many cases, in the sense that HAF, in the hands of a community housing provider, funds the construction of the home, but then the ongoing operation of that home for 25 years, the repairs and maintenance that are necessary in year 12, the rental subsidy that's necessary in year 17. The nature of the arrangement with the states under the Social Housing Accelerator program is that the states wear some of the construction cost risks and some of the ongoing operational cost challenges, or the community housing sector meets those. So
they're not apples and apples.
They're not apples and apples.
But you also don't end up with a house at the end of a lot of the HAF programs. They are sold off at the end to make the books work for a lot of these places. So there is a real problem about perpetuity too, isn't there?
Senator, the HAF program will result in the transfer of billions of dollars of assets into long-term community housing stewardship. It's a program that will significantly enhance the balance sheets of community housing providers over time. Obviously, there's judgments to be made about the extent to which cost is incurred now versus the certainty of the long-term balance sheet impact for community housing providers. They're matters for government, but it's not the case. Let me retrace my steps. It is the case that the Housing Australia Future Fund program will result in long-term assets in social housing.
Can you tell me what proportion of those 40,000 homes will still be in public ownership, community housing ownership, in 25 years?
We can't tell you that right now, Senator.
You can't take a guess at that? That's a pretty important question.
We can't, including because there's still an active procurement process going on for 21,000 of those homes. Okay. But no doubt we'll keep talking about this as that procurement process
Can you give me an
develops.
estimate for the 21,000 that you have already signed contracts or you have programs afoot to deliver?
We can take that on notice, Senator.
Thank you. This is a basic question. Is it correct that the principal $10 billion investment in the HAF will not be spent on social and affordable housing, as in there is no plan to use this original investment itself on availability payments or any other payment? Have I understood that correctly?
That's not correct, Senator, in the way that you've just characterised it.
Could you explain to me then how it is viewed?
The $10 billion original capital, plus the investment earnings, plus the concessional loans that you've described, all go towards either Housing Australia's delivery of the 40,000 or in a couple of other cases to other acute housing programs that are contemplated in the Housing Australia, in the HAF Act.
So, make sure I understand this. At the end of 25 years, there will be nothing left in the bank. The $10 billion are gone, the investment earnings are spent. Is that correct?
Depending on a range of matters, including investment performance, the future funds management of the principal, and all of those kinds of things, that corpus will run down over time.
Okay, thank you. Thanks, Jen.
Senator Bragg.
Okay, so I think we've dealt with the financial issues. I think just if you could take on notice just the details you talked about before about the contents of the $44 billion commitment, let's call it a commitment, then that way it covers off those 2 programs and any others that might fit into it.
So if it's helpful, I can give you, colleagues just give me the numbers here if you'd like it now.
Okay.
So the forecast that goes to the makeup of that is that we forecast the affordable housing bond aggregator loans to be $14.6 billion in total, and the nominal value of the 25-year availability payment contracts to be up to $28.7 billion, with a contingency amount of $8.7 billion at this time, noting that it is not a cash commitment, it's simply backing the commitments we're making.
But some of them are cash commitments because they're payments to be made in the future.
Sorry, the cash commitments we are making, the liability cap is not a cash commitment.
The liability cap is not a cash commitment. Yes. Okay. Before we go to the chair and some other issues, who does the briefings for the ministers when they're asked housing questions in Parliament? Is that a Treasury thing?
Treasury supports Minister O'Neill on that matter, Senator.
But that's not Housing Australia?
No, Senator, although we would very often collaborate about material that was required to support the Minister in public events.
So if a minister's asked how many houses have been completed by a program, that information is provided by the Treasury to the Minister?
Yes, Senator, working closely with the Minister's office.
Okay. So the Housing Australia Future Fund, the evidence was that it's completed 880 odd houses today. That was the evidence. Last week I asked Senator Wong how many houses it had completed and she said 5,000. So I'm just wondering if you could explain the discrepancy between what Senator Wong said, which was 5,000 houses built from the Housing Australia Future Fund, and what Mr Langford said today, which is 880.
Senator, it's 895 in the Housing Australia program.
895, but not 5,000.
Talk about the total program.
Yeah. Senator, I haven't seen the transcript of that engagement in the Senate, but the government has a range of social and affordable housing commitments.
No, the question was very clear. I asked the question. It wasn't about other programs. It was about the Housing Australia Future Fund.
Senator, what I can say is that there are 5,660 social and affordable homes already delivered by this government.
Yeah, that wasn't the question.
I can't comment on that.
I'm sure that's a talking point that was provided, but it was incorrect. So that's okay. It's not on you. We'll write to Senator Wong and ask her to correct the record. And misleading the Senate is not a great approach.
Well, you know, I'm not going to take your word for it on that.
Well, he just told you 890, not 5,000.
And that is the number that I gave you just a few moments ago. 5,500 homes delivered across the Commonwealth's housing programs, including those supported by the HAF. That is, I imagine, the answer that Senator Wong gave you. I will have a look at the.
No, she said 5,000, not 500.
Well, I'm saying 5,500. 5,500, so more, not less, more.
Yes.
And the problem. The problem with your argument,
here we go,
right, is
political speech time.
You start from a small number and every day it gets bigger. Every day it gets bigger. And I understand all this is very complicated for you. And maybe this is the new Liberal Party, you know, if you don't know, vote no.
I've got the timer on. We'll time you.
If you don't understand it, you're opposed to it, we'll try and help you understand it. That's what we'll try and do.
Look, I'm happy to be told that I'm stupid, but I really don't think these political speeches are all that productive. Just trying to get to the bottom of things. Transparency is a terrible thing, isn't it?
Well, we're trying to help you, Senator.
Well, I really appreciate your kindness.
Well, we're just responding to our responsibilities. It's not kindness; it's our obligation.
Well, I think we'll try and move on now. Can I have
and hang on a tick. Hang on a tick. Specifically on what you said, claiming that somebody misled. This is what Senator Wong said.
40 seconds.
5,000 social and affordable homes have been completed through the Commonwealth programs. A further 25,000 are in construction and planning, and she goes on.
Have you got
that?
The
was her.
Why didn't you read the question?
That was her answer.
Why didn't you read the question?
Well, this is the words that she said from her mouth to you, and you trying to characterise that.
No.
Again, in a sort of smear. She said 5,000 social and affordable homes have been completed through Commonwealth programs.
Well, I asked her about the Housing Australia Future Fund. You know that.
You get a question, then you get a supplementary question, then you get another supplementary question. Just use them better.
All right.
That's gone for 1 minute and 20 seconds. I'll press pause.
I'll add another 1 minute 20 onto your time, Senator Bragg. And I do note we are under time pressure. Okay. We are more than 2.5 hours behind.
Sure. Well, I just have a few questions. So, I want to ask the Chair, Mr Tagney, some questions, and it might be useful to get Ms Armour to come up as well, if that's possible. So I just want to go through some of these board issues. So you've now been briefed on these issues that were canvassed in the Treasury report done by Intersection.
I've been made aware of the report, Senator.
Yep.
I have read the redacted version of the report, which I received after the OPD production of same. So my exposure to that report is limited to the reading of the redacted version on the 15th of January.
Okay, and Ms Armour, you've been on the board for the whole time that these things were being undertaken in the report, haven't you?
I joined the board late October 2023. My first board meeting was November 2023.
And you've also been briefed on the recommendations from that report?
I've seen the same document that you've seen.
Yeah, okay, and so what confidence can you give the community now that the recommendations that were made about these matters have been addressed and there are better risk management protocols in place?
Sorry, I haven't seen a report that says anything about risk management protocols, Senator. I've seen a report that's heavily redacted, but that says that the matters raised by the complainant, whomever the complainant was, were in relation to the former chair, were not substantiated. That's all I've seen.
So what about the governance issues at Housing Australia?
What governance issues are they, Senator?
You don't think there are any governance issues at Housing Australia?
I'd like to know what the governance issues are.
Well, what did the Deloitte report say about the governance at Housing Australia?
So the Deloitte report was a review that was done real time during the half round one at Housing Australia's request, and it made some observations about things that need to be addressed. For example, it made an observation that we needed to update our board charters. We have updated our board charters. It made an observation about board members who are not part of the Audit and Risk Committee attending the Audit and Risk Committee.
Well, that's a governance issue.
That's a difference of opinion, frankly, between the people from Deloitte and not only Housing Australia, the guidance given by the Department of Finance and the practice of the other SIVs. If you have a look at the practice of the other SIVs in the Commonwealth, the other members of the boards of those organisations attend the Audit and Risk Committees.
Well, I've got to say, I'm surprised to hear you say that, because I don't think that there'd be many occasions when a member of the board who is not a member of the Audit and Risk Committee would just turn up to a meeting.
Well, I think you're completely wrong, Senator. That's absolutely standard in listed companies in Australia for other members of the board who are not a member of a committee to attend.
Well, it could be a huge conflict of interest.
Where is the conflict of interest?
Well, it could be.
Under the PGPA Act, the board is responsible for the financial reporting and risk management systems of the organisation. Under the Housing Australia Act, the board is responsible.
So you think it was fine for the...
It's absolutely fine. We discussed it both with the Deloitte representative at the Audit and Risk Committee.
So what did they say?
They said they thought the key element was to ensure that the Audit and Risk Committee was able to give a different perspective from a meeting where the chair may normally direct, which is a board meeting. We thought about that, we considered it, and we didn't have the same issues that they were raising.
Okay, But I mean, at the last hearing when you were here, I think you were here then, the evidence was that 25% of the staff had turned over. I mean, you had a board meeting this week, didn't you?
Yes, we did.
And did you discuss the staff survey at that board meeting?
Yes, we did.
Okay. And how's the staff going there at Housing Australia? How's the morale?
Well, I think Housing Australia is performing really well. We're very proud of the work that Housing Australia is doing, and the efforts of our staff in delivering the programs is exemplary.
Right.
As to the details of the survey and the way we're addressing it, I think Mr. Langford is best placed to address that.
You don't think that these issues are governance issues, though, for the organisation?
Oh,
if a quarter of the staff is turning over on a regular basis and the staff surveys are terrible and you're losing senior executives on a regular basis, plus you've had to have a Treasury investigation into board members, I mean, most people would look at it and say, well...
Senator Bragg, if it's pretty unexceptional if a complaint is made about a person, for that complaint to be investigated. That is probably best practice. And in the case where the complaint or the concerns that have been raised pertain to a chair, it's the appropriate person in the Commonwealth is for the relevant department that looks after that organisation. I would have thought that's just good practice.
So what happened with have you got a CFO at the moment?
Yes.
Yes, we do.
Okay. And have you got a Chief Legal Officer?
The Chief Legal Officer has recently resigned, Senator.
Oh, when?
I think with an effective date of the 4th of February, but I can take that to check, so very recently.
Okay. So how many of your direct reports have you lost in the last year?
When you say lost, Senator, I've made
how many people report to you in the org chart?
So if you'd like me to run through them, Senator?
No, just how many are there?
So I've
6 or 8?
So I think because you're asking about context of over the last year, it's important to step through. So yes, I've made some staffing changes during the last year. I've also made some changes to the organisational structure. Currently, I have a Chief Investment Officer that looks after our more homes, looking after the social and affordable housing programs.
Yeah.
I have 2 executive leaders that are responsible for the respective programs in home ownership, a CFO, a Chief Risk Officer, and a Chief Operating Officer.
Yeah.
Senator,
so what did the staff survey say? What was the key takeaway?
So, Senator, the staff survey said that there is, at a headline, 5 out of 10 staff are very engaged.
5 out of 10?
So, Senator, 2.5 are sitting in a neutral category and 2.5 have expressed dissatisfaction.
So what do you think about that?
So, Senator, when we look at the survey, and we take this very seriously, we understand it's been a very challenging operating environment. There is a very contested policy space, that there is frequent public commentary that many of our staff have taken very personally because they are putting in enormous efforts. We've also taken on board feedback that they've given us about clarity and communication. There is a strong sentiment about the prolonged uncertainties through the course of last year in what was a very highly contested, or remains to be a very highly contested policy space, where there was, in the election, a lot of uncertainty for Housing Australia's programs that has created ongoing challenges for staff. We've had to build a lot of organisational systems and structures to cope with a much larger expanded remit and the scale, risk and complexity of the organisation.
Yeah.
There is really valuable feedback that staff have given us. We've given a number of briefings to staff and we've committed an action plan around the steps that we're taking to encourage a work environment where everyone feels they can come to work and do their best work and be well supported.
Okay.
The key themes of that, Senator, if you'd like me to step through it.
Well, so 50% of the staff are not engaged?
No, that's not what I said, Senator.
Say it again then. So
I said the survey tool we used tells us that 5 out of 10 staff, we had a very high response rate in the order of 86%.
Yeah, that's good.
So very positive staff want to express their views. 5 out of 10 staff have expressed a view that says that they're engaged. 2.5 have offered a neutral perspective. That is to say that there is room for improvement. and then 2.5 out of 10 have expressed a dissatisfaction or sentiments that express dissatisfaction.
So what are you going to do to drive the turnover rate down?
Well, Senator, turnover rate is absolutely an important factor, but I would say it's not unusual, given the context of the organisation and where we've come from and are moving to, that there has been turnover. But there are steps that we have put in place about creating a work environment that's conducive to high performance and retention of people that are offering high performance. And we've got some very deliberate plans with staff about...
So you've got some plans. Okay, so the board discussed this, did they?
It was part of the reporting to the discussion.
The board discussed it?
Yep.
Yes,
okay, so you've got a plan, do you?
Senator from the organisation and tasked the organisation with coming back to the board ultimately with its sequence of remediation treatments to ensure that we have benchmark improvements in the outcome.
Okay, well, can you supply on notice, I'm just trying to finish up with you because I know people want to do stuff, so can you supply on notice a summary of the findings, the staff survey, and whatever your rectification plan is in broad terms that's been to the board and discussed at the board on Tuesday?
Yes, Senator. I would point you there is a question on notice we've already responded to, or it may yet to be tabled, but we'll look at that in relation to the results. But I'm very happy to take a question on notice in relation to the plan that we've got.
And were you part of this discussion, Mr. Rimmer, on Tuesday?
I observed this discussion.
Did you say anything?
I can't recall whether I said anything in relation to this particular part of the agenda.
All right. I just want to ask you about in the board meeting minutes from the 29th of May 2025, there was a discussion that went along the lines of the chair noted that the lumbar supporting grey chair should be utilised as a preference in Housing Australia meeting rooms for meeting attendees' comfort and better back health for longer meetings. Is there any reason why that was included in the minutes?
So, Senator, firstly, let me say
it's very well
supported by the chair.
Yeah.
So, Senator, I know that can be read out of context, and it does seem extraordinary that something like that might be recorded in the minutes.
A bit unusual,
but if I could just speak to at the start of every board meeting, there is a reflection that we call a safety moment that is designed to create a conversation about matters that go to staff safety and wellbeing. It's very good practice for boards to do this. On that particular occasion, it was raised. There was a discussion about it. I would, on reflection, suggest that maybe the minutes went to an extent that may have been unnecessary. But I would acknowledge that it is a real issue and that it is something that for people who have prolonged periods of sitting, it can cause pain and discomfort.
I appreciate your candour. My final question is just about the ANAO audit of Housing Australia Future Fund. Has anything happened on that front yet, Mr. Langford?
Senator, that's a matter that's best addressed by the Treasury. The ANAO audit is into Treasury's administration of the Housing Australia Future Fund. That audit program is underway in accordance with the timeline agreed by the ANAO.
Have you met with them?
I haven't personally met with them, but my team has been.
Who has?
So I met with them in an introductory meeting.
Yeah, when was that?
I might need to take on notice. I think it was around November. It was around the commencement of or September, October. It was at the commencement of the review. The team has been working very closely with the ANAO throughout the last few months, providing documentation and supporting their analysis as you'd expect in the ordinary course of supporting audit activity.
Very important process. Thank you.
Just to make sure I correct answer, and there was part of an exchange with Senator Bragg a few minutes ago where I think his question went to the veracity of an answer that Senator Wong gave in the Senate to a question from him. I think we established that, Senator Bragg, your claim that somehow Senator Wong misled. I think we've dealt with that. I now just want to turn to your question, which I've been provided. And you claimed that your question went to the delivery under the HAF.
Yeah.
Just to remind you, in case you've forgotten, your question said, my question is to the Minister representing the Prime Minister, Senator Wong. Across the government's housing funds, how many dwellings have now been completed because of Commonwealth support since Labor came to office? What is the number? I'm not looking for how many houses were funded, were approved or are in the pipeline. My question is how many were completed and are available to occupy? Not only have you misrepresented Senator Wong, you've misrepresented yourself.
I'd have to check that,
Senator.
But
that's. I mean, the problem.
I've asked you so many times these questions.
The problem with turning up and leading with the smear.
We never get straight answers.
Is you actually have to do the work, and as you've acknowledged, this is complicated. Like the administration of this scheme is complicated. Have some difficulty, clearly, getting on top of it. I understand that's led to a reflexive negativity, but it shouldn't lead you to misrepresent Senator Wong, and it certainly shouldn't lead you to misrepresent yourself.
Well, we've asked, I think, 1,000 times how many houses is there.
You've got an answer every time,
right?
And the number, as I keep saying, gets bigger and bigger every day. More houses are built. We don't go around knocking houses down.
The question
we go around building houses,
the taxpayers getting
and
value
the number gets bigger and bigger in an incremental and steady way. And we're holding ourselves accountable, including here,
let's see if you get
for the progress of that important work on behalf of Australians.
So far, it's been a very expensive endeavour. Very expensive. $80 billion for fewer houses.
All right, thank you,
very expensive.
Senator Bragg. We will rotate the call now to Senator Pocock.
Thank you, Chair. I want to come back to a couple more issues. I'm really curious about the way in which HAF projects get funded and where they get funded. It strikes me that these projects require considerable capacity in the applicant. And some places in Australia are better set up for that than others. We have more of a deeper history with community housing providers and so on, which leads me to think of this as a capacity-based allocation as opposed to a needs-based allocation. I mean, I think I last time mentioned Newcastle. I'm also thinking of places like the Riverland in my state or what we used to call the Iron Triangle. These are places with a lot of housing need with very, very limited capability. What do you say to the fact that HAF needs to reach places with limited capability? What's its ability to really meet the need where it is?
Senator, I might provide some answer to that, but then ask Mr Langford to talk about the evaluation process that projects go through. HAF is not the only program supporting social and affordable housing. For example, the Northern Territory Remote Housing Program has a very specific target that, you know, it is what it says on the label. There are many state and territory programs that are suited to particular cohorts or particular geographic outcomes. Your characterisation of HAF is, I think, accurate, that it requires a degree of sophistication and capacity to engage directly with Housing Australia and the financial models that are involved in HAF. But there's also the Social Housing Accelerator program that you've mentioned and a range of other programs. It's also the case that HAF's outcomes from round 1 and 2 are pretty well distributed across jurisdictions.
But the regions, I understand, really missed out?
There is a reasonable distribution between metro and regional. I mean, could it be better? Certainly. You know, are there improvements that are being made? That's actually why in HAF round 3 there are 4 specific streams of funding now in place. One of which is, I'll get this name wrong, but speciality and diversity or housing diversity.
I mean, Mr. If you're happy, I'll pick up from there. So, oh, sorry, beg your pardon, Senator.
No, go. I'm just wondering, I could get this probably on notice rather than hold up things here. I can
make a very brief remark, Senator, and then happy to, if you want further information. So, certainly in round 3, as Mr. Rimmer said, there are 4 funding streams. One of the mechanisms by which we are encouraging that capacity building that you're talking about, if I go to 2 specific streams, so working with states and territories, we can provide a commitment to a state and territory that allows them to bring together the project and then they find the community housing provider that they want to work with. and we've encouraged them to think about areas that they could do that where they may be underserved, where the capacity of community housing providers may not be appropriate, and then they go through a process with us where effectively we and the state are working together to facilitate the outcome. That's been a big part of the construct of HAF round 2, and it's something we've continued into HAF round 3. It really starts from a recognition that, in particular in social housing, the states are the primary custodian of that system, and so supporting a range of outcomes, including in regions and with smaller providers, that's an important way to do that. I'd also add that the First Nations stream very specifically recognises that is a nascent sector in many ways. There are some outstanding providers who do great work, but the establishment of a concierge service to work with applicants by Housing Australia is in part a recognition and response to how we support First Nations-led housing organisations. It will have a different experience to it.
Of course.
And then, of course, there's the HAF CT, quite separately, which is funding crisis and transitional accommodation, which does work with a lot more diverse providers.
Thank you for that. And if there's any further information you want to give to me on notice, I'd appreciate the detail. I wonder, do you have any concerns about, if I can use this term, sort of community housing provider cladding by profiteers, by people, organisations out of the financial sector which clip the ticket at all the levels of a project and make a nice tidy sum and just make use for the front of their application and their work of a compliant community housing provider?
So, Senator, very specifically in relation to round 3, this is an issue we've thought deeply about. It's something that we want to see a deeper evidence base. Our experience in round 1 and 2 suggests that, by and large, these are very traditional community housing providers who are working with a range of partners, often in very established relationships. We've relied heavily on both the charities regulator and the community housing regulators for their checks and balances. In round 3, there are additional tests that we're applying that are really going to do deeper elements of control of the substance of the outcome. Much like in the First Nations stream, we are very focused on how we ensure very authentic outcomes in that stream and avoid the, I think to use your term, cladding around an application, because we want to ensure that it is appropriate for the private sector to play a role in the delivery of housing and the financing of it, because that is a way that we're mobilising additional resources and an ability to manage risk. But we want to ensure that it is fairly remunerated, having regard to the risks that are being taken on. And so there are mechanisms of control that we've also used in round 1 and 2, without getting too technical, but effectively our agreement to provide our funding comes with often what I think of it like a tripartite arrangement with funders and others that says there are reasonable controls we have in place, and if you exceed returns of X, then you may need to return money to the Commonwealth. We call it an intercreditor arrangement, but they're really important mechanisms by which we're trying to ensure that the value is being built, as Mr Rimmer referred to earlier, over time in the community housing sector, so that HAF is building a legacy that it will extend beyond the program.
Thank you for that. Mr Rimmer, will you be undertaking a comparative analysis? You mentioned before that something like the accelerator does a different thing than the HAF, and that there are real maintenance costs and rental gap costs for social renters or low-income renters. It would be very interesting, would it not, to see an analysis of the first 5,000 homes and how their costs compare to a direct funding of such housing through a community housing provider, building in rental subsidies as necessary and maintenance. I mean, just seems to me we're doing a very complicated thing here, which is incredibly profitable for some people, without a long-term housing outcome in some cases, and we could be doing it a different way. And Treasury, it seems to me, should be looking at the comparison.
Senator, part of our policy responsibilities is accountability for social and affordable housing policy advice to ministers, and as part of that I have no doubt that we'll do work of that kind in addition to other evaluation processes that are set up for itself, such as the legislative review.
Okay, thank you. And my last set of questions go to the question of the revolving door and the role of advisors. As reported in the media, the Housing Minister's Policy Advisor one of the Housing Minister's Policy Advisors has recently made the move to the Commonwealth Bank one of the big four banks that is certainly making a lot of money out of bigger home loans, partly driven by the changes to the 5% deposit scheme. This is the same bank that just yesterday announced that enormous profit of over $5 billion. When will that officer begin that new role?
Senator Pocock, normally, I appreciate you haven't used the staffer's name.
I'm not using their name.
Yeah, no, I appreciate that.
I'm interested in some principles here, but I'd like to know when they are
so
starting.
let me just answer the question to the extent that I can. I have noticed in one other incident around this place, somebody decided it was okay to do that. For people who can't defend themselves. It wasn't you, but somebody did, and as a matter of deep regret, and I hope they've reflected upon that. Just use this opportunity to make that point, because it was, my view, pretty bad form, and not the way that these questions are usually approached. What I can tell you, and I'll come back to you on notice if that's required to provide anything else that we can provide, is that person is not working in a role that has anything to do with housing.
In their new role?
In their new role.
My question is, when do they start?
Yes, no, I understand that. Yeah. That's your question. That's what I know. Mm-hmm. If there's anything else we can provide you, we will.
So you will provide me with when they start?
If we can, okay. Yes.
What obligations or requirements does such a person have as they move to an institution which will find much of their special knowledge of interest? Well,
I think I've answered that in my previous answer. That is, I don't believe, on the basis of what I know about this, that person is working in an area that has anything to do with their the responsibilities that they discharged on behalf of the Minister or the work that they were doing.
Minister, the Lobbying Code of Conduct says a person who was previously employed in the office of a minister must not, for a period of 12 months after the person ceases employment, engaged in lobbying activities relating to any matter that the person had official dealings with in the previous 12 months of that employment.
And I'm very confident that that code of conduct has been followed scrupulously.
And how... okay. You don't see them as being required to meet any obligation in relation to...
The person is not engaged in lobbying activities.
Or lobbying...
That's it. That's it.
They're not engaged in any lobbying, but lobbying, the definition of lobbying is influencing decision making.
As broadly as it could be,
an influential person in their new
as broadly as it could be construed. As I understand it, this person is working in a role that is not related to any of that kind of work, either in the policy area that they're in, or more broadly in terms of what you might call, lobbying work. That is not the function that they are performing.
Do you have concerns, Minister, about the rotation of people from key influential roles in government into very profitable institutions where their knowledge will be of great interest to senior decision makers?
Well, there's a ministerial staff code of conduct. It has been followed scrupulously, and that gives me confidence, and it should give others confidence. That the right thing has happened here. The code of conduct is designed to deal with the kind of apprehensions that you might have about these kind of issues, and it's been followed.
I certainly do have those concerns. Why? I mean, because I think there is a great deal of evidence that the revolving door is incredibly profitable for large organisations.
Not in this case.
So I look forward to any information you can give me on that outside this, and I'm very happy to take it privately. Thank you. Thanks, Chair.
I'm done. Senator Canavan, just a couple of quick ones and then we can move on.
Sorry, I knocked off for a mic there. I just wanted to ask a housing question, particularly international developments. It seems that Canada and New Zealand, I think, to a certain extent, are seeing some moderation, even some decreases in their housing costs. Both countries seem to have taken a fairly aggressive stance on migration, reduced those levels. Have you looked at the relationship between migration and house prices around the world, and whether or not the approach of Canada and New Zealand is working?
No, Senator.
All right. Where are you guys? I'm sorry, I haven't moved. Where are you guys from? Treasury or housing?
Treasury.
You're Treasury. Oh, okay.
Treasury's housing.
Right.
Housing.
But why haven't you done that? Why haven't you looked at what might work overseas?
Senator, we're continuously looking for overseas experience about housing policy. We're also working closely with colleagues across government, including colleagues responsible for migration policy in the Department of Home Affairs. But you asked a very specific question, and the answer to your very specific question was no.
It's had a lot of reporting, particularly the Canadian experience is having a lot of focus and attention right now. We've got this massive housing issue. We've had a massive surge in immigration alongside it. It's just strange that you haven't looked at it. I mean, have you made any attempt to analyse the effects of the unprecedented level of migration we've seen in the last few years and the housing market outcomes for particularly young Australians?
Senator, we look at the relationship between migration and housing demand. The National Housing Supply and Affordability Council looks at that on a routine basis in their annual report. It's a complicated relationship because for all kinds of reasons, including that skilled migrants can add to our capacity to meet housing supply challenges. So, but I mean, beyond that...
That's all true, but there's a real world example now. In theory, there's always lots of different effects. You've got a real world situation going on overseas. We have people marching on our streets against migration levels. 2/3 of Australians want migration to come down. I just don't understand why you're not even asking the question and be able to give us answers on this issue that is of keen concern to Australians, obviously.
Senator, we're not responsible for migration policy.
But you're responsible for housing policy.
Sure. And we provide...
I mean, you can't tell me whether... You can't even tell me whether our high levels of migration have made housing outcomes for Australians worse.
Well, Senator, reluctant as I am to reflect upon the market conditions in Canada, given the last couple of weeks, the truth is a range of factors impact house prices. In Canada, recent data shows 0% growth in their economy. 0% growth. A stagnant economy. Now, it is true
we've got 0% real capital growth.
That a stagnant economy does often, not always, often lead to falling prices of assets, including homes. That's true. Now, we're roughly growing, 1 and a bit % to just a bit over 2% on average year on year. Now that is a different outcome. Now I'm for growth, economic growth. I'm for rising wages. I'm for more employment. I'm for a bigger economy. I'm for more economic resilience.
My question just is why isn't the government looking at this issue? Well, I mean, you can hang on. You can do a Google search and tell me a few stats, but my question is why hasn't the government asked for detailed advice on whether the rate of migration we've been experiencing is exacerbating the situation for, as I say, especially young Australians who just want to own their own home?
The government considers all sorts of factors. I have to say, I take exception to the Google search observation.
Oh, was it AI?
Somebody else did it for me, Senator. Somebody else did it for me. I mean, you're giving you too much credit. You don't. Yeah, you're giving me far too much credit here. But a range of factors.
But why haven't you asked?
But a range of factors, and the government looks at all of these questions across all of the economic settings. Now I know that there's a school of thought. We'll see where, we'll see what happens over the next couple of days. There's a section of the Liberal and National Party that are all about importing extremist ideas and exporting jobs. I understand that. Whether that's the sort of grouping that has more sway or not, we'll see.
Well, just to respond, I mean, I think I deserve a response to that. as I say, very clear that in every poll that's asked, 2/3 of Australians want migration levels to come down. So
the government's taken a very responsible approach to migration, Senator.
You would label 2/3 of Australians as extreme views is unbelievable.
No. That's not what I said. I said you lot are the extremists.
No, because
you're the extremists.
That's why you keep representing the 2/3 of Australians.
That's why you keep getting smaller.
Representing the 2/3 of Australians who want migration to come down.
One person talking at a time.
Not only are you not listening to those
extremist
people,
ideas,
you're not even asking the question about what they are concerned about is real.
You wonder why the centre of Australians don't want anything to do with you.
Okay,
don't want anything to do with you.
Do you have any more questions?
No, that'll do.
No, all right, thank you. Thank you very much, colleagues. So that concludes our time now with Department of Treasury representatives and Housing Australia Housing Group. So you can leave now, thank you. We're going to swap portfolios over. The committee now concludes its consideration of the Treasury portfolio for today and thank the officers of Treasury who have provided evidence. Thank you. And we will wait for our next group, Department of Industry, Science and Resources.
Okay. Hello.
Afternoon.
How are you?
I haven't got an opening statement, but I was going to...
Sorry?
I haven't got an opening statement, but I was just going to acknowledge Bruce's
departure. That'd be nice. Yeah, I caught up with him this morning, which is nice. G'day. How are you?
Are we good to kick off? I think we're good to kick off. Okay, let's get started as everyone settles. The committee's consideration of the 2025-26 additional budget estimates will continue with the Industry, Science and Resources portfolio. The committee will commence with the Department of Industry, Science and Resources Corporate Enabling and Business Services. I would just take the opportunity to let people know we will stick with the programmed break time, so we'll break at 3:45 regardless of where we are with the sequence of questioning. I remind senators and witnesses that the committee has set 20th of February 26 as the date by which senators are to submit written questions on notice, and 10th of April 26 as the date for the return of answers to questions taken on notice. The committee welcomes Senator the Honourable Tim Ayres in his capacities as Minister for Industry and Innovation and Minister for Science. And I welcome Ms Megan Quinn, Secretary of the Department of Industry, Science and Resources. Ms Quinn, we do have your opening statement tabled. I note that you've got some lovely words there about Dr Bruce Warrington. Not sure if you wanted to mention something specifically. Please do so.
Thank you, Chair. I would like to take the opportunity to congratulate and sincerely thank Dr Bruce Warrington, who's retiring from the position of Chief Executive Officer and Chief Metrologist of the National Measurement Institute. Dr Warrington has demonstrated excellence and leadership, built the capacity of the National Measurement Institute to deliver world-class measurement services that the Australian industry and community rely on. And throughout his career, Dr Warrington has led significant pieces of work, including using the National Measurement Institute's expertise to respond to COVID-19 and provide advice to reform and streamline Australia's measurement law. So I wish Dr Warrington and his family all the very best in the future, and thank him for his excellent career.
If I can just add to that, Bruce has been playing an extraordinary leadership role in this piece of scientific and meteorological infrastructure that's just so important for Australia in economic terms, in science and research terms, in terms of our electricity and energy systems. He's come through as a technical person through into a CEO role, in quite a challenging role in terms of where the assets of that are up to, and has played and is well loved by his staff. Every time I go there, I see the extraordinary relationship he has with his staff. So I wanted to pass on my congratulations to him at this point as well. Thank you.
Thank you very much. The committee welcomes representatives also from the Department of Industry and Science and Resources, Corporate Enabling and Business Services, who are all here. And we'll kick off with questions. Senator Hume will start.
Thank you, Chair. I am on the department's website here, and I'm specifically on the Minister's page. I want to understand, Minister, as a rule, as a general rule, when you give an interview, because there's a section here that's on transcripts and speeches and media releases, if you give an interview, is it you or your office that does the transcript, or is it the department that does the transcript of those interviews?
It's not something I have spent a lot of time reflecting on, Senator. If I can come back to you, I mean, my staff, I know, do work in this area. Whether the department provides any support, I'm not sure.
Okay, fine. Sorry, go ahead.
Mason, Deputy Secretary, Enabling Business Services. Typically, yes, we would be the ones to post that transcript.
Right. Yep. So you post it, but do you prepare the transcript as well?
No.
Right. Okay. Thank you. Obviously, I hang on every word that Minister S says, so you would understand why I take a personal interest in this.
Typically, we would just, procure those from, media companies.
That's fair enough. Are there any instances where you would give an interview and choose not to publish the transcript?
I'm not certain that all of my... I'm not certain that it's an exhaustive list.
Right.
That's for sure. I don't...
Is there a criteria? Do you say, I will, this one was relevant to my portfolio, or this one was like a profile piece, or this one was like a...
I think you can tell from the tentativeness of my answers that the answer is no. There is no criteria that's applied. I don't know whether all of them go there. I pay very little... that's not... those are
you don't flick through your own
interviews that are provided for people who may be interested in them. It's... I don't... I'm not as captivated by it as some people are with their own material, I suppose.
Fair enough, I understand that. So there's an interview on the transcript section, which is an interview with Sky News. It was on the 22nd of December with Trudy McIntosh, and it goes through domestic gas reserve scheme, which I understand why you've been talking about. It goes through the Bondi terrorist attack and the Royal Commission, and these are things that... news of the day, as well as sort of portfolio-specific issues. But there was also an interview that was by Trudy McIntosh on Sky on Wednesday, the 31st of December, that isn't there. Do you recall that interview? It was New Year's Eve, surely. If you do an interview on New Year's Eve,
I think
I'm
it's
impressed.
very dedicated of me.
It is?
I just don't know, Senator.
Okay. So in that interview...
I sense you're about to tell me, so I'm looking forward to it.
In that interview, you said that a Royal Commission following the Bondi terror attack would have been, and I'm quoting you here, symbolic. Is that something that you remember saying?
I certainly, and I've been taken to that interview in a couple of subsequent interviews. At the time, the government was working through its response to what is, as is, well traversed, and I don't want to take up the time of this committee, but the worst onshore terrorism event in Australian history. It was completely mobilised by a deep anti-Semitism, clearly, and what I was responding to was a series of questions that went to what the government's position that had been articulated at that point, and I am very comfortable with the position that the government evolved over the 25 or 26 days in the lead up to the Prime Minister's announcement of a Royal Commission that has a very tight and specific duration. So, dealt with some of the objections that I don't have the interview in front of me, but I'm sure I would have raised to a long process. Incorporates the security review that Dennis Richardson is leading now as part of the Royal Commission, beyond that, of course, that there's decisions of government and cabinet processes that all of us in the cabinet are engaged in. So I don't want to go to the details of that process, but I indicated what I indicated at the time, was mobilised by the concerns that I was articulating at the time, and I'm very confident and comfortable and supportive of the process, the careful, deliberate process that the government went through and the conclusion that the government has reached. And I look forward to that Royal Commission commencing its work.
So, yes.
Well, Senator, it's now been 4 minutes since you asked the question, so I think I've quite forgotten what the question was. Did I give an interview then? Yes, I did. I've been asked questions about it since. I've answered those questions, and so the phrase symbolic was something that you used in that interview. Well, I don't have it in front of me. I'm sure.
Actually, nobody does. It's not on the website.
Well,
the department's website, and it's not on your personal website. Which
sure
is extremely unusual, because every other interview, even similar interviews, are on the website. So my question for you is, did you or your office make the decision not to publish that transcript?
I have no idea.
So you didn't personally make the decision not to publish
Senator, that is an interview that I gave. I've been interviewed about the interview. In relation to a whole lot of other things, it's been asked. It's not a secret.
So other people have asked you about the inappropriate use of the word symbolic for a Royal Commission into the Bondi terrorist attack.
It was a secret in the sense that it was on television.
Okay.
Transcripts are terrific, but I don't spend too much time on them.
I've got work obviously, to do. I suppose for your average punter like myself, I would like to know whether the transcripts that are either on the department's website are complete, or even if they're not complete, whether they are alternatively complete on your own website. Now, your own website, your personal website, that is entirely up to you. You could, publish poetry on there. But if it's a department's website, and this is the kind of interview that you would normally publish on that website, it's interesting that for some reason that particular interview hasn't. I'm speculating.
It's exclusively about matters unrelated to the portfolio. I don't know whether that was the reason. I'm going to ignore your invitation to publish poetry. I think that's probably in all of our interests.
Can I just be very clear? You didn't direct either the department or anyone else to take that interview.
I haven't given it a moment's thought.
Good.
Yep.
Your staff? Have your staff given it a moment's thought?
No idea. No idea.
All right. Did the Prime Minister's office direct, suggest or otherwise intimate that they thought that transcript should not be published on the department's website?
I think I'd probably notice if that happened. No.
Ms Quinn, did the department have any role in preparing the transcript of that interview?
I'll pass to my colleague.
Senator, I'm not aware. We would have to take that on notice. Obviously, we see a lot of media activity for the Minister, but apologies, that particular interview I'm not directly familiar with, so I need to take it on notice.
But clearly there's a protocol, you mentioned it before, that it's not necessarily the department's role to produce the transcript, but it is to upload it.
I would say, Senator, though, we don't publish everything. So
how do you decide what to publish and what not to?
I think to the Minister's point before, we'll publish as it's deemed to be important to put forward on the Minister's website. Who does the deeming? Well, Senator, we always work with government around this is a Minister's website. Of course, we would want to make sure that the Minister's clear about what's being published on that.
Okay,
I think
so
the
you would
minister's
consult
already...
with the minister's with the minister's office as to whether a transcript was relevant to your website.
Well, maybe, but as you indicated, it's New Year's Eve, Senator. I mean, I'm not sure that you know, the sort of every utterance that I make on, you know, every radio station is going to get a run. I don't know. I haven't you know, weighed the amount of things it is that are published on that website, which I've never looked at, I have to say. So match the interviews that I do. I don't know. I don't know.
So the 22nd of December's interview, obviously just a couple of days before Christmas, that one was there. But the one on the 31st of December wasn't. Can I ask again, did the department engage with the Minister's office to request approval to publish it, or did the Minister's office suggest that that interview should not be published?
Senator, we would need to take that on notice.
Yeah. We have already taken it on notice, so we're happy to take it on notice. But you know, 31st of December would have been in our shutdown period.
Yep.
As part of the public service shutdown arrangements, and so we would have to check with the people who are on deck.
What was the shutdown arrangement? What date did this shutdown arrangement begin?
Christmas Day.
Senator, we finished end of business on the 24th, and we're back
Christmas
in the
Eve.
office on the 2nd of January.
Okay. Thank you. Thank you. Thanks, Chair.
Who am I moving to?
Well, I'm happy to take the call. Thank you, Chair. Look, I know we're in corporate, but I did want to start just to recognise the sad news today that Albemarle is shutting down a lithium processing plant, another 250 jobs lost in our manufacturing sector. Can I just start with asking, did they let the government know about this announcement before it was made?
I will. So this is a matter for the Minister for Resources. I'll make sure that we're in a position to answer that this evening when we go to Resources.
This is a manufacturing plant, though. Well, yeah. I suppose you can. It's a processing of mineral resources into a value-added product in lithium hydroxide. But and I believe this department or this section of the department, well, we're in corporate, so we're overall the department. You're representing the other minister, I presume, but. So I probably can ask the questions anyway, but you do have a battery strategy which we'll get to in all of these things, and it has implications for that, obviously.
Yes, I was aware, and the Minister for Resources was also aware in the days leading up to today's announcement.
Can I get an understanding of what, if any, assistance Albemarle had been offered by the Australian government before this announcement today?
So this is an area that Minister King takes policy responsibility for, and the team that look after the critical minerals activity of the department. Right. So they will be here later this evening.
It's just that it does cross a number of parts of the department. So they didn't get any funding from the Modern Manufacturing Initiative, the National Reconstruction Fund, anything like that?
So we will be in a position to answer questions, but we, in terms of the kind of carriage of the sector and looking after it and pulling it together, my team will be able to answer later on.
Which team? Because I'm just wondering, because I know you said the critical minerals, they do the production tax credit, do they?
So the critical minerals team do the production tax credit, but they also do the industrial liaison with the critical minerals sector, and we work. As you say, there are tools across the suite of programs that can provide assistance to different parts of the industrial complex. But we do have, in terms of stakeholder relationship and pulling it together from an industry, particular company perspective, we tend to try and to coordinate that, and that would be the front line would be in our critical minerals team.
Okay. And that production tax incentive is to start in July of 2027. It is designed to provide confidence to eligible operators and producers that they will get that level of support for what is manufactured in Australia. This is a very difficult decision for Albemarle, of course, and it it indicates the scale of the challenge for projects that are operating in global supply chains that are concentrated, opaque, subject to market distortion. That is the world in which Australian minerals processing is operating. That is why the government has established the Future Made in Australia production tax incentive and credit regime. That is why we are engaged with partners around the world. It is, of course, deeply disappointing that this firm has made this decision to put this facility into care and maintenance.
Yeah, so just going back there, I'm just a little confused where all this sits, that's all, because in Program 1.1 there is a future battery capabilities program. So I know we'll get there later, but that's why I'm asking up front, because it cuts across potentially so many parts of the department. Is that program, does that cover all aspects of the battery supply chain, including the processing of lithium hydroxide?
As you say, there are different programs at different parts of the production chain, and the battery initiative is about battery manufacturing, battery
so not
processing.
lithium hydroxide.
So not the precursors that go into the battery. That's the critical minerals production tax initiative and other critical minerals aspects.
In a sense, I mean, I'm sure you'll take us to this, but it's one layer of the stack of activities that get you to whether it's in this case lithium batteries, but
right. Okay. So do we? Where do we produce lithium hydroxide now in Australia?
So I'm very happy to get my team that look after that to answer the questions. That they will be here with the critical minerals team, and it is the case that this is a manufacturing company that had previously reduced its production, and this last step is consistent with those decisions before. They still have mining interests where they're kind of the concentrates being extracted. There are other companies that produce hydroxide in Western Australia, but the critical minerals team will be able to provide you more details.
It's just that they'll come after the other one, because I'm wondering, I mean, how realistic is it for us? Because to make a battery, just to make sure I understand this right, it's been a few years since I've been in the details of it, but to make a battery, you need that spodumene, you need the lithium hydroxide, then go to the actual batteries. I think there's another step I might have forgotten.
Concentrate, yeah.
Well, sorry?
There's concentrate in there somewhere.
So if we lose the lithium hydroxide part of this supply chain, well, we can't really be a battery manufacturer in any self-sufficient sense, can we? So that's right, if we obviously don't have all the levels, although there are the ability to import different parts of the supply chain. Yeah, but then we're not self-sufficient.
But
we could just import the batteries.
Senator Canavan, I suppose, and we should go back to these issues because it'll be a useful discussion, I think, when that team comes in, when there is other production. The objective of the government's approach in Future Made in Australia is not that Australia produces every single thing ourselves. We're not reverting back to some, effort to make everything. The effort here is to make Australia more economically resilient by lifting our position, particularly in the mining sector, so we move up the value chain, and not in every product area. You'll see in some of the international cooperation agreements that are struck from time to time, there's a prioritisation, and that does mean it would be good in some battery areas to have local production here in Australia. That's what that program we've just been talking about is directed towards. But not every category of battery will be made here in Australia.
Just on this particular one, you did say you'd been alerted to it before. Why hasn't the government in this case sought to provide assistance to save these 250 jobs when it did at Nyrstar, at Mount Isa, is it Bell Bay? You help me out, Senator Colbeck?
No, they're still faffing the Bell Bay.
Okay, they haven't done that yet, but they're talking at least. and we'll get to Tomago later as well. So why the different approach here when the government did step in to save those other jobs in different parts of the country?
So the interventions that we have made, very significant in Mount Isa, in relation to Glencore's facility, but more broadly there to secure many thousands of jobs in that industrial system in northwest Queensland and then through to Townsville. Or whether it's Nyrstar, where we have moved to support the operations of that lead smelter and associated critical minerals production, antimony production in particular, in that facility, and in Hobart with the Nyrstar facility there. And the discussions that we're engaged in making significant progress in relation to securing low-cost electricity for Tomago, for example. That does require, firstly, the facility seeking support, and it requires the state government engaging with that, and of course it requires us making judgments about those issues. This company has made a decision that's been outlined. As I indicated, I was aware of it in the days leading up to it. The officials who will be in a position to see if there's been any engagement between the company and the officials, but this is, no point glossing it. It indicates why circumstances are so tough in this sector, not just a competitiveness issue, but a market concentration issue. And that is why the framework that we're delivering is so important.
I think
not everything succeeds, Senator. That's the fact of it.
If nothing else, it does indicate the failure of net zero, another massive failure.
It certainly doesn't.
Ever since we signed up to net zero, we've just lost more and more manufacturing jobs, and the only manufacturing jobs we keep are now ones that are on taxpayer-funded life support. It's just
garbage.
The facts, Minister.
Utter garbage.
It's absolutely
garbage.
Factual, true.
Factually
true. Net zero has been a complete disaster for manufacturing. Now,
that's
I was going to go to this later, but there's a...
Is this all for corporate?
Well, it's all about the 250 jobs that have been lost, so I think they deserve us to spend some time on it, Chair.
I'm not trying to shut you down, I'm just
all right. So,
working out if we're going to get some more kind of fulsome answers, if it's more useful.
I'm also wondering that, but we'll
with
see.
Other people in the room.
I'll do my best. I'm just going to an FOI disclosure 2025, number 70. In that disclosure, there's a table. Well, we've got the heading of the table. You don't give us the full table. I'll just pull it up again. It's on page 10. The title of that table says Industry Facilities at Risk, Key Dates and Proposed High-Level Internal to Government Handling. This one, I think it had a date. Yeah, it had a date, this one that was in the FOI, as at 20th of June last year. Was Albemarle's lithium hydroxide processing facility in that table?
This is corporate, and that document was produced in my industrial group. So if you'd like to move to that, I can bring them to.
That's program 1.1 then?
Yes.
All right, you're familiar with that?
Yes.
That table that I'm talking about. Okay, we'll come back to that then. I'm still going with corporate, but we'll come back to that. All right, so we might just move on to some other issues. Just going to your additional estimate statement. I'm looking at just where I wanted to start, table 1.1 on page 18 of the Department's additional estimates. Just trying to understand the in the proposed additional estimates column, there's a $60 million departmental appropriation change. What's that change?
Senator, just confirming it was table 1.1 on page 19.
Yep. Oh, 18 I've got.
Page 18.
I think that might spread over, but I'm looking at page 18. I think table 1.1 might continue on the printed document, page 18.
Yeah, so that's money that's come through for the department following the decisions of MyEFO.
Right, so how's that broken down then, the 60 million?
Yeah, I'll just see if my acting GC wants to come to the table, because she's got a lot more detail on numbers than I do. But there are a range of measures, obviously, that the government announced as part of that MyEFO package, and the departmental components of that is what that 60 odd is referencing. We can work that through with you if you would like.
Okay, yep, sure.
If it's useful, just while Ms Stone brings up a computer, Senator, these will be component parts that are referenced in the MyEFO statement, which I think from Dyer's perspective starts on 265. Yeah.
You got any info on?
Included funding for things like Whyalla, the election commitments that were made on the Anti-Dumping Commission. We'll just see if Ms Stone's got her numbers up yet.
Okay, cool.
So 5 million, for example, for the Anti-Dumping Commission was in that number.
So it does include, Joanna Stone, General Manager within CFO Division. It includes several things. So it's the measures that were approved through the MyEFO process, as well as a range of movement of funds that are also disclosed in the PAYS documents. So it would cover, so the specific measures would be supporting out Australia's heavy industry transition, building a future made in Australia, and the measures under that, as well as some of the
Have you got the figures there? Like, have you got, because that's just for 25-26, is it?
That's just for 25-26 for the departmental component.
Okay, have you got the numbers for those big ones, the heavy industry?
Table 1.3 kind of breaks it down a bit more detail in terms of the additional estimates. So it's around 10 million for the supporting Australia's heavy industrial transformation.
Isn't that a movement table though? 1.3?
Table 1.2 would show you
1.2, yeah.
Yeah, it would show you by department. So, yeah, if you look at that, it shows both the administered and the departmental component. The number you referred to is only the departmental component.
Yeah, okay. So table 1.2 doesn't quite add up to the 60 million?
No, because there's also movement funds that are included in it, so that's what's in the additional table, yeah.
All right, so you don't have those, but break up the 60 mil for me?
Not in one table, it doesn't show by that, but it's the aggregation of those.
What's the external revenue? What's section 74 external revenue?
So that's any revenue that we have for our cost recovery arrangements, so where we have cost recovery for several factors across our organisation.
What's that for?
So things...
Senator, we do cost recovery work. We run the Business Grants Hub on behalf of other departments. The National Measurement Institute, which the Secretary was talking about before, do work on behalf of a range of industry bodies and other government departments. We also do, which I think comes under that category, payroll work on behalf of other government departments.
So why has that gone up by 13.5 million from PFO to MyEFO?
Sorry.
Or budget. I'm in the budget. I'm in the MyEFO. Usually they're comparing to PFO, but you're comparing to budget. Okay.
So we make estimates at the beginning of the year on what the potential for some of that is, Senator. But certainly through the course of, for example, grants work, once decisions are made on those grants, obviously the revenue stream is then locked in, and we can actually update once we know what the administered funding we're getting for that part is actually going to be.
Okay.
We also have some demand-driven aspects, so Questacon fees, for example, if we get a surge in people.
It's just a pretty big one, that's all I noticed. It's fairly, in 6 months, gone up by 15% or so that's a bit of a change. Okay, all right. The CSIRO funding, is that the same table? Yeah, it's still in table 1.1, but it's a few numbers down, page 19, a few pages down. Is that the extra funding that was announced?
Yes, it is.
That was announced before MyEFO, was it? Okay, we can come to that later, I suppose. I notice your overall staffing levels are dropping. Was that planned or is that a change?
So
It's the budget.
So the actual PBS numbers have gone up from budget in the additional estimates for the department. For the estimates.
Oh, sorry. I suppose I'm comparing. They're going down from year to year.
Yeah.
Yes, but up in 25-26 relative to what we had in budget.
Relative to budget. I don't have that budget figure with me, so that's what I was sort of asking. But has that? So why are they going down?
Overall, they're going down mostly related to terminating measures, so measures that were funded for specific activity and that activity is concluded, and the reduction in staff would follow.
Does that contribute to your efficiency dividend?
Mostly it's related to specific measures rolling over.
So that doesn't count to an efficiency dividend because it was already in the baseline? Or?
So the efficiency dividends, to the extent that there's any targeted aspect there, goes to the general appropriation, and then on top of that we have new policy proposals that may have a specific life on them once the activity that's being funded ceases, and so we as a department manage both those things together to deliver the priorities of the government.
Okay. Have you received any correspondence from the Finance Department or the Minister for Finance around the need for a higher efficiency dividend?
So decisions around central government savings or efficiencies as part of the overall budget process. So they come through the Expenditure Review Committee mechanisms, and they're a decision of government, and then we get informed of those decisions and we activate them within our accounting systems.
Okay, I'll just ask again, have you received any correspondence, any communication from the Finance Department or the Finance Minister's Office about efficiency dividends for the budget coming?
So to the extent that we're in MyEFO, we would have been told about them, and they would be captured in.
I'm talking about the budget coming.
So we're in the middle of a budget process, and it's very early stages of the budget process.
Are you doing any planning on the need for redundancies to meet efficiency dividends over the next year?
So we always look at our available financing and our staffing profile, and we work through the need to match those two. Staffing is a big part of our cost base, and we do manage the requirements of the budget.
That wasn't quite my question. I'm sure you do manage it, but have you done any planning or any analysis on whether you will need voluntary or otherwise redundancies to meet your budget over the next year?
So we have a cycle of business planning within the department that works typically on a 6-month cycle. So we do at the start of, before the start of a financial year, we do analysis on what our obligations and priorities are and match resources to needs. And then we have an update in the mid-year process as well. So we do that on a regular basis. So the short answer is we are always doing that.
All right, not ruling it out. Okay, table 1.2, going to that one on page 21. There's a line, industry, science and resources reprioritisation. And if I'm reading that right, that means a reduction in funding for the department, is it, across that line? What is that?
Senator, those are changes to measures that were outlined in the government's budget that are being used to then fund other things.
Are they going to other departments, are they?
Yeah, I can point you to page 266 of the PFO section of the MyEFO announcement, and it talks about...
Hang on, sorry, just for 266 of MyEFO, is it? Or P?
Yeah.
Right. 266 of MyEFO.
They related to the industry growth program, a movement of the uncommitted funding on the modern manufacturing initiative.
Right.
And then there was 12.3 million by reducing the Global Science and Technology Diplomacy Fund, and uncommitted funding of...
Is that in your portfolio, the Global Science Technology?
Yes. Yeah.
That's in program 1.2 then?
I'll just double check. Yes. I think so, yes.
Okay. All right, so come back to that. So you haven't lost those from the department then? Are they, because are they just reprioritising within the department?
So most of those elements are administrative funds, and I'm looking at the kind of list, I'm reasonably certain now there might be some knock-on implications for staffing, but most of those were administered funds.
Okay. Which ones weren't?
So there might be, depending on how the saving is implemented, the industry growth program is supported by contractors and staff. But we're working through the details of what that savings measure kind of means for the program. The other ones are all administered funding.
Okay. I just wanted to go to the MyInfo measures, and I'm looking at MyInfo on page 268. This is the heavy industry transformation measure. Particularly after the description of the individual facilities receiving these funds, there is a line that says partial funding for this measure will be held in the contingency reserve, pending the outcomes of a review of market conditions for Glencore's Mount Isa copper smelter and Townsville copper refinery. So does that mean that the cost of maintaining the smelter and refinery there, the 301 million, it could be more than what's announced?
So happy to the team looking at that particular activity will be here under 1.1, but the structure of that arrangement with the Queensland Government joint and then with the Glencore has a series of milestones and gates and activities, and so the way we manage that is to have the appropriation it depends a bit on the conditions, whether it's in the contingency reserve or whether it's appropriated in advance. So it's sort of a technical aspect of what goes on books and what stays in the central books.
Right, but the fact you put some funds in the contingency reserve, and so I'm asking a more corporate financial question here, that does indicate there's a risk it could be more expensive. I mean, why would you put something in the contingency reserve?
Happy to take it on notice, because to the extent that things are usually put in the contingency reserve is because there's not been a formal decision of government, or it's a commercial in confidence, or there's a stage gate to be evaluated before the money is moved.
But you wouldn't put something in the contingency reserve if there was no risk of it being needed, would you?
Well, it depends on the kind of circumstances, so I'm happy to take it on notice.
Of course it does, that's why it's a contingency.
Yeah, that's right. So happy to take it on notice, the specific details of what the link is to the contingency reserve for those measures.
Okay. How much is it in the contingency reserve?
I don't have that information. I don't know that my team will, but I'm happy to take it on notice and see whether there's anything.
All right. And none of...
It's usually not revealed what's in the contingency reserve.
Right, yeah, okay. None of the funding here for this heavy industry announcement measure is earmarked or going towards Tomago?
I am not sure about the technicality of that, because I'd have to check the measure.
Come back to
the team who we're dealing with it would be able to answer that question.
All right. And it does also say here under this measure that it will be the cost will be partially met from a reprioritisation funding of the October budget measure in 2022-3, total supporting Australian industry. That particular measure included funding for a range of facilities, including Nyrstar. So, and the amount to Nyrstar in October 22-23 budget was 50 million. Was all of that 50 million provided to Nyrstar?
I think we'd have to check. We'd have to check that, Senator. Yeah.
But aren't you guys? Who's the chief financial officer? Wouldn't you know this? Like 50 million.
Chief financial officer is actually unwell today, so that's why I've got one of my team here with me, Senator. So it's unfortunate, but I'm just being.
So no one's got tabs on whether that 50 million.
No, the policy team will be able to answer your questions.
will be able to see that, right? Yeah.
All right. I thought the finance team would know too, but okay. All right. Okay. So how much of that that measure in 22-23 has been reprioritised?
So we'll come back to it. The team will be ready to answer these questions in 1.2.
Okay. All right. Well, I'm sure if we're going to get much.
Just to clarify, is it the modern manufacturing initiative you're talking about?
No, it was a measure titled Supporting Australian Industry.
Right, sorry.
And that was in the 22-23 budget. It's on page 155 of the 22-23 budget paper 2. And it lists a range of facilities. It's a total of 135.5 million in that budget. And so my simple question is how much of that 135 million has been reprioritised?
We'll have a better discussion.
Yeah,
about that
okay.
shortly. Yeah.
All right. So let me check, sorry. I thought there might have been another set of questions. I just wanted to get some clarity on the artificial intelligence one. It says the government will provide 225 million, but it seems to be there's lots of different people involved in this. So how much of that is being spent in the Department of Industry?
So we'll have our artificial intelligence people here later on. We got for the establishment of the Artificial Intelligence Safety Institute 29.8 over 4 years, and then further ongoing. That's all within the establishment of the Safety Institute is within the department.
The 20, what is that?
29.8 over 4 years, and then ongoing funding as well beyond the 4 years.
Which part of the? I don't know if you've got the measure from my EFO in front of you. It's on page 211. What part of that is the 29 million from? It's like 4 dot points.
Yeah, I'm sorry, I don't have my EFO in front of me.
I've got 266, which I think is what you're referring to, but I'll just need to bring up the others.
Yeah, I've got it's a cross-portfolio measure, artificial intelligence plan for the Australian Public Service. That's what I'm referring to. Is that what we're both referring to? Because the Department of Industry is not actually mentioned in these, but then I see in your additional estimates you seem to be getting funding from the AI plan.
Yes.
You are?
We are getting to 29.8.
29, but that's not quite indicated in my EFO anywhere. But it is part of that measure, is it?
Oh, the 29.8, Senator, is in the MyEFA document. It's on 266.
Okay, so it's a different measure. All right, I got it now. Thank you. Okay. So this Safety Institute, is this just for government use? I suppose I can ask that later, but...
So the team can give you a more fulsome answer, but at a high level it is to analyse the safety aspects of the artificial intelligence engines and provide advice within government.
Within government, okay. All right. Okay, all right. I'll just check, but I might be done for corporate. Well, I might just flag here. I want to ask some questions on the failed grant to Fortescue for their initiative at Gladstone.
So that is this part of estimate.
This is in corporate.
Because the Grants Hub, who manages the recovery of grants monies, is in corporate.
Right, great. Lucky I flagged it. All right, I've got a few questions here. So, all right. Well, first of all, have we got the money back yet?
Senator, the department's received 20 million back from Fortescue, yes.
20 million. I believe I had it here, I thought it was around 44 million. Yep, 44.9. Was that the total amount?
Well, Senator, it might be worth me just...
well, they were awarded a grant. I've got here in your own documents from FOI that FFI was awarded a grant of 44.946 million. So how much was actually provided to Fortescue?
If I can ask my colleague to join me from Derek Stiller, our Business Grants Hub, I just wonder whether it's useful just stepping through that grant, because obviously government contributed a component, Fortescue contributed a component, so the total funding envelope I think was around 100 million-ish, I think.
Queensland government
for the project.
A component as well, right? Yep.
In terms of Fortescue's grant itself, let me just bring up the detail. So you were after the total funding arrangement for the Fortescue grant?
I think I've got, as I say, there's quite a few documents on FOI on this, and they all flag that the Gladstone FFI project was awarded a grant of $44.9 million. What I'm after is how much was actually provided to Fortescue under that grant.
Sure.
So Senator Derek Stiller, acting Head of Division for the Business Grants Hub. So yes, you're right. That was the 44.9 million was the total value of the grant. So Fortescue received 33,709,500.
Right. Okay, thank you for that. Okay, sorry, was it? Okay, that is it. Might just write that down. Sorry, 33.7 was it?
Yes, 33.7 million.
Round it up, just round numbers. Okay. And how much did you say has been repaid?
20.255, and I think 700 if you want to be precise.
And is that a final payment of negotiations finished?
That is the requirement we have under the grant agreement for Fortescue to pay back, and they have paid it back.
Right. So we won't get 13 million back. That's
the remainder of that was spent on eligible expenditure under the grant agreement, Senator.
Right. How is eligible expenditure defined? What does that mean?
Well, it's stipulated in the grant agreement, but would include things like wages, for example, for parts of those projects that would have been funded. But Mr. Stiller can expand on that if you like.
Yep, sure. Go for it.
Sure.
Yes, Senator. So Fortescue, under the grant agreement, they needed to build a hydrogen electrolyser manufacturing facility, and that was built. Included within that, a fully automated production line was installed, some functional testing stations were installed, as well as robotic clean rooms. So I guess what Mr. Mason's flagging is that we need to take into account the partial delivery that did occur under the grant agreement, and those things that I've articulated were eligible items for expenditure under the grant agreement. And so we've used the relevant clause under the grant agreement that's appropriate to use in this circumstance in relation to the repayment, given that partial delivery.
Did the grant agreement define those things?
Yes, Senator, there was a range of milestones or things that needed to be undertaken that were articulated in the grant agreement, yes.
But we don't have the grant agreement. Well, now that it's complete, can we have a copy of the original agreement, please?
I'll take that on notice.
Thank you. I understood you couldn't provide it while negotiations were continuing, but that's done now, so I don't see
Sometimes
any...
it contains commercial confidence information, so we usually
you could
go
redact
through that
some
process.
stuff, of course. I do have, though, I think the template or draft agreement that was provided on with the guidelines, I think, for the grants originally. There only seemed to be, though, one section which dealt with repayment. That was section 11, just 11 as a total, and it's all very vague. That all it says is if any amount of the grant has been spent other than in accordance with this agreement or is additional requirements of the activity, then the Commonwealth may by written notice require the grantee It doesn't really say anything about eligible expenditure or anything like that. So was the final agreement, did it have more provisions around repayment than the draft contract had?
So, Senator, the the final grant agreement had a designated use provision.
Right.
And under that articulates through a formula what money needs to be returned to the government in situations where the assets built and brought into being through the grant process, if they're not used on used for the desired purpose or the specified purpose, so used for other purposes, not used at all, or sold, those sorts of circumstances.
Right, okay.
That's where that clause comes into effect.
That's where you triggered it?
Yes.
Right. But this facility, to my knowledge, was certainly less than a year, may have been 7 or 8 months open. So why would we only get 2/3 of the money back if they only ran it for 7 or 8 months? I mean, they used it, but I'm not sure exactly what benefit Australia got out of it at all. So why are we only getting 2/3 back?
So, Senator, that's where we need to adhere to the requirements under that designated use period, and that period was for 5 years, Senator. There's a formula that applies as to how much needs to be repaid to the government based on how long the assets brought into being during that grant period.
So it's not a linear, it's not that formula. So, because from my rough sums here, a proportionate pro rata situation, if it was 5 years, even if I say a year, it was definitely under a year. that's 4/5 of the time they weren't operating. My rough sums would be that would be more like $25 million, not 20. So is there a non-linear aspect to this?
Yeah, I think it wouldn't be advisable to consider a linear sort of approach. Noting, as Mr Mason's already said, and I've indicated, there were eligible and allowable expenditure that Fortescue undertook in accordance with the grant agreement. That needs to be recognised.
Did Fortescue fully apply their rights under the agreement? Did they not seek to be more generous than perhaps they were legally required to, or they just did the bare minimum?
Senator, I don't know that it would be useful to comment on the negotiations through that process in this sort of a forum. However, the department engaged actively and regularly through the process of settling the amount that was due.
Yeah, fair enough. I can understand that. I think Australians would like to know, though, given the promises that were made, and Fortescue's a very well-to-do company, so they have taken off with $13 million of taxpayer funds, and that's just the start of it. Let's not get started on the $1 billion water pipeline, the hundreds of millions of dollars spent on transmission lines that they'll never repay.
Just back to your point about linear and non-linear, the purpose of the Modern Manufacturing Initiative, of which this was a grant under that program, was about supporting manufacturers to invest in capital and to scale up and create apply new technology. So in that sense, it would be quite sensible that it's front-loaded. It wasn't grant funding for operation.
We've got a shed now in Gladstone, in the middle of nowhere, may I add too. Maybe something will come of it. I keep saying we might get a Bunnings or something, but I'm not sure if it's in the right location. But what happened to all the equipment inside the shed?
Yeah, so the grant was related to them setting up, and so it wasn't for operational expenses, and so you can imagine it's more front loaded.
But we do it to generate jobs and production, and they haven't done that. What happened to all this stuff inside the shed?
That's a matter for Fortescue.
It's still their assets, so we haven't been able to recoup. Presumably that maybe, hopefully, be able to set this sold for something, so Fortescue might do a lot better at this than we expect. What about the Queensland government? Were you coordinating with them on these issues, or was it totally separate negotiations?
Senator, the Queensland government had their own agreements.
Right, okay.
Yep.
Okay. All right. Just let me check then. Minister, did you meet with Fortescue to discuss these issues?
No, I did not meet with Fortescue to discuss these issues. I've met with Fortescue on several occasions. I can recall at one point we made a passing reference to it, but it was very clear that the discussions that they would engage in were with the department. I think that passing reference was because it was in the newspaper on or near that day. It's not something I've engaged with them about, except to indicate, as you would imagine, that everybody has to discharge their obligations here.
Right, yeah, because it would be inappropriate, obviously, to negotiate.
Well, it's just a level of detail and operational detail. I don't know about inappropriate.
But you did meet with them. You met
Senator,
with.
But
how many times I've got here for this FOI disclosure? You met with them on the 30th of May. You met days. That was before. Sorry.
Look,
I think you met with them the 29th of July. Is that right?
I'm sure. And if we can provide you with more information,
maybe I know this because I think that was just days after the announcement.
Meetings with Fortescue. I mean, I meet very regularly with. Business proponents and leaders in the resources and manufacturing sector, and Fortescue is just one of them.
Well, I'm sure you'll have to take this on notice, but on notice, could you tell us, so I've got here from an FOI disclosure meeting, it says meeting request, on the 29th of July from 9 to 9:30 here in Parliament House with Dino Otranto, the CEO. So I suppose the question is, did that meeting happen? The documentation here says meeting request. And secondly, if you get on notice, when did the request come in to your office for that meeting?
We'll provide what we can on notice.
Yep. Okay.
I've certainly met with Mr. Otranto. Whether that meeting happened at that time or not, I don't know. If we can provide you with more information, we will.
Now, maybe I need to ask these here too. I also had some questions on the modern manufacturing initiative and debts from that program. Is this the debt recovery team here?
So if it's relating to the finalisation of grants, then this is the team. If it's related to the project outcomes, then it's the policy team.
Right. So I've got, this is also from another FOI document, modern manufacturing initiative. This is for the end of 24-25, so going back a little bit. But it said that there are 14 active. This note, or I think it looks like a brief to the Minister, I think. It says there's a note that there are 14 active MMI integration and translation stream debts totalling $18.5 million due to grantee underspends. Is that something you're tackling as well?
We can look to answer some questions on that if you'd like.
Well, my main question is, have you recovered that $18.5 million?
Senator, I'll swing to Mr. Stiller, but we're certainly actively recovering.
Well, maybe another way to put this is, because presumably you have an update on this, that rather than go back to that period, how many MMI debts are still owed, and what is the total of that?
Yes.
So, Senator, as at the end of January, this is for MMI translation and integration streams. 8.78 million. Are still debts that are outstanding.
Was that
8.78 million.
8.78 million, okay. How many projects grants did that relate to?
There's 6 payment plans in place. I might need to check that figure, Senator, but I can do that.
Can you tell us who?
I don't have that information with me, Senator.
Maybe take that on notice. It says here in this thing, it said underspends, debts because of underspends. Can you explain, what does that mean? Is that all? Is that 8.78 from underspends? And if so, what does it mean?
So the 8.78 certainly includes underspends, and that's sort of a natural thing, Senator, that as we were talking about before in relation to Fortescue as an example, 44.9 million was the award of the grant, and then you think about how much money is received, and then the budget that and the expenditure that the actual grantee undertakes. So it's not an unusual thing that the grantee may well successfully complete the activity. Turns out they didn't need the full amount that they received, and so that can then be recouped via a debt process.
Okay, so we don't, I would have thought though we'd only pay on a milestone basis, so we pay after they've completed something, and then at that point you'd know how much they spent. So we don't do it that way?
It depends on the grant, Senator. So some grants, it's certainly true, as you're saying, there's milestones, there's progress payments, absolutely. Some will occur where it's in arrears. Others occur in advance, noting that as the milestone and progress reporting occurs, that can provide us with the opportunity to reduce the final payments in recognition of how that entity is tracking. But of course there are instances where despite good tracking and good progress reporting, not all of the actual money provided is required. Okay, all right.
I've got here in that particular brief I mentioned from 24-25, there are 5, I think, grants that were terminated. One of which, I'm just bringing it back up, this table, because it's a very big table. So I've got to get the headers right. Right, yep, okay. So one of the 5 terminated projects, which are shaded in sort of a reddy orange, was for Albemarle, and it was a grant for $4.8 million. I think, again, just let me double check on the headers. Yeah, the project was 9 something and the grant amount was 4.8. 1.9 million was paid, at least at this point. And there was an amount remaining. So is that still outstanding, Albemarle, the 1.9 million that was paid?
I'll need to take that on notice, Senator. Probably I'll just add that that particular grantee sought a termination of the agreement. So
yeah, yep.
Just so you're aware, but yeah, happy to take that on notice.
Okay, all right. Okay, all right. That might do me for corporate, unless anyone.
Oh, sorry, Senator. I've just received information that that debt from that grantee was repaid in September 2023.
Okay, thank you. Cheers. All right. Okay. Happy to move on then.
Yes.
Chair.
Okay. That was hopefully some of your questions in other areas will have been covered there, so we can pick up some time. That concludes our session for corporate, and given it is now 3:40, we might break 5 minutes early and then come back at 3:55 and do outcome 1, program 1.1, if people can be ready then. Thank you. Are you...
Yes, looks like it.
Yeah, all right. We will recommence. The committee welcomes representatives from the Department of Industry, Science and Resources for Program 1.1, Growing Innovative and Competitive Businesses, Industries and Regions. Senator Colbeck, you have the call.
Thanks, Chair. Screen just went blank. That's good. Just before I go right into things, and I know I'm flipping back to right to the beginning, but the statement that Ms Quinn that you made with respect to Mr Warrington, I never had the opportunity to interact, but I do acknowledge the Minister's comments with respect to the National Measurement Institute. A lot of people wouldn't get it, wouldn't understand what goes on out the back in that organisation, but there is so much that goes on in our economy that's important from that organisation. So from this side of the table, from the committee side of the table, I just add our thanks to Dr Warrington for what he's done. I saw that in my previous life before here on many occasions, but just so much stuff that we do that we take for granted. The work of that organisation is critical too.
Thanks, Senator Colbeck. I know that Bruce will appreciate that. Thank you.
Now, I was going to go electronic. I'm going to have to go manual. We might skip around a little bit through, and here we've done some of these before. I just want to go to the industry growth program, which we talked about earlier, or Senator Canavan talked about earlier, and go to the 102 that was cut out of the industry growth program. So the effect of that cut, does that mean that there will be a smaller number of expected recipients, or that recipients will receive smaller amounts, or both? What will be the effect on the Industry Growth Fund from that $102 million cut?
I'll kind of answer at a high level and then pass to my colleague, the Executive Director of the Industry Growth Program. The fund is a demand-driven program, and the number of grants, the size of the grants and what the grants are spent on is all sourced from the companies themselves. The overall effect of the savings is that there will be a reduced amount of money for the program over 4 years. Whether it's a reduced number of recipients or a reduced number of grants is going to depend on the mix of grantees and their applications and the meritocracy of their actual claims.
So the operation of the fund will operate the same way, but the bar effectively will be higher if there's more applicants than there is funding available.
So it is a merit-based system, and there is an assessment, but I'll hand to my colleague to kind of talk about how the program's running now. And we are in the process of thinking about the application of the savings to the program. But over to you, David.
Yeah, thank you. Thank you, Senator. David Tutor, Executive Director for Industry Growth. The program has two main constituents. The predominant part of the program is the advisory service that's provided by expert advisors to high growth potential and innovative small and medium businesses. The program's already delivered or is delivering that service to around 1,900 businesses today, all around Australia since it opened. Once they've received the advisory service, they have the opportunity to apply for one of the grant opportunities. So, as the Secretary indicated, the Department is working through what the impact of the MyFO savings are to the program, but it remains, the program remains open, it is business as usual, and there are no changes currently to the advisory service and the value proposition that companies can obtain from that. The grants themselves are assessed by an independent committee. And then the recommendations from that grant committee are then put to the program delegate within the department, who will then assess those recommendations and consider them against available funds as to which grantees are awarded.
So the advisory service element of the program will remain the same, with the same capacity?
Subject to the deliberations the department's going through in terms of how would those savings translate into any potential changes or reconfiguration of the program. We have 33 advisors in and around Australia at the moment, and applications remain open, and we are supporting businesses all around the country as we've done over the last 2 years since the program was opened.
I'm sure you've provided this before, but what's the distribution of those advisors, those 33?
We certainly can provide that detail, but we have advisors from as far north as Cairns, down through Brisbane, through Northern Rivers, into Sydney. We have an advisor in Canberra. We have advisors in Melbourne and around regional Victoria, South Australia and Western Australia.
You're leaving me feeling very sad as a Senator for Tasmania.
We don't have an advisor in Tasmania, and we don't have an advisor in the Northern Territory. The advisors were selected through 2 rounds of procurement tenders. They are contracted to the department. Yeah, they're contractors, and bringing industry expertise. And the selection process dealt with the tenders we had from around the country. And so if they were effectively, we were supporting where the demand was for the program, which has predominantly been in the major states and where innovation and manufacturing is looking to grow.
So how are those other two jurisdictions serviced?
They're serviced by advisors. So in Tasmania's case, for example, they're serviced predominantly by advisors in Melbourne. And in Northern Territory, they have been serviced by advisors from either South Australia or from Queensland and far north Queensland.
Okay. So proximate base, effectively?
Effectively, yes.
Yeah. So you don't know, what's the time frame of the contracts for those advisors? When do they cycle through?
So the first advisors that were contracted by the department, the way the process works is advisors are contracted and they put in a tender for a 2-year contract with the option for the department to extend for 1 further year and then up to 1 further year beyond that. The first cohort of advisors that came into the program, their 2-year contracts were due, their 2-year contracts are finished around about that December-January period. We have that we've just been through, correct? Yep. We also then broadly doubled the number of advisors in the February-March period last year, and their contracts will be running through to February-March 2027.
So potentially you could, well, how many of those expiring December, January have been extended by 1 or 2 years?
They've been extended by 6 months. And I can provide the exact number on notice, but around about 10 advisors have been extended through that period.
So they had a 2-year contract with an option for another 1 year plus another year, and you've given them 6 months?
That is correct.
Is that a not so subtle smoke signal?
Senator, can you clarify what you mean by that?
Well, if I was sitting there with a contract with a government department that ran for 2 years, and then I had a 1-year option of a 1-year extension, then another 1-year extension on top of that, and the government came back and gave me 6 months, I'd be looking over my shoulder, thinking that at the end of the 6 months, that was it, because my contract says your extensions are 1 year and another 1 year. That's what. So, do those 10 have a future after the 6 months?
So at this point, we've said that the government has taken savings from this program. We're looking at where it's at. We've been doing an evaluation, constant monitoring of how it's delivering for the government's needs. It's prudent on us to manage the contract workforce in a way that's appropriate for our financial obligations. The 1-year extension was entirely at the department's ability to extend or not. That was part of the contract to start with. And so the 2 years was the certainty. The extra was always depending on the shape of the program, their performance also, and whether they were delivering the services we needed across the distribution of businesses that were coming through the door. They don't all have the same expertise in all the different sectors, so we always wanted flexibility to be able to meet the demand of the program. And that has turned out to be slightly different than we expected. We've had more micro businesses, so we've had to kind of think about the distribution of services. So I wouldn't say that there's anything other than us being prudent contract managers in the decisions that we've taken.
Okay. So have there been any, or are there going to be any further rounds of contracting for the advisory service, or that's done?
It's going to be. We have the advisors on the 2 years, and we have the advisors on the 6 months. We will. There was always the intention to roll over the advisors over time, and that will be subject to any design parameters that we make, which we're considering now.
So you can't really tell us at this stage what the effect of the $102 million cut will be. What proportion of that would go to advisors, and what proportion of that would go to grants?
In very round numbers, the proportion of funding that's going into advisors is in the order of 9 to 10 million. That was for, it's probably about 9 million. We can get you the exact number, and happy to take that on notice.
That's all up?
That's for the contracted advisors, and that would be the sum of their annual contracts. We also have at the moment industry partner organisations, and so Senator, to your comment about regional reach, we've got 6 industry partner organisations that also have partnerships around the country, including organisations, for example, in Northern Territory and Tasmania. There's around, in round numbers, $5 million per annum that is granted to those organisations as well. So in very broad terms, around about $14 to $15 million per annum for the advisory service element in terms of contracted advisors and industry partner organisations, but I'm happy to take on notice the exact details around that.
And what does that leave for grants?
It changed over the years because we had there was some the profile was different for the program over the years. If my colleague doesn't have it off the top of his extra detail, happy to take it on notice. But there was there's a profiling issue in terms of the scheme and how it distributed the money over the financials.
So when the program was first announced and launched in November 2023, the program was $392 million, of which at that point in time, around about 287 was earmarked for grants. That changes at any point in time based on the number of grants awarded, the spend profile of those grants, the payments to the grantees, and grants that are in process with the grant committee and those being recommended. So at any point in time in any given fiscal period, that number will change.
I have actually just found the total administrative budget, which is in round numbers around 49 million for 24-25, 96 in 25-26, 88 roughly in 26-27, and 45 in round numbers in 27-28. So they're the sort of rough orders of, and then 38 million in 28-29. And so if you subtract the round numbers for the advisor element of about 14 million, you'll get the element for grants. It is the case that we initially had more funding in for 24-25, but as I said, the grants that came through the door were smaller in amounts than we were anticipating, and so we have moved some of that into forward years to adjust for the demand.
Okay. You rotating?
Yes, I am. Senator Canavan.
Okay, all right. Might go back to the contingency bit with the Mount Isa grant from MyEFO.
We have got my colleagues here. They'll give you the detailed answer, but the high-level answer is the announced funding is of around 300 is correct. The contingency is a stage gate. It's the third year's payment is contingent on the outcome of the transformation study. It's part of the agreement, and so this is a budget treatment. There's not a contingency for any overruns or any expected changes. It's all accounted for in the contract.
Okay. I'm just not really following that, sorry. So isn't the contingency reserve an amount of funds?
It is, yes.
Right.
And it's in the contingency reserve rather than given to the department because it's contingent on the outcomes.
Part of the 300 million is in the contingency
part of the 300
reserve.
million. It is part of the 300 million.
Okay. Gotcha. Okay. All right. So it may be less than 300 million is, I suppose,
if the stage gate's not met.
Well, I did. Okay. Well, what are the stage gates?
I'll hand to my colleague.
Thank you, Senator. Louise Talbot, Acting Head of Division, Industrial Transition Response Team. So there are a number of stage gates. The one you're talking about is the one for the third year of funding, which is contingent on the completion of a transformational study. So the pattern of the expenditure up to a maximum of $300 million is outlined in some detail in the Federation Funding Agreement with Queensland Government, which is published.
Okay. Is any of the amounts... Well, actually, before I get to that, let's take a step back. I wanted to ask about this. When this issue cropped up, probably a little bit less than a year ago now, well, it was probably about a year ago, I think they were called the treatment charges for copper, from memory, had gone negative, or at least were very, very low. There's been quite a lot of movements in the copper market, at least for finished copper products. What's happened with treatment charges in the last 6 months or so?
So I don't have that in front of me, but there are changes in treatment charges as the market changes, as you'd be aware. So the funding under the agreement is for a range of activities, not just related to treatment charges.
Okay. Well, yeah, that was going to be my next question. Is any of the funding to Glencore contingent on treatment charges for copper?
So not exactly contingent on treatment charges for copper, no.
Is it contingent on the returns that Glencore are achieving from copper production?
So there are a range of conditions and stage gates, etc., in the funding agreements related to a number of things, including the finances. Yes.
Okay, now I'll just come back. But let's be more direct. Because when Glencore came to almost all of us, I think, and made these issues clear, yes, they had a reasonable case given the change in the market conditions, and they were making huge losses, understandable huge losses, and those losses seemed somewhat due to predatory behaviour from particularly China. There was always the potential, though, for those market conditions to turn around. There's obviously a fairly optimistic view about long-term demand for copper around the world. And that, as I say, the finished price of copper, as my understanding, has surged in recent months. That's different, I know, from the smelting prices that Glencore are exposed to. But given the potential volatility in the market, I'm just wondering whether you designed this contract, this funding, with a view to protect taxpayer value in the event that the market turned towards Glencore's favour.
So absolutely, that's a fundamental premise of any agreement that we have with companies. And in that particular agreement, there's a number of performance milestones, including and there is details set out about the timing and what those milestones are in that Federation funding agreement, including confirmation that the cost claim for reimbursement in respect of the working capital funding are in accordance with the financial assistance agreement conditions. So the things you're talking about are covered.
That's not quite where I'm going. I'm more talking, are there any links from Commonwealth funding to metrics of Glencore's profitability, say net profit or EBITDA or something like that?
So there's certainly...
Not simply that they spent the money, but I'm more interested in actually the performance of the asset.
So there are certainly review points around the ongoing need for the financial assistance. I think that is your question.
Okay, so when's the first review point?
The first review point is the 30th of April, 2026.
Right. So potentially if the markets improve by 30th of April 2026, the funding could stop?
The funding is for a particular purpose to support the operations of the smelter, and we have worked through diligently, with, not just us, but with the Queensland Government to protect taxpayers' money. If the purpose for which the money is provided is no longer needed, then there are abilities for the mechanisms to
Okay, I'm just trying to get you to spell me that out. Like, what is it? What is it? You can see where I'm going.
We'll let officials sort of answer on the detail. I mean, still a very tight margins around treatment charges believed to go right through 2026 at the very least. And I'd just say that notwithstanding movements that may or may not happen, and officials will be able to take you through how the Queensland Commonwealth Glencore agreement deals with those issues. The point is that it's a concentrated market that doesn't function like a market should, and taking steps to secure the viability not just of that facility but the broader region is what underlies our approach to that agreement. It's not like a sort of temporary shift in a market that's a market that operates like a pure market. That is not the copper market. We're acting to protect Australian capability here.
Yep, I got that. I'm also very much aware that Glencore's a very savvy business, and good luck to them. But yeah, I suppose what I'm wanting to know is that if the market improves appreciably for Glencore and suddenly they're making good profits again, that we aren't still handing them over taxpayer dollars and just adding to their profitability. So I'm just trying to get a bit of clarity on exactly how that would happen. So say on the 30th of April, there's a market assessment done and this asset is back in profitability. Does that give the Commonwealth the right to say, okay, no more taxpayer assistance for now?
So, Senator, the exact details of the agreement are commercial in confidence, and so I can't go through the exact details, but what I can provide you with is assurance that there are ongoing review points in the agreement and regular review points, and that they do relate to understanding the ongoing need for financial assistance.
Right. Can the funding completely cease? Surely you could tell me that.
So there's different elements of the funding. Some of it's related to capital investments and capital, so there's different elements of the funding package. Some of it is contingent on the overall performance of the company, and some of it's related to specific funding. So it's a mixture of both.
Okay. And what exactly, when you say assessment or these review points, is that defined in the agreement towards particular financial metrics, or is it simply there'll be an assessment at the time and the details of that left up to when it's done?
So, Senator, there are a range of details in the contract, but I'm not at liberty to reveal those. They are commercial in confidence. The contract with the
I'm not
company
asking for the particular thresholds.
There are specific arrangements.
Is it linked to specific financial indicators, like net profit, EBITDA, anything like that?
So there are
ratios?
specific negotiated measures which are clear to all parties about what the terms of the review points are, and particularly for the first 2 years. That is all specified in a specific legal document that is commercial and confident. The high-level arrangements are available through the federal funding arrangement information that's available, but the specific commercial details for the reasons that you would understand, because it relates to the Glencore's actual business model and arrangements. They've also provided a set of agreements related to their actions, capital outlays, employment outlays, those sorts of things. So there's obligations on Glencore in there. There are obligations on the Commonwealth in there. There are obligations on the Queensland Government. This was a three-way negotiation, all determined and T's crossed and I's dotted in a legal document that has very specific terms in it.
Broadly, there's a history here in Mount Isa. And what is required, in addition to what the Secretary's just indicated, is both a confidence in terms of the facility itself, certainty about the next 3 years, provide some basis for investment decisions and confidence from workers in the future of the facility, but also a collective effort to get a grip on the industrial economics of that region, together with not just that facility, but the other facilities that relate to it, and the larger and smaller miners and prospective mining operations in the region, how we chart a course for that industrial region. That is what this agreement is designed to do. That's what the transformation effort is all about. It's an effort to balance some of those competing issues to try and chart a real future for the region.
Okay, I've got this. I'll just ask one question. You might come back to it because this is a little bit detailed. But I've got the federal financial agreement now. There's milestone 1, 30th of April 2026. There's a number of dot points the Commonwealth has to accept, and in summary form, including confirmation that MIM is entitled to payments, confirmation of continued operations and costs. I think you sort of mentioned that earlier. Confirmation that costs claimed for reimbursement in respect of working capital in accordance with the financial assistance agreement, evidence of financial assistance provided by Queensland, fair enough, commencement of a transformation study, and establishment of a governance arrangement in accordance with the FAA. I just don't see there, I'm struggling to see where of those conditions actually relate to the profitability of Glencore's operations. That's my question. But maybe we can come back to it.
Yeah.
Because we're at 10 minutes, so...
I think my team will correct me, but I think it's calculates in the first item.
Sorry?
The team will correct me, but that first... I haven't got it in front of me, unfortunately, but the team might. But the very first item...
So the financial assistance agreement is something we don't have?
Yes, and it's encaptured in there. So they have to conform to that, which, broadly speaking, is related to their financial viability.
Right. Thank you. Senator McDonald?
Well, this is tidy because my questions are following on the same topic. So does the bailout package include the capital costs for the re-bricking of the smelter this year in 2026?
It does have capital components related to the operation of the business, yes.
Specifically, though, the re-bricking?
So the specific details are commercial in confidence, but it does have capital items in there, as just mentioned, through the list that Senator Canavan mentioned. So it supports capital, it supports operating capital, and it's got a transformation study.
Okay. Just that the re-bricking of the smelter at Mount Isa is something that holds the city and the region on tenterhooks every 3 years. And
yes, and part of the transformation study effort is an effort to try and get a hold of this so that there is not that 3-year cycle. Like that is, we understand that acutely.
Terrific. So just because you've spoken broadly about the capital, I just want to be very specific that the 200 million, I assume that it is still broken into equal amounts, year 1, year 2, year 3, 200 million each? Yes?
Yes, that's correct.
And so in this first year, that would include money for the capital works for re-bricking of the smelter.
So we haven't broken down the specifics publicly. It involves supporting capital to maintain the ongoing operations of the facility.
Okay, so if Glencore was to come back and say that they're going to ask for money for re-bricking this year, you would be surprised?
Yes.
Okay. The next part I want to turn to is there was a media release, I think it was today, the Mount Isa transformation study to shape region's next chapter, expressions of interest. That's a joint media release between the Minister and the Queensland Mines Minister. Can I ask you some details about that? It was my understanding when we had this conversation at the last estimates that Glencore was going to be involved or carrying out that study, but I should step back and say, no, it is actually the two levels of government, federal and state, who are carrying out that study, and Glencore will make input to the study as opposed to having any carriage of it.
We'll all be part of it. There's a shared approach to that. Glencore will play its part in that work. I'm looking forward to those discussions to the extent that I will stick my head into those. Glencore has committed to, as part of that process, playing a direct role, and it is a process that's going to be that will assist the parties to flesh out the details of what the industrial future, what a credible, competitive industrial future for the region looks like.
Given that Glencore owns the lease that the smelter is on, how do you see it will work that there be a proper examination of new technology, alternate sites, possibly a buy or an acquisition of the site should Glencore decide that they know what to... I'm spitballing here, but, you know, should that operator no longer want to operate the smelter, how do you think that will all work? Or what role will there be for that input if Glencore has obviously got a vested interest in what those opinions might be?
Well, the release, what it really does is say we're going to identify somebody to run that process. Of course, everybody who's engaged in that at a commercial level has different interests. I don't want to spitball, as you say, Senator McDonald, about what the potential views that people might bring to that process. But it is a region that's rich in mineral resources, where there's, in some places, junior miners who have really made a go of resources that other operations have struggled with. So there's room for optimism, but it won't happen by itself. And so that facilitation is designed to get a hold of what the medium and long-term issues are that the two governments and the industrial and resources players in the region need to commit to.
So you've drawn my attention to something that I'd perhaps very optimistically filled in some gaps that weren't correct to do. This media release is calling for an expression of interest to be the proponent to carry out the transformation study. I had, in my enthusiasm, read it as expressions of interest to make submissions to the study. But
No. And I'll let the department just talk to the timetable for that, but it is envisaged... this is moving fast to get a process up and about. I'll get the officials to go to the completion date of the transformation study, but it's certainly not an endless process.
At a high level, there's all proponents to the agreement, so Queensland Government, Commonwealth Government and Glencore are parties to the transformation study. The expression of interest is for the technical expertise to be able to assist in doing the transformation study. But the timetables and things I'll let the team talk to.
Sorry, just to clarify that, so it will be for company XYZ to draw in the submissions, to write the technical paper and to
work with the Commonwealth, Glencore and the Queensland Government and others
yes.
to look at the opportunities in the region. So it is the analytical support for the process, but there is a governance to the process, and so it's asking for people to help in the process, but it's not the whole element of it.
And that's funded from the 200 million for the first year. And can I ask, how much is going towards the transformation study?
So that is commercial and confidence, and particularly if we've put out an expression of interest, we wouldn't want to. There's commercial discussions in terms of paying for it. So. Okay.
But you'll be giving some guidance to whoever's making the application, whether it's 50 cents or 50 million. I'm still struggling to understand a little bit that if Glencore's a party to the transformation study and then the study starts throwing out things that's not in Glencore's, their perceived best interest, will you have a process that they are, you know, that it's the national interest comes first and that they don't get to rule in or rule out studies or ideas that they may not want to see?
So Senator, if I may, that's correct. The study's purpose is to provide a comprehensive assessment of the whole of the region's economic potential and of the North West Minerals Province in Queensland. So it is much broader than just Glencore. The expression of interest, just to clarify, has been put out by the Queensland Government for somebody to undertake the transformation study, and that does include a range of scope in terms of reference, which of the things that will be covered in the study, which are much broader than just the copper smelter itself.
And will Glencore make a financial contribution to that study, given that at the moment they're in receipt of funds from the state and Commonwealth?
So the first year of funding that you've identified, the transformation study will be funded out of that first year of funding.
So they're not making a contribution per se. They are the happy recipients of that study being done. That's a characterisation. That's fine. So just back to the study. So we've identified that it's going to be an external contractor doing that work. Can I just...
It won't be entirely, just to be clear, the Commonwealth will bring its capabilities, the state will bring its capabilities, we'll be drawing on other areas of people contribution, but clearly you need someone to kind of orchestrate and help combine, like a sort of a secretariat service almost. But we will be providing analysis from the department into that process as well, and we would expect the Queensland Government, in terms of its information it holds on opportunities in the area, and so it's not going to be sent off to do some analytical research in the corner. It's going to be a live, dynamic process.
No.
And you've raised some issues about conflicts in terms of different proponents are going to have different views about what they want to happen in the region. And the view is there's a need to have a proper, rigorous process about what the options are to look at the different scenarios. And so it's unlikely that it's going to say this is the one true solution. It's going to be much more of a scenario analysis.
Yes, and that's, I mean, this external contractor or whoever's the successful proponent for providing the secretariat for the study, I mean, I'm very keen that there be some of that expertise, as you say, which, you know, isn't housed in government departments. It's housed in you know, the brightest of industrial minds. So
I've discovered that there's a lot of people who've had a lot of experience in that facility and around it who've got strong views and expertise. And
it's not a slight, but it's just not normally governments that come up.
No.
with the best
I'm just saying
ideas.
there's people there is expertise around, and people who are for all sorts of you know, people who are engaged in this process who've got an iron in the fire in terms of some of these things, but people who are engaged in it because they actually just deeply care about the region.
And I'll just finish up on this point.
We want
then.
to bring as much of that together as possible.
So, I mean, you know, for example, the Port of Townsville has just built a new temporary hard load stand. The rail operators are bringing on additional to support not Glencore but other miners in the region. So, yes, I think there's a lot of interest in making sure we get this right, and I'll come back in my next round. Thank you.
Thank you. Senator Canavan?
Mike, do you want to go back to Senator Colbeck?
Yep, sorry.
Keep moving up and down the table.
Yeah.
I'll just go back to the industry growth program. We've got a couple of quick questions to follow on with that. We've looked at discussed what might happen to the existing or what's left of the program. Can you tell us where the money went to? What other programs the funding was reprioritised into?
So the overall savings measures in my EFO went to other priorities of government. There was not a direct line link between the savings and individual measures. It was there were a set of savings measures and a set of expenditure measures, and they go together as a package, but there wasn't a direct link between savings A and spending B. But broadly, the additional funding that was in MyEFO went to the delivery of the National Reconstruction Fund Economic Resilience Program, support for the Boyer paper mill, strengthening anti-dumping for key sectors, a master plan for Hunter mine sites, things to do with renewable energy infrastructure, and supporting Australia's clothing and footwear industry.
So some money did go to Boyer?
Yes, that was in the MyEFO, 24 million over 3 years to stabilise operations and support the transition to renewable energy and diversify production at the Boyer paper mill.
That was for an energy transformation project, is that right?
Transform energy, renewable energy and diversify production is the description of the measure in MyEFO.
If you could table for us the list that you've just given, that would be helpful, thanks. So it's all retained within the portfolio, the $102 million?
The savings all, yes.
I want to go to Liberty at Bell Bay and get a sense of where things are at with that project. You, as I understand, undertook a rapid assessment process which started in May last year. That's finalised?
Yes. That's right, Senator, and we have some colleagues joining us at the table who are leading on Liberty Bell Bay.
So is the rapid assessment process finalised, and what did that find with respect to the viability of the, or commercially viability of the site?
Senator Troy Sloan, head of the Whyalla Steel Works task force. As the Secretary said, the rapid assessment has been finalised. The findings of that assessment informed the Cabinet process, so we are not at liberty to disclose that.
Well, the Tasmanian Government, I understand, believe that Liberty Bell Bay could be commercially viable. Does the Federal Government agree with that perspective? And they're still working on maintaining that asset. It's the only manganese smelter in the country. I mean, what impact does that have on the supply chains if we lose access to sovereign capacity in manganese?
Senator, I'd answer that by saying the vast majority of the product out of Liberty Bell Bay is exported, and mainly to the United States.
But it's still one of the critical minerals mentioned in the overall critical mineral strategy, and we've just signed a critical minerals a relationship with the United States. Wouldn't it form an important part of that process too?
Senator, I'd answer it this way of saying there's two types of manganese, is my understanding, and my colleagues may correct me if I get this wrong. One is on the critical minerals list, as you pointed out, but that is not current, or hasn't been in the past, is my understanding, produced at Liberty Bell Bay.
Okay. So has the government received a specific request for assistance from the Tasmanian Government, from the Premier?
Senator, we are in constant conversation with our Tasmanian colleagues, and I don't think it would be appropriate to disclose those confidential conversations.
Senator, I think, and I'll let the official continue on the detail. If I might just make a couple of comments about this. I mean...
and can I say before you do, I understand the difficulties around the company, and so I'm...
Yeah.
we're on the same page on that side of things.
And I just... Yes, and I mean, as I understand it, workers received their pays today in accordance with the regular run. They shouldn't have to worry about whether they're going to arrive.
No, I agree.
They shouldn't have to worry. put aside the rapid assessment, and officials can talk you through that and the state of discussions and consideration of this set of issues. This company recently, some years ago, but in the recent history, was well capitalised. It was efficiently producing, exported, including to the United States. Had certainty of supply chain in terms of its the product it received. The responsibility for resolving these issues lies squarely with the owner of the facility. We are obviously keeping a very close eye on it, and at my level, been engaged with the Tasmanian government. At the official level, that engagement has been constant. I have watched and the efforts that the Tasmanian government has made, including recently in pretty extraordinary steps
taking hold of the stockpile.
Yeah, all of those measures we talk about those, but I just make the point: the responsibility for this is for the owner to capitalise this facility properly. And that should happen, and it should have happened yesterday, and it ought to happen tomorrow.
So I'll note your comments with respect to the fact that it was running well, running viably, had solid supply chains with supply of material and delivery of material into its export markets. It is an important employer in that neck of the woods, and the fact that the workforce is still there is important, and the fact that, as you've indicated, that they're still paid. But it's important to not just for the business itself, but for also its tentacles out into that northern community.
I don't say this to do anything else, but to indicate that I understand. I've met with workers there off-site. I've heard about of course, the experience of suppliers and contractors in the region. It is a very significant employer in the region. Yep. Plays an outsized role in terms of maintenance contractors and other suppliers in the region. The department officials have been are very diligent in terms of the way that we've worked through the assessments and the engagement with the Tasmanian government. But the core issue here, where there's a range of facilities that we've worked through some challenges with. The challenge here is that the owner has to do their job and
act responsibly.
And fulfil their obligations.
Thank you. I'll walk around the corner from Liberty Bell Bay to Bell Bay Aluminium. This is I think a bit of a weird one, really, because when you released your green aluminium support fund some time ago now, was it January 2025, so a year ago, the Green Aluminium Production Credit Scheme. And as has been discussed here a lot of times, that in this committee, energy cost is a big deal. The reason that Bell Bay Aluminium is in Tassie where it is because it's had access to a reliable source of energy from Hydro Tas for a long time at very competitive rates, and I think it's something of the order of 20% of the Tasmanian grid, so it's an important player in that context as well. but it seems to me very perverse that a company that is producing aluminium using green energy, it has reduced its CO2 emissions over the last 30 years by probably 50%, because reducing energy utilisation is an efficiency that it gains, because aluminium is basically solid energy pretty much, and yet it faces genuine difficulty in accessing the scheme that's set up to support green aluminium production because of its legacy. I just find that really perverse, that you potentially lose one of the cleanest producers of aluminium globally in terms of its CO2 outputs, but it's facing exactly the same pressures as everybody else. I mean, how do we make that not happen?
Can I just make a couple of headline comments about that and then go to officials on the on it? Really, there's a limited amount I can say because of the status of the.
So Tassie's got a 12-month extension on the deal with Hydro so they've done their bit, but Tasmanian government has said we can do so much, but we need help from the Commonwealth, and that's the underlying element that sits here.
Yeah. So green aluminium production credit still under design. So there's a limited amount that I can say about that. That's the first thing. Second thing is it's there are smelters that are sourcing lower cost renewable energy contracts, and we're working through that process. Third thing is you're absolutely right. That facility is there in Tasmania because it's had access to low-cost hydropower from a publicly owned hydro Tas.
Yep.
It's not next to a giant bauxite facility. It's there because of the
energy supply.
It's there because of low-cost electricity. Hydro Tas and the owners of the Bell Bay facility are engaged in discussions. It is important that they resolve those discussions, and I don't want to say very much about it because that is they have to get there on those questions. That is the competitive basis for the future of that facility. It's a facility that's been there for a long time, a very long time, we want to see it. We want to see it succeed, and we're watching the progress of this very closely.
So, on my final point, having been wound up by the chair, I know that the Tasmanian Minister, Minister Daigan, has said his view is that it should qualify for the production credit scheme. You've said that program is still under design. I will add my advocacy to Minister Daigan and the Premier in respect of that scheme because, as I said before, I can't see how you could lose a facility that's producing competitively green aluminium for other sites that might still be using other.
I don't know if there's anything officials want to add, but
look, I accept I'm making a comment.
Yep.
I get that,
Yep.
Minister,
Fine.
but I'm delivering my message to add to Minister Daigan's. Thank you, Chair.
Thank you, Senator Hodgins-May.
Thank you, Chair. I've got some questions about major project status. Can I confirm that this is the right part of the program?
It is, yes.
Terrific, thank you. On 3rd July 2025, Minister Ayres announced the major project status of Bonaparte CCS in a media release in which it was labelled a large-scale renewable energy venture. Did the department provide advice to the Minister or his office on how Bonaparte, a CCS project, can be labelled as a renewable energy project in the context of this announcement?
So while I wait for officials to join, at a very high level, the Major Project Facilitation Agency does assess proponents against set criteria. to whether they meet the required status to be passed through to the Minister for decision. So we do provide advice against the criteria. It is the Minister's decision at the end. So we would have looked at the criteria as identified, but as to the specifics of your question, I'll pass to my colleague.
Thank you, Senator. Bridget Gannon, Head of Division for Whole of Industry Division. I'm sorry, Senator, could you repeat that last bit of the question?
Yes. Did the department provide advice to the Minister on how Bonaparte, a CCS project, can be labelled as a renewable energy project in the context of the announcement?
As to the specifics of your question, Senator, I'd have to take that on notice and go back to what advice was provided at the time. But as the Secretary said, the criteria against which we provide advice to the Minister on whether a project should or shouldn't be designated as a major project and have major project status is set out on the website, on the department's website, and it looks at the strategic significance of the investment, whether it faces complex regulatory challenges and the financial viability of the project.
Thank you. Is it possible to table that advice that you would have provided as well?
Senator, I'll look into that. One of the barriers we have to providing that advice is that it contains typically a great deal of commercially sensitive information. And the other is that through the course of the advice, it demonstrates our methodology in assessing the applications that we receive, and we're reluctant to release information that might allow future proponents to kind of anticipate our methodology and game it. But I can look into that for you.
I'm probably less interested in the methodology, but anything that speaks to it as being a renewable energy project.
Of course.
And I suppose then that follows into my next question. Is large-scale renewable energy venture a formal category under major project status, or was that just the communications used for that particular?
So it's not. There's not a split between different activities, and we've got the list of activities of projects that have been identified as major projects covers renewable energy hub, nickel project, hydrogen project, and various other things. The broad criteria were, as my colleague outlined, which is relating to significant project, regulatory complexity and the like. So it's not targeted at specific areas of the economy.
Okay, so that's not a specific bucket. So do you know who would have labelled it then, given it that label as a large-scale renewable energy project? Would that have been?
In all likelihood, it was the characterisation of the project we would take from the company itself, because they're the ones that understand what their project is. But it would have been backed up by the material that they provided to verify what it is that they're undertaking.
Okay, if there is any more information about that can be provided, whether it did actually come from the company or whether it was comms department or somewhere else that could be provided, I'd be grateful for that.
We're happy to look into it.
In January of this year, INPEX announced it had withdrawn Bonaparte CCS from environmental assessment. Does this change or alter its major project status?
No, Senator. Those regulatory processes that the companies are working through is something that we provide support as they navigate those processes, but I'm not aware of anything that's happened that's resulted in that status being withdrawn.
The process of the Major Projects Authority is, though, to go back and look at projects over time, and some projects have lost their status as a result of how long they've been in the program and what how far they're going through the steps, because we do try and focus on our resources on those that are more prospective. So there are review points, and I'm not sure whether the timing has worked out such that anything that's happened in the project has hit a review point yet.
Yeah, okay. Well, INPEX has signalled it will resubmit its environmental assessment once changes to the regulations of the EPBC Act come into place. Does DISA have an understanding, or have you sought advice from DQ colleagues or even maybe from INPEX itself about what changes INPEX are waiting for?
So this is a matter that we are working with our Department of Environment colleagues on, because there were some changes in the EPBC Act legislation that went through the House that has implications for the way aspects of the offshore regulation for gas projects works. And we are working through that. My resource colleagues will be here a bit later and they can provide more information on it. But at a high level, the regulation changes mean that we need to change some of the offshore regulation, which will affect the way NOPSEMA deals with various aspects of their environmental approvals.
And could you please table any correspondence between INPEX and DISA regarding its major project status approval last year? Is that?
So we'll take it on notice,
Yep.
noting the caveats that my colleague talked about commercial
Yep.
and confidence and the like.
And so, sorry, does it flow to say that INPEX will automatically retain major project status upon resubmission of its environmental assessment?
So it depends on whether they meet our criteria when we review the process. So they're not necessarily, it's not linked in such a direct way, but the Major Project Facilitation Agency reviews the projects in a steady and sensible way. And at that time, there'll be an assessment of what assistance it needs, what the likelihood of the project is, and does it continue to meet the criteria for major project status.
Okay, so you don't have any further information you can provide now about why it withdrew something that was touted as a large-scale renewable venture?
Other than what you've stated, which is it's waiting for regulatory clarification post-legislative change, which it seems eminently sensible because there are links between the offshore gas regulatory environment and the environmental regulations, and we need to make sure that they work together. That is work that the government is working through, and there are other proponents who are also waiting for clarity on how those obligations will be met under the new regulatory regime.
And does the department know what percentage of storage at Bonaparte is proposed to be CO2 from hard-to-abate industries like metal and chemical refining, as touted by the government, versus CO2 from fossil fuel production? Do you have
so I think we actually had a question on this last time, waiting for Hansard. We can... I'm not sure if my colleague understands. I'm not sure if that was part of their application for major project status. We can. If we don't
last
have
time
it,
I think I was
check
directed to this part of the program to ask this question. So,
yeah. So the question is it in the? Was it as part of their application for the major project status? That level of detail might not have been.
What percentage of is proposed to be from CO2 from hard to abate industries like metal and chemical refining versus CO2 from fossil fuel production?
Senator, we had a question on notice that went to this question from the last estimates, and we understand the project will initially focus on the storage of CO2 for INPEX's own projects, with the potential to sequester CO2 from third parties. That's the extent of the information I have on that.
So just CO2 from their own project.
Yeah,
sorry.
which is predominantly related to gas extraction.
So would you still then, if that is the case, consider this a renewable energy project? Does that?
I'm not sure that's something we've assessed anything against. So,
but it was labelled as a large scale renewable energy venture in an announcement by the Minister in July of this year.
Senator, I'm not sure that. I mean, it's a long time ago. I don't know about the sort of the labels that were attached to the project. I just make the point that gas, particularly in the context that I work in terms of its industrial use, is a very important feature of our industrial energy mix. B, particularly in areas where coal is currently being utilised, there are opportunities to lower emissions profiles very significantly by using gas. There's some obstacles to that because it's very expensive.
Surely you can't describe it as a large-scale renewable energy project. That seems like a bit of a stretch.
It seems to. I'm just going to the virtue of these kind of propositions. Gas is going to be an important part of our switch to low-cost wind and solar. Like, it's not possible to do that without some element of gas. I think somebody scoffed at me for saying the Goldilocks amount of gas. You don't want too much, you don't want too little in the electricity system. You want just the right amount because it's very expensive.
Yeah, we've got to stop exporting as much.
But you need that peaking capacity for stability in our system, and gas will continue to play an important role. Where there are opportunities for carbon capture and storage technology, whether it's in the gas sector, I think you also referred to some of those hard to abate, particularly where gas is a feedstock, it's part of a chemical process rather than just providing heat. Where there are opportunities in those hard-to-abate sectors or in the gas sector to do CCS, well, that is going to assist. I think the IEA projects 1 billion tonnes of CCS as part of the net zero by 2050 effort. It's by no means the main game, but where there are opportunities for a sort of fair dinkum effort from industry here that meet a series of other objectives, that seems to me to be something that people shouldn't be hostile to.
You're coming to time. So.
Oh yeah, I'll wrap up quite quickly. So we can table the media release. It was a very big announcement, celebrated by INPEX. If you were to announce it again today with the knowledge that you've got, would you label it a large-scale renewable energy project, knowing that it's essentially enabling the production and combustion of fossil fuels?
Well, as I say, the gas industry, and you saw the announcement that the government made in relation to the gas sector just before Christmas about gas reservation for Australia. This is an important national resource that should be used in the interests of Australians.
Yeah, I'm not debating gas. I'm debating the terminology the.
I'm not worried about the slogans.
It's not a slogan to people who are following the energy transition.
It's some time ago. If there's anything, we'll go back and have a look at it. If there's anything additional we can provide you, we will.
Yeah, I would appreciate if you did that. And given time,
I think Secretary's just reminded me that release wasn't only about that project. There were a number of projects that were referred to them. One of them, of course, was Sun Cable, which is a very significant solar project.
Yeah, I suppose it's the bundling even together.
Well, you know, it's all part of the industrial effort for a future made in Australia to secure our future competitive advantage in the interests of blue-collar jobs.
But it's not all clean and it's not all renewable energy.
Well,
that's the point.
I'm not too worried about that. I'm worried about making progress, industrial progress for Australia, securing good jobs in our regions. That Sun Cable project,
climate change,
for example,
energy.
Is,
you're not worried about greenwashing because it is greenwashing. Essentially, that's what it is if you are bundling that project, a CCS project that is.
No, absolutely not. It is all about securing our industrial future. Our industrial future is going to be based on lower emissions energy. We are going to require vast amounts of electricity.
I'm not disputing that we require vast amounts of electricity. I'm talking about greenwashing.
And certainty around gas. We're going to require investment and action from the government, and that's what you're seeing from us.
Well, we just prefer if it wasn't masquerading as renewable energy. But thank you, Minister, and thank you, Department.
Thank you. Senator Canavan.
Just trying to finish off this bit about the heavy industry package. So just quickly, we went through that Glencore agreement. Just trying to check. So that first dot point you were saying that we read out before about having to comply with a financial assistance agreement, I think. That agreement has links to Glencore's profitability. I just want to be clear. So the more profitable Glencore is, the less taxpayer assistance there will be. Is that correct?
So the precise details of that component is commercial and confidence. The requirement for the general proposition of why both governments have worked with Glencore to support the smelting operation in Mount Isa is the need to support them given the geostrategic background, the international prices, the state of the market, and the need to transform and have sustainability over time related to capital expenditures and the like. So the overarching objective is to support the continued operation and transformation of those facilities. We have worked with the Commonwealth and the state government to ensure that we're protecting taxpayers' money. The precise mechanisms are commercial and confidence.
I'm just not getting a lot of confidence though, because I'm trying to move on and do this quickly.
Yeah,
I just want to know, is there a link between Glencore's profitability and how much the taxpayer has to throw in?
So there is a link between the commercial viability and the financial operations of the company and the amount of money they get through stage gates, etc. But I'm not going to rule in, rule out which measure it is and what component it is and how it's calculated.
I'm not exactly sure what the sensitivity is because it just seems. I mean, I get there's a commission on confidence element, but that would only be if I was asking exactly what the thresholds were or some such, not the general concept.
It's an agreement that covers a relatively short amount of time in investment terms. I want the company to be profitable. I want other industrial firms in the region to be profitable and to see a long-term investment horizon. This agreement acts to secure those short and medium-term issues while we get a grip on a stable Commonwealth, state, private sector effort to secure the industrial future of that region. That's what it's about.
Okay. Just moving on, I did raise this earlier in corporate. Some of this package, this heavy industry package, comes from redirected funds from the Supporting Australian Industry package announced in the budget in 2022-23, the October budget. I particularly wanted to know how much of the $50 million in that measure, in the 22-23 measure, that was going to Nyrstar, the zinc smelter in Hobart, how much of that has been spent?
So, Senator, I can answer that question for you. So, of the $50 million awarded in 2022, that was mutually terminated and all grant funds were repaid to Nyrstar, that grant to Nyrstar. It was for the installation and upgrade of an electrolysis plant at the zinc smelter in Hobart. So this grant that $50 million grant was replaced by the $130 million package with South Australia and Tasmanian governments to maintain operations at Nyrstar facilities in both Hobart and Port Pirie, while early feasibility studies for major facility upgrades and critical minerals processing facilities are progressed.
Right. So that package of that 130, I think you said, is that the 57.5 million is the Commonwealth's contribution?
That's correct, Senator.
Right. Okay.
Yep.
So in comparison to what we were doing for Nyrstar over 3 years ago now, we've gone from offering them 50 million to 57.5. Is that right?
That's the current package, Senator. Tara Oliver, Acting Deputy Secretary, Industry and Commercialisation Group. That is the total of the Commonwealth contribution as part of this package.
But the package or the assistance provided in 22, offered in 22, was only to the Tasmanian smelter, whereas the one in my EFO was for both Hobart and Port Pirie. So in effect, haven't we reduced the Commonwealth's assistance to Nyrstar?
No, Senator, I'll let the officials go to the details, but in relation to both of those facilities, Nyrstar and their owners came to the three governments, Tasmania, South Australia and the Commonwealth, with a new strategy that in particular engaged critical minerals production at both of those facilities to bolster the competitiveness of the facilities and also to attract investment. And so they are to, in shorthand, to do different things that go to, in a different kind of way, we believe and the company believes, a more enduring kind of way to the future of that facility. That's why
let's hope it's second time lucky, because obviously the first time was a failure. What was the extra?
Well, no, I don't.
What was the? Well, it did. It didn't. They terminated the grant. It was a failure.
That kind of sort of offhand negativity is the kind of thing which is the reason
Dr.
why.
Pangloss is not doing very well for us either.
For the 9 years that you were in government,
things are really tough.
Facilities like these closed hand over fist. Like it's the kind of sort of smart-ass negativity that leads to closures. That leads to closures.
We just went through another one that closed today.
We've had an approach from the company. This is that they have been in a steady way delivering upon the commitments that they've made. We're going to continue to work with them. They are to do different things. It is not It is not. It is a smear on the workers, and the management have been engaged in there to say that was a failure.
Okay.
It's a kind of Canberra kind of thing.
It's a smear on your government
It's a kind of Canberra kind of thing that I've come to expect from you, Senator Canavan.
Which is misguided
it's that sort of,
and doesn't hit the mark.
It's that sort of
clearly hasn't hit the mark.
It's
clearly hasn't hit the mark, Minister.
Criticism of blue collar workers.
He gets very defensive. Chair.
We're actually having a go. We're actually having a go.
Very defensive. So the $50 million that was awarded in 22, you mentioned that was for electrolysis. What was that? Was that hydrogen production?
I don't believe it was. And Senator, can I just clarify? The $50 million grant was mutually terminated?
Right. So yeah, it was mutually accepted that it failed. But so what? Mate?
Why can't you just act like an adult? Why can't you just act like an adult and like you care about the national interest? Why don't you pretend for a minute to care about Australian manufacturing and actually back in Aussie workers
you could land
having
a
a go?
manufacturing policy. You've got to change it every few months.
Why are you not capable of doing that? Why can't you act?
All right,
why can't you ask questions in a civil, respectful kind of way that actually backs Australia? Why can't you
one person at a time.
Moving on about it isn't the same as actually doing.
Okay.
Do it. Ask it like you actually care about it.
Minister. All right, Minister. I think you've made your point.
Touched a sore point here because their manufacturing policies keep failing. So take me through what my simple question was before the Minister lost his mind was... Here we go again. Prove my point.
If you want to smear Australian effort, keep it up. Keep it up.
Okay.
It's not done you any good.
Okay.
It's why nobody believes you.
Okay.
When it comes to these industrial questions.
You're cutting me so deep.
Just turn that frown upside down and try and adopt a sunny Australian attitude to these things.
Just like yourself. So sorry, what was the electrolysis proposal?
So my colleague will answer on what the electrolysis plant was.
That was my question, yes.
Mark Beaumont, General Manager. So the electrolysis plant is part of the existing Hobart facility. At the time, Nyrstar had contemplated upgrading that. It's approximately 100 years old.
Right.
Still operational, but hardly up to date.
So not upgrading that anymore?
So as part of that, the zinc prices were depressed and the economics of that case didn't stack up at the time. Hence, as the Minister said before, they're taking a consorted view across both assets and reviewing the whole feasibility study across both of them.
Right, okay. Okay, all right.
You're at 9 minutes.
Yeah, well, I think the Minister's at about 4 and I'm probably 5, maybe.
Well, you should. I don't
maybe.
think it was 4.
I'm being
Another
generous.
1 or 2, but we are still 2 hours, more than 2 hours behind. So
I wanted to.
And
so is the my next question was of the 522 million in this heavy industry measure, is any reserved for Tomago?
Referring to
the MyEFO measure, the heavy industry transformation measure, that was 522.2 million. Is any of that reserved for the Tomago situation?
No.
No. Okay. So that's still to come. There's nothing in the budget so far for Tomago.
So the discussions with Tomago are ongoing. No decisions have been taken.
Right. I thought there was sort of like an announcement before Christmas that a deal had been done, that Tomago was saved.
The announcement before Christmas went to the decision by the owners of Tomago Aluminium. There's 3 owners, and the government to work together in a programmatic kind of way to deliver a low-cost electricity deal that meets Tomago Aluminium's competitive requirements and involves a long-term power purchasing agreement. What that will lead to, Senator Canavan, is not just securing that facility's future, but it will lead to lower cost electricity, more wind farms built in regional centres, more solar built in regional Australia, more storage, more transmission, all stuff that I know that you don't like. It will lead to more electricity, more industrial production, more blue-collar jobs. I look forward to your support for it.
Well, Chair, I do have a number of questions on this. I get the feeling that they may trigger the Minister further, so maybe we should just move on and not go well past my block.
Put them on notice if
and
you
I'll
like.
come back. No, I'll definitely come back on this, but let's save for another block. Thank you, Chair.
Okay, so I think Senator Colbeck.
So it's my job to calm him down, is it? I don't know if I can help with that.
It's like one of those high-intensity interval training. Heart rate goes up, goes down.
Just livening up the room for us all.
If you're actually for industry,
Okay, I'll be quiet. I'll be quiet. So I know I must trigger you.
I'd be fine.
I definitely trigger you, Minister, so I'll just give you some respite.
Let's go to Whyalla. Last year, the government, in partnership with South Australia, announced a joint $2.4 billion package for Whyalla Steel Works. Can we get an understanding or some information with respect to where the sales process is up to, please?
Yes, Senator. So late last year, bidders put in both a non-binding indicative offer. So that's to the administrators or the sale agent of the administrators to purchase the asset, as well as an indicative funding proposal for governments. From that, both the sales agent, 333, and they shortlisted parties based on what they saw as the best bids going forward.
So can you just say that last bit again? They
shortlisted out of the proposals that from the proposals that bidders put forward. Governments, both governments, as you said, it's a joint effort between South Australian and Commonwealth government. And then, so both governments, via what has been established a joint task force between the two governments, shortlisted the bidders based on the proposals that they put forward and the funding bids that they put forward against the objectives that governments are trying to achieve in Whyalla. And we shortlisted as well just before Christmas and invited those bidders to start engaging those shortlisted bidders that government shortlisted to start engaging in funding and financing discussions with the Commonwealth and the state, and those discussions have started.
Okay. So we haven't got to a preferred bidder stage yet?
No, Senator.
Do we have an expected time frame for completion?
I think I might misquote the minister on this, but we're moving as quickly as possible. We want this sold as soon as we can, but sold to a bidder that will support the long-term transformation of Whyalla into a sustainable commercial facility.
So, as part of that process, you've got Mentha appointing Bluescope to provide technical and operational support for that process. In an advisory capacity, was the Commonwealth consulted prior to that appointment?
Senator, that, as you said, it was a decision of Mentha. Yep. Certainly Mentha did inform us that they were planning to do that, and we made the point that it was a decision for the administrator.
So did the Commonwealth approve or note that appointment, would you say?
Well, I would say that we said to Mentha it was their decision.
So effectively,
so I'd say that is noting.
We note the appointment.
We could understand the reasons why they wanted some technical support
to
run a facility such as Whyalla, and they obviously looked at the market and were looking to ensure they could stabilise the existing processes to reduce the amount of administration, the cost of the administration. So we fully supported them to undertake measures to be able to run the process, the facilities in an efficient way.
And an important part of that was worker health and safety. the plant was run down, as I think it's been well recorded, and so the need to get someone in there quickly who had experience of running, a blast furnace and a BOS system was very important, and Bluescope's the only one in Australia, so be able to get that quickly to ensure that the operations were run safely as soon as Kortementha stepped in. That was another part of the calculation by Kortementha.
Is there any reason that we're describing it as a special agreement?
No, Senator.
Which agreement are you referring to, sorry?
The Kortementha Bluescope agreement as a special agreement.
I mean, they're questions you'd have to put to the administrator about what they call their agreements.
Well, according to FOI 300065 from the 28th of August, the talking points provided to the Minister's Office on Whyalla called the arrangement between Kortementha and Bluescope a special agreement.
And we would have taken that advice from Kortementha.
So, okay. So that's advice that's been received from the administrator.
Yeah, we are part of, as part of the governance processes, we engage with the administrator jointly with the South Australian Government. They provide updates on what they're doing, but we're very clear about the governance arrangements here, which is that Kortementha is responsible under the insolvency arrangements in Australia to manage this process, and both governments are jointly supporting them financially. But they have legal obligations that they need to manage, and they enter into agreements with their legal obligations.
So it's it's Kortementha's description, not the department or the government's description.
That is what I presume, but we can check on notice.
I wouldn't read too much into that, Senator. I think the point. So I'm looking at I think the same document you're referring to that was released under FOI, and I think the main points. It's more the dot points underneath, which both myself and the Secretary have talked about, of why that agreement was entered into with Kortementha. It's just an agreement. Special, as I said, we will take that on notice where that came from, but I wouldn't read too much into that.
Okay. Is the department aware as to whether Bluescope was granted any preferential or contingent rights associated with the sale process?
I think it's been well documented that they have what's called a ROLO, a right of last refusal.
Yes.
Yeah.
Preferential bidding position?
Only the right of last refusal, Senator.
And this is all information that's provided as part of the process for bidders to understand what the legal situation is for the asset. So there's obligations on the administrator to run a process that is fair and equitable across the system, and so they are responsible for providing information into the data room for other bidders.
So would they have access to any technical data or plant information that the other bidders may not?
I mean, the process run by the administrator is intended to ensure that all bidders have equal access to information. Bidders can ask for information if they feel like something's missing. They can request it. There have been requests in the data room for various clarifications, either from the administrator, from the governments, and so that process runs just as it does in any other administration process, irrespective of any role that Bluescope may or may not undertake in it.
And any documents and technical documents, as you're talking about, Senator, that Bluescope have access to is put into that data room that the Secretary was talking about, so all bidders have access to those documents.
You're at 9 minutes.
Okay. So you consider that the arrangement is consistent with maintaining an open and competitive sale process, and are all the other bidders comfortable that it's a fair and equitable process if Bluescope is both a special advisor and a bidder with last right of refusal?
So it's difficult to put ourselves in the mind of other proponents. The legal arrangements that the administrator need to acquit under the obligations of the Insolvency Act is to run a fair and equitable process. They have gone through that. As we mentioned, there was an operational need to stabilise for WH&S and economic reasons, financial reasons to stabilise the business. Everyone is aware of the potential or perceived conflicts related to this. There have been quite a bit of discussion between parties on this, and open transparency with other bidders can ask and have been able to ascertain what as much as available. So we are aware of the perceived conflicts, and the administrator is aware and is operating under their obligations. Whether people are comfortable or not, it's difficult to kind of call.
Yep. And Senator, certainly Kortementha's lawyers have put in a detailed note around the scope of the last right of refusal, and certainly without trying to give up too much details, that was important to make sure people understood what was and wasn't in, and I might just leave it at that.
We've put billions of dollars into this process, and potentially, depending on what the bidders come back with, we may be required to put in more. Don't you think it's really important that we just say it's up to Kortementha to run a fair process? We are heavily invested in this as a Commonwealth.
Yeah.
What measures are we taking to ensure that it's a fair and equitable process?
So, first and foremost, this is an operation activity the administrator needs to take under Australian law. They have legal obligations to all credited parties, and they are fully aware of their obligations and were chosen to undertake this role because of their capability in this space. So everyone involved in this is aware of their legal obligations. As funders of the administration, both the Commonwealth and the South Australian Government have governance arrangements and rigorous governance regulations on this, with quite a lot of oversight and discussion of strategy and mitigation, because both governments are committed to seeing a successful outcome here, and everybody understands the importance of the commercial nature of the exercise. And so it's not the case that Kortementha is entirely doing things on their own. That would be an unfair characterisation. But they have legal obligations to undertake the process in a fair and equitable way. And we have obligations to support the fair and efficient spending of government money. And we are all working together with a single aim of having a commercial outcome from a difficult situation.
So at what point did the department become aware of Bluescope's dual role in this process? Before or after the February 2025 bailout announcement?
Well, I suppose there's actually 2 points to that, Senator. Certainly it was after the announcement that we were aware that there was consideration that they would be advising Kortementha, but it was relatively soon. I can't remember, it was days. I can't remember the exact difference in time. But until they actually bid, we weren't sure they were going to bid, Senator. Yeah, sorry, when I say bid, that's poor language, sorry. Until they put their, as they have said publicly, and I need to make sure... So you became aware fairly quickly after February 2025, the announcement of the bailout, that Bluescope would be engaged by Kortementha? Correct, Senator, yep.
But at that point in time, it wasn't apparent that they were likely to bid for
it was certainly not confirmed. And only, the sales process, I think, Minister, you went to Whyalla, I think it was 24 June, I want to say, last year. That was when the data rooms opened, and that was when, people, around that time were signing their NDAs to enter into the data room, and that's when we, had, confirmation that they were going to bid. And certainly I can't remember the exact date, but Bluescope did put out an ASX press release saying that they were building a consortium to go into the process. So that's all, again, I don't have the exact timing of all those things, but... Sorry, Senator?
That would be them complying with their obligations if they were going to do
correct.
that?
Yes. Everyone in this process has obligations under the financial regulations. One, those announcements to the equity market, to their shareholders if they're not listed, to other regulators, etc. So there are stages in this process. It was quite an unusual activity for a state government to pass legislation to enable something to go into administration. There was a swift movement of appointing of an administrator, joint arrangements between the Commonwealth and state to support that process. There's been a great deal of work working through and designing a process that will achieve the outcomes of both the existing creditors and also the two governments. And so this is a detailed, comprehensive project with a great deal of resources from everyone involved to try and get a good outcome. It is complicated. And there are different obligations on different parties, and there is a wraparound for that, certainly on our side, through probity advisors, through legal advice, through appropriate governance mechanisms, through appropriate recording of activity, through all the usual regulatory activities that you'd have in an insolvency, through data room, access to information, open, transparent. Everyone has conflict of interest and non-disclosure documents and all the usual arrangements to try and mitigate for unexpected events. But it's complicated, and there's...
I just want to go one point that you just made there with respect to probity and legal opinion. Have you sought or are you employing specialist opinion to ensure yourselves, the government, that this is in fact a fair and equitable process?
So we have, as you would expect us to have for a project of this size and complexity, have dedicated legal advice that includes probity advice.
Okay. And Senator, can I just go back and clarify something I said earlier? When we saw the Bluescope agreement with Cordamentha and there was the right last of Rollo in it, certainly we knew they obviously were considering or thinking about bidding, because otherwise they wouldn't have that clause in there. But I suppose what I'm saying, until they actually formed their consortium and they put in a proposal, it wasn't guaranteed that they would enter the process.
And just to be clear, knowing that was part of the arrangements between Cordamentha and Bluescope for the safe operations of the facility and reducing the call on taxpayers' money through the administration, the design of the next process and all the elements were taken in that context.
So does the advice that you've received so far confirm that the process is fair and equitable?
Just to be clear, it is not our responsibility to form that judgment. That is a legal obligation on the administrator and ASIC as the corporate regulator.
If you are purchasing advice with respect to the probity and the legality of the process, how are you? Cordamentha's got its own obligations. I get all that, but how are you? Taxpayers are putting in billions of dollars a year. How are you ensuring that you are comfortable, if the government is comfortable, that it's a fair and equitable process? That's the critical question here, given the amount of taxpayers' money that's going into the process.
So I'm just being cautious here, because it's not the Commonwealth government to step into the regulator's shoes. ASIC has obligations in terms of insolvency.
No, but you said to me that you were getting probity and legal advice as part of the work that you were doing to ensure this is the case. So my question is, does that advice confirm that the process is fair and equitable?
So I'm going to be very careful and step this out because of the complexity of this situation. It is not appropriate for the Commonwealth or the department to step into a regulatory role here and assess something that a regulator is set up and empowered to do. What we have been doing is using legal and probity advice to assure ourselves of the policy advice, the legal processes, and providing advice to the government. So I just wanted to pass it out because it is not appropriate for anyone other than ASIC to make a judgment in a regulatory sense. But we certainly have been looking at the commercial considerations, the probity considerations. We need a commercial tension in this process. We need a good outcome for the Australian community. And so we're getting commercial advice as well, not just legal advice. So commercial strategic advice, legal advice, all sorts of analysis and advice into this process, partly in response to the market conditions to help and support the administrator to be able to get a good outcome. So I'm just sort of separating a little bit the precise phrase that you used, which is a regulatory action under the Act, which is not an obligation on the department.
So, Senator, maybe if I can add...
No.
Because there's
look, I understand what you're saying, but if I was sitting in the Minister's chair, I would want to understand that I'm putting this money in, that we're not going to be sitting around this table in 12 or 18 months' time with a huge dust-up over something that's gone pear-shaped. So I just want to know, I would want to know, as the Minister, that this was all tickety-boo. So I understand you making the separation, but if I'm sitting in that chair, I'm asking the same question because I don't want to come back into estimates with a whole heap of phone books down the back of my trousers to try and protect myself from what's coming across the table. So, in respect of that, you talk about the regulatory bodies. Are you aware of any references or have to any corruption oversight bodies, state-based ACCC or ASIC, in relation to this process?
And to the sale process, no, Senator. And can I just add what the Secretary was saying is there's two separate processes here, and that's really, really important to understand. The first one is the sales process that the Secretary outlined that 333 and Court of Mentor have regulatory obligations to do.
Yeah, I get that.
Then there is the funding process that the governments are running, and that's where we are getting probative advice to make sure what we are doing and legal advice from AGS to make sure we're complying with the relevant Commonwealth legislation in the process that we are running. Now, yes, they join up and there is there's interest and certainly we talk to Court of Mentor and 333 about the whole process, but it's very, very important to understand there's two parallel, independent but linked processes running in this sales process, and that's the probity advice and the legal advice the Secretary was talking about, and that makes sure the way we are running our side of it meets those standards.
I understand what you're saying. So you're not aware of any references to any regulatory authority?
We're not, but some of those bodies that you referenced don't make public references to them.
No, I understand that.
20 minutes now.
Finish, maybe you want to finish.
Will that be your last and then move to you and then we're done with this section?
Are we satisfied that we are at the limit of what we might need to tip into the process?
The process is ongoing, and so it's ongoing.
So it will depend on the bids. It may be that the bids request more resource and then the government will have to make a decision at that point in time.
They could ask for less as well.
Good luck with that. Okay, thanks, Chair.
Thank you.
Thank you, Senator Canavan.
Thank you, Chair. Just so going back to the Tomago situation, so we've got an agreement to have an agreement. Is there a commitment from the owners of Tomago to continue this facility, regardless of the terms of the power purchasing agreement that is finalised?
Well, it's an agreement to work together to deliver a particular outcome.
But what if the outcome is not to the owner's liking? Would they still walk away?
The agreement needs to deliver the outcome that that is in the interests of the Commonwealth and New South Wales and the owner and the workers in that facility.
Has something been signed? Is there a contract that's been signed? Or
I'll go to the officials in terms of just to describe the character of the agreement thus far.
Thank you, and thank you, Senator. So what I can confirm is that there are discussions, they are occurring, there are discussions underway.
Can I just get it? I'm going to try and get you done by dinner so you can go. You've probably got interest in that. So the quicker I get an answer, the quicker we go. So is there a signed contract with the owners of Tomago?
So there are discussions underway at the moment.
Is there a signed contract?
Discussions continue.
No.
Yep.
Is there a signed contract?
The discussions are continuing. The discussions are continuing. And
so there's no signed contract? I'm just trying to understand, because it was great fanfare. The government announced that, look, these jobs are saved, and there's 1,000 odd jobs there. It's very serious for these people.
There is a commitment
and there's actually nothing on paper at the moment.
Well, there are commitments from all parties to continue discussions, and those discussions are intensive and ongoing.
What's the nature of those commitments? It's just what somebody has said.
As always in commercial discussions, there are different stages where people decide to come together or go apart. There were a series of discussions at the end of last year between parties about what was happening in the Tomago aluminium smelter. There was agreement to continue discussions and to step up and go into a greater level of detail and specificity. And that is what we are doing. And we have a time frame working with all parties, and it's active consideration at the moment. And as you can understand, the commercial nature of the
handshake by the sound of it. So
the commercial nature of the discussions is such that we don't want to go into details. It's an important facility for Australia, and we are working very closely with colleagues both across the Commonwealth and with New South Wales and with the various parties that are party to Tomago. People are expending energy and money and time on these discussions, and so there is a commitment from all parties to reach agreement.
So the mooted long-term power purchasing agreement, is there a decision on how long that will have to go for?
So all of those matters are under consideration.
Right.
We are right in the middle of those discussions, and it's there is. It's a lot of progress from where we were as part of a successful agreement. Of course, the facility stays open, and it has not made a decision to do anything else. They'll contribute at least $1 billion in capital and major maintenance investment over the top of what they otherwise would have done over the next decade. That is very significant progress. We made sure that we registered that publicly and with workers, because that was the right thing to do ahead of Christmas. It's a significant advance on what the putative leader of the Liberal Party did in 2012, which was advise them to close. That was his plan for Tomago Aluminium. I assume it's why he build a $600 billion nuclear power plant, which would have put every electricity-based manufacturer in Australia out of business. But anyway, we'll see what happens over the next couple of days.
This plan is to underwrite the installation of more solar and wind electricity. Is that right?
So it is, I'm quoting from the press release here, that over coming months, Tomago Aluminium will work with the federal and New South Wales governments on a long-term renewable energy solution to support the smelter's viability when its current energy contracts expire in 2028.
I'm just quoting from the Minister from the press conference, and he said, he's quoted saying, this deal will underwrite the development of more electricity, more generation, more storage, more transmission. So that's right. So we'll underwrite.
Agreements will do.
Yeah. Okay. We'll underwrite. I'm just trying to understand: has the Commonwealth Government ever, or at the moment, I should say, to make it a question you can answer, is the Commonwealth Government underwriting an electricity contract for any other major energy user in Australia?
So you could argue the CIS program.
I'm talking about for a customer though, like for an individual customer here.
So, I mean, I'd have to take that on notice, because certainly there's been previous relationship deals between the Commonwealth with states for various entities that have related to energy costs. I'm thinking to the previous arrangements with different aluminium smelters and the like. So certainly the government has used mechanisms like this in other parts of the system over time.
And there is a bit of a tangle, as Senator Colbeck was saying, you look at Bell Bay Aluminium, it's there because there was a state-owned electricity utility providing for low-cost electricity for the facility. Similarly, the history in New South Wales is publicly owned electricity generators providing preferential electricity power purchasing agreements. There's a new electricity system being built.
So,
and it's a different, it's not a publicly owned market. So this is a different kind of facilitation that is being contemplated here. But the details are being worked through, and I hope that when we come back to a future estimates, we'll be able to flesh them out for you completely.
So it always does perplex me that we're constantly told that solar and wind electricity are the cheapest form of power and very cheap. Why would the owners of Tomago need to have the installation of that type of so-called cheap electricity underwritten to continue operations?
Because they can't afford unreliable, clapped-out coal-fired power stations that provide electricity that is too expensive and too unreliable for their purposes. The owners of this facility
worked for 40 years.
The owners of this, it worked for 40 years, and the world has changed. I know it's difficult to wrestle with for some, but the world keeps changing. The electricity market is changing. Technology is modernising. The owners of these facilities aren't sort of hippies. They are making a hard commercial judgment.
They're going to make a lot of money off the taxpayer.
They are making a hard commercial judgment
because you've boxed
what is the lowest cost source of electricity for them
to certain types of power, and now they're going to make bank off you, or off the taxpayer.
Senator Canavan, you were part of a government.
You were doing so well.
You were part of a government
Here we go.
that sat on its arse for 10 years and did nothing about electricity.
Minister, is I can admit when I get it wrong.
24 out of 28 coal-fired power stations, which you claim to love,
in the past
announced their closure.
That the world's walking away from.
Announced their closure over the life of that miserable period of the government that you were a part of.
Getting on to net
you were a part of.
Chair,
somebody said,
I'm trying to.
There is
I'm trying to move on to a different topic.
You made a political assertion. I'm going to respond. If you can ask questions that
I think he started
serious,
it actually, Chair.
that are serious, well, we'll see how we go.
I think the potential underwriting of billions, possibly billions of dollars of electricity generation is a serious question. Now, moving on to a related topic, onto net zero, I noticed the announcement of the Net Zero Sub-fund. Now, is that in this section or that's...
This section.
It is this section. It's sort of coming out of the National Reconstruction Fund, is that right? But you'll be administered.
So which... Well, there's...
So this is the announcement only, I think last week it was, I think the announcement of the fund had been some time ago, but details were announced last week, I believe, of this Net Zero Sub-fund that is set to offer a return rate 1 percentage point below the government bond rate. Is that right?
That's right, yes.
Okay, so that's this section. So does the rest of the Reconstruction Fund portfolio still remain at the original target rate of 2 to 3% above the bond rate?
So the renewable energy, so the National Reconstruction Fund has a portfolio of activity, some of it directed to particular priority areas. There is a sub-fund under it, which is the renewable, I'll get the emission reduction fund. Which is the one that was announced last week. There's also the Economic Resilience Program, which was announced in the election, which is being delivered by the National Reconstruction Fund.
So just going back to my question, does the rest of the fund, the rest of the Reconstruction Fund, does it apply a 2 to 3 percentage point margin?
Because the Economic Resilience Program is also a sub-fund.
It's also got
outside of those two programs,
yeah.
So yes.
What rate does it have,
Jocelyn Cooper, Head of Industrial Capability and Supply Chains Division. The Economic Resilience Program will provide zero interest loans.
Zero interest, right.
Zero
okay.
interest, that's right.
And this one percentage point below. Was Treasury and Finance consulted on the decision to provide the 1 percentage point discount to the bond rate on the Net Zero Fund?
It was a cabinet decision.
Right. Did you make an assessment of the market? Why does we need a discount provided for these investors?
So all of that was part of the assessment that went to the Expenditure Review Committee and the Cabinet. And this is about supporting manufacturing companies to transform and invest in capital and processes to reduce emissions.
Are all of the disposals, the drawdowns from this fund, are they all off balance sheet? Are they all below the line, below the underlying cash balance line?
So the National Reconstruction Fund is a separate entity, and it's
a special investment vehicle.
Yes.
Right. And so even with the decision last week to offer a discount interest rate, it's still all the case that all of the drawdowns in that special investment vehicle are below the line.
They are under the same arrangements as each other. Yeah.
How does that make any sense? Because we are borrowing money at the moment, we're going to debt, and the interest rate on that debt is, well, you've got I think the 6-month rate is what you're using, is that right?
To the extent that there's any...
You see where I'm going here,
yes,
but I mean,
yes, and
how can that at all be off balance sheet?
So to the extent that there's any impact on the underlying cash balance, that is captured in the underlying cash balance.
So there is an
element of this if it's below the cash.
Okay, sorry,
right?
I thought you said there hadn't been.
So all the funds are separately accounted for. Like they've got their own drawdown facilities, their own mechanisms for financing these deals. To the extent that there is any impact on the underlying cash balance, that is captured in the underlying cash balance.
Okay, so how much is that reduction in the UCB from this decision last week?
I think I take that on notice.
Yes.
Because
surely you have that.
So happy.
I mean, they used to do that even with the NAIF, even when we were charging above the. And
so we have. There was sort of scenarios and analysis.
You would know that.
So.
Well, I'll keep going. If you could try and find that, because I'm sure you would have worked that out with Treasury, and hopefully you have. So this is effectively turning the fund now into a bit of a grant-giving body, isn't it? Because you're charging or seeking a return below the rate of return we borrow at.
So the funds, there's no changes to the legislation, and so the tools that the fund has available to it have not changed. The borrowing requirements, to the extent that they issue debt under these facilities, it's on average over time as well. And so it was always the case that there was likely to be some that would be above and some below, except for the Economic Resilience Program, which is explicitly at zero interest rates. So they are not grants, they are going to be debt or equity or guaranteed instruments.
Right, but even if we pay it back, even if they're paid back, so I think
grants typically aren't paid back, so there's a difference between a zero interest loan
hang on,
and
this
a
is
grant.
my point. So say it's a 5-year, it's not really a loan, is it? But a 5-year investment, 5-year payback of the investment, and I think the 6-month rate last time I looked was about 4.2%. So you give it to them at a target rate of 3.2. We're borrowing the money at 4.2.
On average over time.
We'll only get back.
On average over time.
Yeah, we'll only get back 1 percentage point less.
And it's
on average over time.
It's a grant.
Firstly,
no, grant's not paid back.
It's absolutely not. Some of these interventions will be equity. Some of it will be loans, and some of it will be guarantees. There is not enough capital available or active in Australia around manufacturing and manufacturing investment.
We're going to be awash with capital. We're going to have lower interest rates. What happened?
This is not a new development.
What happened?
Senator Canavan, that the risk appetite and the capacity of the Australian investment community in terms of manufacturing is not very strong.
Well,
what this fund will do, and what this allocation will do, is set the risk appetite in terms of this portion of the fund, that is not the same as the returns that the fund achieves over time.
Well,
it sets where the board and the investment team go to.
5 minutes.
It is not the same as the return that they will achieve over time.
Well, just note that when we signed up to Net Zero, we were promised lower interest rates. That was the promise. And what you've just said is that we're actually getting higher interest rates, which is happening, and less capital flowing into the country. It's not working.
I'm not sure what,
so just going on to the battery
sure
precinct, I've only got a few brief questions here. It shouldn't take long. I believe this was announced in 2022 during the election. An Australian-made battery precinct. What was the purpose of the precinct?
Senator Jocelyn Cooper, Head of Division. The battery precinct was a joint commitment of the Commonwealth and Queensland Government at the time to bolster Australia's battery manufacturing capability, support jobs and also build national scale for battery industry.
Okay. How much has been spent on the precinct today?
So, Senator, the Commonwealth Government remains very committed to developing battery industry. In 2024, Government released its battery strategy, and you'll have seen new initiatives like the Battery Breakthrough Initiative, things like the Future Made Innovation Fund.
Just because we're trying to go to dinner, I'm sorry, how much has been spent on it?
So, nothing has been invested in the precinct.
Was it a $100 million commitment?
With the previous government, it was a matched commitment.
And just to be clear, though, we did spend some funds to do due diligence and advisory support as part of the discussions with the Commonwealth.
How much that was?
5.6 million in 24-25.
What's the current status of it? Is it going ahead?
So we understand that the current Queensland Government, as I mentioned, it was a commitment made with the previous Queensland Government. The current Queensland Government has new and different industrial priorities around defence, biomed and biofuel industries. And given this shift in approach, we're no longer collaborating actively with the Queensland Government on the precinct, but with the Commonwealth actively supporting the industry through a range of other initiatives that I mentioned.
Has the project ceased then from the Commonwealth level, or is it still, is the $100 million is still in your budget, forward budget?
So the government's still considering its next steps with the clarification from the Queensland about what their priorities are.
The 5.6.
Can I clarify?
Sure,
sorry, there as well. There's no funding that the $100 million was a commitment. There's no kind of money set aside for
it's not in the budget at all?
No.
Okay. The 5.6 million, was that just spent on internal costs or were external consultants engaged?
I believe external consultants were used.
That's right.
Okay, well maybe we could get on notice exactly which external consultants and how much that was, or for each. Just quickly, I just wanted to quickly touch on the AI stuff. I wanted to do more, but I mentioned earlier so just to be clear, is this focused, this AI, I've forgotten the name you called it.
Safety Institute.
Sorry?
The AI Safety Institute.
Safety Institute. This is to provide services to other government agencies, is it? Not to protect safety of the broader Australian public from AI?
It's about the area looking after this are not here, but the requirements...
Oh, so am I in the wrong program? Or?
Yes, it's in the science and technology.
Okay, we can
want to do it then.
I think.
At a high level, it's about evaluating AI capabilities and sharing information.
No, we'll wait till then. Okay, sorry, I thought it was this one. Thank you.
Thank you. So that concludes the session for Outcome 1, Program 1.1. We will have a suspend for a dinner break now and be back at 7 p.m. Thank you, everyone.